Good morning. Right. How's everyone doing today? Is this where we trade horrible, endlessly repeated jokes for actual valuable financial education? You've found the right place. You look refreshed and vibrant. Damn. The video doing badly. I know. You think it might be overvalued? VIX is at 1985. Tesla under investigation for detachable steering wheels. Where's the gamma flip? Um, let's see. I'll take a look. I think it might be below gamma neutral or close to below. It's really close. Yeah, gamma neutral's at 186.64. Huh. All right. Well, so early morning 0 DT buying for the 3/8 expiration looks extremely heavily put favored. However, they are buying some calls in that 40-10 to 40-30 range. So be wary of the upside potential, especially if we move above 39.95. It's definitely there. It should open roughly at the same place. Another start to NOPEX for GME. We'll see. It's just the ETF FTD period right now. Gorg, good morning, Gorg. Loving VIX testing 20. It's pretty exciting. Ding ding. My favorite part of the daily was the side eye. Again, I caution. Well, I just don't want to hear people bitch about it later. No, like Gork, I sold CCs into ETF FTDs and I got assigned. OPEX is on Patty's Day. Run guaranteed. Luck of the Irish never fails. We'll see. The OPEX settlement is not on St. Patrick's Day, however. It falls afterwards. What dates did you roll your further out of the money puts to? Oh, I didn't. Are you talking about SPX? I kept a lot of them. I assume you're talking about SPX. I mean I closed a lot of them and I kept some others. They were up. You know, the market dropped like 600 points. Morning taking the wife out for breakfast because you won't. Well, I had to go to work, Carl. All right. We've talked about this before. Stop being stop being a dick about it. This is very bright. Can I like tone this down a little? Maybe. What's work? Good morning to you too, Carl. Should I buy some calls here? This is getting pumpy. The break's 39.95. I'm gonna buy a call or two. Oh god, it's gonna fail. Hmm. 1 second. Interesting. X 1969. Jimmy getting fucking hammered. Nice. Jesus Christ. That's more volume than I've seen in one candle for a few days. Tesla dead? I mean, probably, yeah. It's a big piece of shit. It broke gamma neutral. Maybe I should short it more. I have like 30 puts on it right now. Should get some shorter dated ones. Got a lot of fucking downside. Nvidia crimed. VIX crimed. Everything's just crimed. That's going to be the answer. Thank you so much for warning about potential rise today. You're like a weatherman for highly complex markets. Thanks. When will crime be crimed? I don't know. SPX crime candles. Okay, what's going on here? I'm not sure that was a compliment. Might not have been. Looks like they failed to pump it. They went for the pumpies, but it was unsuccessful. Maybe they'll try again now. Just buy some like SQQQ. What's this thing fucking cost now? It's ridiculous. Um, oh, there's no open interest there. Okay. Maybe if NASDAQ could stop fucking falling off a cliff for a second. Is that a volume on GMA? I was starting to think that was a myth. It was. It's gone now. They tried by pumping NVIDIA 75 BPS in 30 seconds at open. Well, it wasn't super successful, was it? Jesus fucking Christ, man. Touchy with her. They don't want to sell me any fucking calls on SQQQ. Bullshit. All right, there we go. Come on, stock Batman. The crime. Gherkin is comparable to that one Mexican weather lady that always wears the tight dresses. Yanet Gurksia. The real crime is that Girk won't show us his calves. I mean, some people get to see them. Hey Girk, I read the daily DD, and I know ETF FTD starts today on GB and Upstart. But which are the peak days on each stock in this period? Usually the peak day for ETF FTDs is the third day. So the T3 day, that'd be this Friday. I believe this time the peak day is actually tomorrow. Let me double check because I don't want to be wrong. Upstart ETF highest fails are for, let's see, the 10th, and then for GME the highest fails are also the 10th. Yeah, so both of them on the third day, this Friday. Now, in a trending market, that can mean something, but I will say that both of their peak days are at like 500,000 fails, which isn't very significant. I can't believe we get Apostle Powell to preach the sermon of Lady VWAP 2 days in a row. May the Lady bless all positions on this day. Thank you so much, WinRAR Buyer. I appreciate that. Even though I failed to pump it now, we have 10 o'clock jolts and JPOW. Still holding your call side of the straddle for that? Yep. I feel like even if they fail to pump, their goal will be to at least hold this range into the data. Hoping for a better print, I guess. Jolt's data is at 10, the same time that Powell's testimony begins to the House Financial Services Committee. You have to know where to look for the calf pick. It's like a Renfest turkey leg. Thanks. What's the VIX future symbol on WeBull? VIX. It's underlying for VIX itself, right? It's the index options. Index options for VIX. Thanks, Girk. I appreciate it. No problem, man. Check crowd, you stock audio. Yeah, I know. It just keeps going up. It hasn't stopped. Interestingly, I'm out of it, but I already took profits like a little while ago. But yeah, it just hasn't stopped. GME shorted into the 17s again. Opening July, GME 20 CSPS for like 530, 550. I mean, we're pretty fucking close. I could see GME getting sub 17 by next week. Fubo's at what now? 164. So Fubo's getting kind of close. Upstart's starting to drop below the 1750 range. If we start to see long puts come in, especially next week, yeah, we can definitely see 16, 15 on that. GME's probably going to get some liquidity over the next 3 days, which we'll see used, generally speaking, next week during SLD to short. Hey, Greg, you think we'll get ups or downs today? I think more downs are pretty likely. There might be some small pumps. Generally, the JOLTS data is horribly analyzed. And the estimates are usually way the fuck off. At least they have been for the last year. That's a volatile data point. I'd be cautious of that. But other than that, I mean, there's really not a lot of call interest except between like 410, 4010 and 4030. Outside of that, it's just shitloads of puts. Still no GME earnings date. No, which is interesting. I would have expected the announcement by now. I guess today would be the last day that we might see it. My desktop WeBull chart is super laggy today. I can't lose money efficiently this way. You ever encounter this? I don't know, maybe try restarting your computer or something, but something might be eating up your RAM. I thought GME earnings were next week. So that's just the broker estimate. GME hasn't officially announced an earnings date yet. Would you say that buying out of the money calls from March 31st expiry is still worth it, or better to move out to April 1421? Um, I mean, I'm carrying some March 31st calls. They're up though. I bought them in higher ranges. Um, yeah, there's still some opportunity for March 31s in this range above like 39.65. I'd be careful how far out of the money I went. But yeah, I mean, if the price goes down, the price of those contracts will invariably go up. So it's, I guess that's something that can be considered. Not announcing things is what GME does best. These cougars are eating up my Rams. That's not how that works, Carl. Higher than expected employment, bearish, right? Yeah, more job openings would be bearish. Maybe GME is going to do one of those delayed announcements to give us a really extra good discount. That'd be awesome. Yeah, I would very much probably buy some GME there, or at least sell in the money CSPs. I don't think that's going to happen though. That's usually something you don't see unless a company is failing horribly. If you're about to double down on Nvidia puts, would you be patient here? Yes. Yes, I'd probably wait until uh, either Nvidia started to break down below gamma neutral and I had a confirmed breakdown in the price trend, or alternatively, um, I would wait for a test in like the 250 range, 245, 250. Like if the market just starts pumping wildly out of nowhere, I would wait till 250, 245, 250. FSLR failing fast. Oh, cool. My puts will enjoy that. How fast? Having a rough morning. That's only down 1%, though. Big notional moves. I picked up some 205s, 210s. Let's talk about SQQQ shares versus options on SQQQ. I know you say they're bad to hold long term, but what's considered long term? For the volatility decay on the fund itself, generally you don't want to hold shares. I mean, you want stops on the position, really, but uh, I mean, the volatility decay is like over a year, so it's not that bad holding them for 90 to 180 days. Obviously, options decay at a greater rate because you have both theta and volatility decay, and you're leveraged. So options are actually far riskier on SQQQ than shares. But yeah, I mean, define risk on your position there. Oxy question: my Junes are printing. Strike 70. Do you think this run has legs, or is it a short-term thing? It could have some legs. We'll see. I mean, oil's been doing a little bit better for the last few days. It's down this morning. I guess we'll see if the recovery kind of continues here. It's rounding out a bit. Damn, HSI got fucking hammered overnight. Hmm. One second. I'm trying to look at something on futures here. I think oil will have a resurgence at some point this year. I don't know. You've got till June. That's not a bad time frame to target. Gamma neutral on Nvidia is around like 255, I believe. It may have moved since yesterday, but last I looked, it was about 225. See if it moved up a little. 224.75 right now. So are we going to listen to Daddy Powell talk down to senators again? Congress people this time. How do you typically like to manage your strangle when the price doesn't really move overnight? Do you wait for confirmation of a move in one direction and cut the other? Sometimes I'll just cut both on the morning chop if it's like a really slow, low volume day. Um, we're still waiting on the bigger economic data, right? It doesn't come out in the pre-market today. So generally, overnight strangles benefit most from pre-market data drops. So we get like CPI at like 8:30 or 8 a.m. Since today's is around 10, I'm gonna hold it through that period, right? Probably better to wait till after OPEX to transfer shares, yeah. When GME's a little more liquid, it might transfer faster too. GME March 15 earnings SLD. When did they announce it? Just now? Or are you just looking? That's just the broker estimate. GME hasn't, as far as I know, GME has not announced earnings yet. Are there any deadlines coming up for Revlon Win News? I believe they're having a thing soon. I don't know what day it is. Win MOASS. Never, Mr. Little Pickle. Are you streaming the speech? Yeah, I'll set it up. See if he sticks to his guns today or backs down. What the fuck? All right, I got it. Let's see how zero DTs are looking. Little interest coming in up to 4,000. 39.95 still positive, but 4,405 negative. The majority of put interest right now coming in at 39.50. Big time. So I don't think expectations are high. There's some call interest coming in at 40.20, although significantly less, and 40.30. Up around the gamma flip point. That's me. Oh, okay. It probably doesn't hurt to hedge a potential pump here. Yes, I could. Fucking Ivy is so high. So buy 2 of these. Just in case. Zero DTs do not affect the VIX, correct? Basically not. VIX is the 30-day calc, yes. Don't forget that zero DTs can be hedged with longer dated positions. So there can be an effect from them, but it's minimal. Yep. Got 5 minutes to go. The video have some news. Give me 1 second. Sorry. I want to make sure my dishwasher was turned on before I sat here listening to Powell for hours. Is Tesla dead? Everything's pumping a little right now. Except Tesla? Yeah, Tesla's not doing as well. Nvidia almost back up 2% on a tiny fucking turnaround in SPX. Doesn't look like the rest of Nasdaq's moving very hard. Fuck, Nvidia's ridiculous. Yeah, it is. How high does this pump go? Any way to tell? I mean, the upper limit on Nvidia is still around like 238, 240, like what the market maker's pricing in, but we keep testing it, which is annoying as fuck. I don't really care anymore. All of my shit's like dated for April. I don't care what it does for the next few days. I might get some cheaper puts out of the deal. Probably not a lot cheaper, but all right, let me see. Powell's testimony should be starting pretty soon here. Five. Okay. Doo -doo. So it's like a fucking high school telecast. Hmm. Rugged. Oh, VIX to 20. Oh my god, Dork, you'll finally be able to ejaculate. Congratulations, man. VIX, yes. Finally at 20. What's the scoop on Jolt's data? I don't know yet. I'm looking it up right now. I'd imagine it's not good, right? That seems pretty fucking obvious. Jobs are down 20 million, but still 200 or 20 million over estimates. No, 20,000. Is that 10.6 million? Why is that displayed like that? God, I hate it when they do that shit. Like, no, it's 10.8 thousands. 200K over. So, yep, Jolt's data not great. Market bouncing really hard for no reason. Ah, sweet, sweet volatility. I love it. Can we have VIX on the screen instead of GME for the speech? I'll just put it here. Oh, someone's scared of VIX at 20. A little bit. Listen. 19. 30? Is that enough time? It's out of time. Dude. My call hedge I bought at 8:59 is dead. Nice. Your stream cards are way cooler than the Feds. I'm just saying. Yeah, I agree. Jesus fucking Christ.
Materials to the chair for inclusion in the record, and I'll note at the outset that this hearing has a hard stop of
That's
1
this
p.m.
dipshit.
This is traditional for the Fed chair, and which we intend to strictly observe. I now recognize myself for 4 minutes to give an opening statement. Thank you, Chairman Powell, for your testimony today. This week, you stated that the Fed will, quote, stay the course until the job is done, and that is to restore price stability. This is positive, but you know as well as I do, you're facing a very strong headwind from the political left. Democrats are pressuring the Fed to stray from its narrow mandate. It's a page out of their same old progressive playbook. When they don't have the votes to achieve something here in Congress, they turn to regulators. And now, Chair Powell, they're looking at you and the Federal Reserve. President Biden's kowtowing to the far left is what got us into this inflationary mess. I urge you to reject the ideologues who put their social agenda ahead of economic prosperity. High prices continue to eat away at workers' wages and retirees' incomes.
Congress is even worse
than the Senate. Since President Biden took office, we've experienced Republican?
No, staunch Democrat.
Since the late 70s and early 80s. Inflation rapidly accelerated after Democrats passed their so-called American Rescue Plan, which poured nearly $2 trillion of inflationary fuel into the economy. By June of last year, the Consumer Price Index showed inflation skyrocketed from below 2%.
I have a hard time with political
9%.
theater. Yeah, I'm not a big fan of it
personal consumption expenditures, the Fed's preferred measure of consumer prices, ballooned to 7%. Instead of being rescued by Democrats, Americans were punished with pain at the grocery store and sticker shock at the pump. While inflation is now below its mid-2022 peak, it is persisting at rates well above the Fed's target.
Good entry on
broad-based and continues to hammer Americans' pocketbooks. In fact, a recent Gallup poll shows half of the respondents say
it's very cheap.
They are worse off financially than a year ago. It's clear that there's still a long way to go in the effort to bring down costs. I look forward to hearing you reaffirm your commitment to that work today. Republicans also want to hear from you regarding some concerning developments at the Federal Reserve on the regulatory front. Recently, the Federal Reserve's Vice Chair for Supervision announced a quote-unquote holistic review of bank capital in the Fed's regulatory regime. However, it seems that only a small group within the Fed knows what this means, what it entails, how much review is being vetted by the full board, and the type of quantitative analysis the Fed is performing. The Fed shouldn't operate in the shadows, especially when the regulation in question can have broad and significant economic effects. It's also unclear the motivation for the Fed's holistic review, particularly when so many board members have stated that the banking system is very well capitalized and any review of capital standards should be targeted. It also appears the Federal Reserve Board is laying the groundwork for climate policy to be implemented through the Fed regulation with an opening salvo to quote-unquote
I think Chair Powell is performing Satellite by Dave Matthews Band on his bass ukulele today.
Addressing an
That'd be
issue
fucking
like climate
amazing.
change is important, but a policy that should originate
I want to see
here
Powell
in Congress by the elected representatives of the people, not the central bank. As you said, the Fed needs to stick to its knitting. I agree. There is concern from many that the Fed is picking up new needles and knitting partisan sweaters. At such a precarious time for our economy here at home and the global economy, that would be a mistake. Thank you for being here today. I look forward to your testimony and the questions by our members. The chair now recognizes the ranking member of the committee, Ms. Waters, for 4 minutes for an opening statement.
Thank you very much, Mr. Chairman. Good morning, Chair Powell. Since your last visit, our country, under the leadership of President Biden, has made major progress to improve economic conditions, including adding a record 12 million jobs, reducing unemployment to its lowest rate in 54 years, while also reducing the deficit by $1.7 trillion. Unfortunately, many families are still struggling to afford basic necessities because of inflation. What's more, interest rate hikes are making borrowing, especially for mortgages, outrageously expensive. Since I raised this concern for you in a November letter,
it's okay. They can't afford the houses anyway.
To have
Relax.
An outsized impact on housing costs, which are, as you know, a primary driver of core inflation. But, Mr. Chair, I think that you will agree that Congress also has a role. That's why I'm somewhat disappointed that after 2 months, Republicans have taken no serious action to address inflation. By this time last Congress, House Democrats had passed the American Rescue Plan to provide relief from the ongoing pandemic, which included our committee's efforts to provide $70 billion for homeowners, renters, businesses, and first responders. If Republicans are looking for ideas, committee Democrats have put forth additional bills, like the Build Back Better Act, to bring down costs for Americans, especially housing costs. Even more concerning, we're just months away from an economic catastrophe beyond what we have ever seen, including spiking interest rates, massive job losses, and global instability. I'm talking about the threats by Republican leadership to force a default on our nation's debt if we don't agree to their demands to cut Social Security, Medicare, or other critical programs. You've urged Congress to take immediate action to raise the debt ceiling. But rather than focusing on this very real issue, the first bill that committee
what they should do in these meetings is instead of speaking,
suggested that
they get those little glasses of water and their jugs, and they just spit water on each other
to America.
Until one person's more wet than the other. We could have like a judge or something to determine who's the wettest.
And banking laws.
And then they win.
Countering threats from China. But
and then all the news is allowed to say is
the biggest economic threat.
Which party won?
Consumers,
and then they have to move on to other stories.
Economy defaulting on our debt. Last
That's
month,
not that weird
I
if you think about
it.
it.
Chair McHenry, urging him to take this matter seriously.
No white T-shirts.
And hold a hearing.
It's not.
I'm still waiting.
It's not. All the competition's gone if people aren't wearing Versace.
The real consequences that even the mere threat of a default would have for everyone in this country. And finally, I'm so pleased that we're finally making progress on diversity and inclusion for key positions at the Fed, including last year's historic confirmation of Dr.
That would be more
Lisa
productive.
Cook to serve as the very first Black woman on the Federal Reserve Board. with the board's vice chair and Kansas City Fed president positions vacant. I think President Biden and Kansas City Fed board should build on this progress by seriously considering diverse candidates for these positions. With that, I yield back the balance of my time.
The ranking member yields back the balance of my time, asking unanimous consent to submit for the record my letter to Secretary of the Treasury Janet Yellen from February 28th, asking for an update on the ex-date for the debt ceiling. I also ask unanimous consent to submit for the record the latest CBO long-term budget outlook on the unsustainability of our debt, most recently released. And without objection, so ordered. I'll now recognize the chair of the Financial Institutions Subcommittee Chair.
What are you going to do, a joint ASMR stream with
Thank you,
Ms.
Mr.
Waters?
Chairman, and Chairman
I
Powell,
don't know.
thank you for being here today to discuss the Federal Reserve's monetary policy actions in a
Reach
time
out
of
to her
economic
publicist.
uncertainty, mixed economic data, historic inflation that continues to plague families and businesses around the country. It is paramount that the Federal Reserve remain vigilant on reducing inflation, anchoring inflation expectations, and restoring price stability at the Fed's 2% target. I also look forward to discussing the Fed's regulatory and supervisory activities. As the Fed reviews the bank capital framework,
You
it
know,
needs
all
to
of these
consider the
Congress
impact
people
to the
must
real
be
economy
really,
and our
really
global
fucking
competitiveness
afraid
when
that
raising
Powell,
capital requirements and
who has
sidelining capital
no
would work
accountability
at cross
to them,
purposes with monetary tightening,
will just
constraining
go
the
and
supply
blow up their
side
ports
when we
for
need more,
fun,
not less,
right?
investment to fix supply chains and
Like, he's
reduce
not a guy
inflation.
you want to piss
Tailored
off.
regulations are required of the Fed by law, and a one-size-fits-all approach would be the wrong
Especially
path
if you
to
have a
take.
congressional
Finally, I urge the
401k.
Fed, in your words, to stick to its knitting and not attempt to be a climate regulator. I yield back.
Gentleman's time has expired. We'll now recognize the ranking member of the Financial Institutions Subcommittee.
Maybe they shouldn't have
Mr.
ports.
Foster.
Probably not.
Thank you, and thank you, Chair Powell, for being here today. Today is the 15th anniversary of when I was first elected to Congress and placed on the
You want me
Financial
to raise
Services
100
Committee
BPS out of
just as
nowhere,
the
huh?
economy
That's
was about
right.
to collapse.
Shut the fuck up
So
and
that was
sit
my
down.
trial by fire, the emergency response to rescue the economy, and the legislative response, the Dodd-Frank Act, that successfully stabilized our financial system. So 15 years later, as I take my place as the ranking member on the Committee of Oversight over U.S. banking and monetary policy, I recall the solemn oath that I swore to myself.
I don't know.
back
They're
then to
Congress
make
people.
sure
There's
that
so
this
many
kind
of them,
calamity
right?
never happens again. The monetary policy report that we're receiving today is largely a narrative of a return to normal. Lead times to manufacturers are back to pre-COVID levels. The job market retains supernatural strength, and inflation is responding more or less as predicted to the usual measures. And by far, the largest threat on the horizon is a repeat of the 2011 default crisis. Congress has the power to avoid that, and we owe it to the American
Who
people
set up
to
this
do
guy's
so.
mic?
I yield
Jesus Christ.
Today, we welcome the testimony
word
of Jerome
velvet.
Powell, Chair of the Board of Governors of the Federal Reserve System. Chair Powell was reappointed, and sworn in for a second four-year term as chair on May 23rd, 2022.
Yeah,
Chair
'cause he's
Powell
the
also
best.
serves as chairman of the Federal Open Markets Committee and the system's principal monetary policymaking, which is the system's principal monetary policymaking body. Chair Powell, we thank you for taking the time to be here. We will recognize you for 5 minutes to give an oral presentation or testimony. Without objection, your written statement will be made part of the record.
Start crying.
Powell, you're recognized.
Come on, Cat Powell.
Chairman
You can do
McHenry,
it.
Ranking Member Waters, and other members of the committee, good morning.
Lose the glasses.
And I appreciate the opportunity to present the Federal Reserve's
No, you don't.
semi-annual monetary policy report.
Don't lie to them.
My colleagues and I are acutely aware that high inflation is causing significant hardship, and we're strongly committed to returning inflation to our 2% goal. Over the past year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our tightening so far are yet to be felt. Even so, we have more work to do. Our policy actions are guided by our dual mandate to promote maximum employment and stable prices.
Of course he's using
Without
the same
price
statement
stability,
as
the economy
yesterday.
cannot work full
You're not going to
speed.
write two for the same
Without
shit,
price
right?
stability, we will not achieve a sustained period of labor market conditions that benefit all. I will review the current economic situation before turning to monetary policy. The data from January on employment, consumer spending, manufacturing production, and inflation have partly reversed the softening trends that we had seen in the data just a month ago. Some of this reversal likely reflects the unseasonable.
Why is the market
weather
acting
in
surprised by
January in
this?
Much of the country.
Oh, shit. Things
breadth of
changed.
the reversal, along with the revisions to the previous quarter, suggest that inflationary pressures are running higher than expected at the time of our previous FOMC meeting. From a broader perspective, inflation has moderated somewhat since the middle of last year, but remains well above our longer-run objective of 2%. The 12-month
He
change
won't
in total
address the JOLTS
PCE
data.
prices has slowed from its peak of 7% in June to 5.4% in January, as energy prices have declined and supply chain bottlenecks have eased.
How many people
Over
in
the
that room
past
you think
12
bought
months,
Tesla at
core
1K?
PCE inflation,
At least
which
10.
excludes the volatile food and energy prices, was 4.7%. As supply chain bottlenecks have eased and tighter policy has restrained demand,
Yaga, J-Pac
inflation
can do
in
whatever the
core
fuck he
goods sector
wants.
has
All right,
fallen.
he already got an A.
And while housing services inflation remains too high, the flattening out in rents evident in recently signed leases points to a deceleration in this component.
Who the
of
fuck is
inflation
submitting their
over the
lease to
year
the
ahead.
Fed?
That said, there is little sign of disinflation thus far in the category of core services excluding housing, which accounts for more than half of core consumer expenditures. To restore price
Looks
stability,
around
we will need to see
nervously.
lower inflation in this sector, and there will very likely be
Do you
some
guys just put it
softening
in his
labor market
Dropbox?
conditions. Although nominal wage gains have slowed somewhat in recent months, they remain above what is consistent with 2% inflation and current trends in productivity. Strong wage growth is good for workers, but only if it's not eroded by inflation. Turning to growth, the U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Although consumer spending appears to be expanding at a
I
solid
tie a
pace
copy of
this
my
quarter,
lease to a brick
other
and toss
recent
it through
indicators
J-Pac's
point
bedroom
to
window.
subdued growth of spending and
Oh, that was
production.
you?
Activity in the housing
You scared
sector
everyone
continues
at the
to weaken,
orgy.
largely reflecting higher mortgage rates. Higher
There was
interest rates
almost
and
an
slower
accident.
output growth also
You
appear to
should
be
understand the
weighing on business
ramifications of
fixed
your
investment.
actions.
Despite the slowdown in growth, the labor market remains extremely tight.
I
The
don't know how
unemployment
much I
rate
can
was
turn J-Pac.
3.4% in January,
How's that?
its
Can you
lowest
hear him?
level since 1969.
His fucking mic sucks.
Job gains remain very strong in January, while the supply of labor has continued to lag. As of the end of December, there were 1.9 job openings for each unemployed individual, close to the all-time peak recorded last March, while unemployment insurance claims have remained near historic lows. Turning to monetary policy. With inflation well above our longer-run goal of 2% and with the labor market remaining extremely tight, the FOMC has continued to tighten the stance of monetary policy, raising interest rates by 4.5 percentage points over the past year.
Oh, look, we're back at
We
the
continue
same
to
level,
anticipate
but
that
VIX is
ongoing
flat.
increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee slowed the pace of interest rate increases over its past 2 meetings. We will continue to make our decisions meeting by meeting, taking into account the totality of the incoming data and their implications for the outlook for economic activity and inflation. Although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If, and I stress that no decision has been made on this, but if the totality of the data were to indicate that faster tightening is warranted, we'd be prepared to increase the pace of rate hikes. Restoring price stability will likely require that we maintain a restrictive stance of monetary policy for some time. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you, Chairman Powell.
Unemployment's at like
I'll now
3%
recognize
right now.
myself for 5 minutes for the purposes of questions.
Everyone's got a job.
Chairman Powell, there's been a lot of discussion over the last 24 hours about the effect of rate increases on the economy. A lot of debate about what you said yesterday in the Senate. But no one asked you this directly. We have a March meeting coming up, Open Markets Committee meeting coming up in 2 weeks. How do you think about the March meeting?
Everyone has
What's your approach to
1.9
that? What are we
jobs.
likely to see?
Thank you. So I won't repeat what I
Some
just
people
said
are
in my
hoarding
testimony,
jobs.
but if I turn to the March meeting, I guess I would say that we have some potentially important data coming up, data to be analyzed. One of them came out at exactly 10 o'clock. That would be the JOLTS report, which of course I haven't seen, being sitting here at 10 o'clock. But we're also getting a jobs report on Friday and a CPI and PPI inflation report next week. So those will be important and we'll scrutinize them. When we say that we're going to be looking at the totality of the data, which is what I said, that does include these reports yet to come. They're going to be important in our assessment of the higher readings that we have very recently received and of the overall direction of the economy and of our progress in bringing inflation down. And we'll be carefully analyzing them. Again, we have not made any decision about the March meeting. We're not going to do that until we see the additional data. The larger point, though, is that we're not on a preset path and that we will be guided by the incoming data and the evolving outlook.
But you've also said higher longer. Is that still the case?
Yeah, so, and as I
Do you
said in
have
my
puts,
testimony,
man? Just be
we
honest.
look at the data since January and also the revisions to the November and December inflation data, and they suggest that the ultimate level of interest rates is likely to be higher than we'd expected.
And what are those economic factors?
How dare you take
So,
the floor from
going
Mr.
back
Powell?
to January, as I mentioned, the softer inflation readings of November and December were revised up. We
Why
got
is this
a very
bullish?
strong,
It's not.
inflation report for January. We got an extraordinarily strong employment report, very strong consumer spending, strong manufacturing data right across the board. And as I pointed out, some of that may have been affected by the very warm January weather, but nonetheless, all of it pointed in the same direction.
Tell that to
let's move to
SPX.
regulation.
SPX is just trading in between like
Chair Powell, in January, the Federal Reserve put out a
39.85
policy
and
statement
39.90.
noting that digital asset custody is a permissible activity if done in a safe and sound manner. However, if a bank can demonstrate to the Fed that it can conduct that activity in safe and sound manner, the capital impact of the SEC's staff accounting bulletin effectively precludes banks from offering digital asset custody service at any scale. Are you aware of this staff accounting bulletin by the Securities Exchange Commission and its impact on custodial services?
I am aware of it. Of course, it's an SEC accounting bill. This is SAB 121, I think, and
That's right.
Certainly aware of it. And we do follow general accepted accounting principles in our
Yes.
capital regulation.
Okay. Well, without objection, I'll submit to the submit for the record my letter to the bank regulators about this. So while the Fed says it can be done in a safe and sound manner, the Securities Exchange Commission has regulated it so that it cannot be done. Next question is certainly about bank capital standards. You got questions about this yesterday. Chair Barr has announced a holistic review of capital requirements. As I said in my opening statement, there are a lot of questions about this process. And previous statements by members of the Fed governors about the adequacy of current capital standards. And so while the Vice Chair for Supervision has announced that the Fed will engage in a holistic review of capital regulation, is that Fed staff? Is that done at the, at the governor's, the board level? What is the process? There are a lot of questions that people have about his statements. And so we want to understand why it's necessary for the Fed to conduct a holistic review and what that process is. So, my general question is, do you still agree with your previous statements about the adequacy on a generalized basis of our financial system? Or are we to read into this that we're not adequately capitalized and there's a high level of risk in the system that we're unaware of at this point?
Thank you. So the why really just is that as a new vice chair for supervision, Vice Chair Barr has
OI's
has
about the
launched
same.
into, he's taking a fresh look at everything, including capital. That actually
Still looks like
typical of the last
positive
two
at
people that had this job.
39.95,
So
negative at
that makes a lot of sense.
39.90, negative at
In
4,000.
terms of the process, it's certainly conducted under
Puts
Vice Chair
and
Barr's
calls
leadership
are coming
with
in
input from the
relatively
staff
equal on
and,
either side.
discussions with governors on that committee.
I would say it's a little
I'm
put
kept
favored
broadly
still.
apprised about what's going on, but the bottom line is nothing has been proposed to the board. Nothing has been formalized at this point. It's a lot of work that's going on. I think discussions are going on, meetings with industry and that kind of thing. When we get to the place where that's appropriate, the board will be carefully briefed. Ultimately, we'll vote on a proposal, and that proposal will go out for comment, and we'll solicit comment from any and all commenters, and we'll look very carefully at that. So it'll be a wide open process in the sunshine.
Thank you. I yield back. Now recognize the gentlewoman from California, the ranking member, Ms. Waters.
Thank you very much. Chair Powell, I agree with what you said on February 1st, that Congress must raise the debt limit because of what you described as the highly risky consequences of failing to do so. You are perhaps the most important expert on the debt limit, which is why I find it very concerning that your recommendation to raise the debt limit in a timely manner is being ignored by my colleagues on the other side of the aisle. I'm also concerned that the consequences of this brinksmanship are imminent. Fitch Ratings said this week they may
Did you just
seriously
call him
look
a
at
bitch?
downgrading the U.S. debt based on the escalating brinksmanship they are observing, even if Congress ultimately addresses the debt limit at the last minute. This is history.
Fitch
itself.
Ratings. Oh, okay.
Standard & Poor's downgraded our debt back in 2011 when Republicans last controlled the House and threatened default. The Bipartisan Policy Center later found that the 2011 debt limit debate cost us $18.9 billion in higher borrowing costs, even though we never defaulted. To put that into perspective, that could have been leveraged to provide up to $200 billion in loans to small businesses through the state Small Business Credit Initiative, or to provide hundreds of thousands of people down payment assistance to buy their first home. So I want to emphasize that House Republicans, including most of the Republicans on this committee, had no qualms about paying our debts when Trump was in office. 3 times they addressed the debt ceiling in a timely manner without holding our country hostage. But Republicans are ready to tear down the hard work of Americans everywhere to weather the pandemic and build back a strong recovery. Chair Powell, can you describe for us the risk you see if Congress continues to delay action on the debt limit, both for our economy and for individuals and families?
Let me start briefly by saying that we have no role and seek no role in what is really at the heart of fiscal policy, except I will limit myself to the 2 things that other Fed chairs have said about this. One is just that Congress raising the debt ceiling is really the only alternative. There are no rabbits in hats to be pulled out on this. 2 really is just that no one should assume that the Fed can protect the economy from the non-payment of the government's bills, let alone a debt default or something of that nature, which we don't think will happen here, but no one should be thinking that we have the tools to protect the economy from all the potential effects of that.
Fed Powell
Thank you very
saying,
much.
Fitch,
I don't want to
please.
miss what you said. I somewhat quoted you.
Yeah, they like
when you
to talk to
said that
Powell about
Congress
the
must
national
raise the
debt a
debt
lot,
limit
but it
because
has
of
nothing
what
to
you
do with him.
described as a highly risky consequence of failing to do so. Is that your language?
Well, must in the sense that it's really the only way for the debt limit to be raised is Congress must act. Again, these are fiscal discussions, and we don't want to be a part of them, and really they're between elected officials.
But you are an expert on the subject.
Well, I spent a lot of time on this, as you'll recall.
As an expert
prior
on
years.
this subject, you are concerned about the high risky consequence of failing to do so. Is that correct? Did I correctly quote you?
That's correct.
Thank you. And so, Again, let me just go a little bit further.
He's gonna blow up everyone's
The
ports.
chair mentioned that he had either written a letter or maybe even had some conversation from Janet Yellen about the time limits that she had attempted to describe. Is it your understanding that she said she could maneuver and kind of manipulate things so that she paid the bills that were coming due, but this could only last until about June? Is that your understanding?
Honestly, I would really have to not try to interpret the Secretary's words for you. That's really up to her to do.
Can she keep us afloat until about June?
I don't, honestly, that's not for me to say. These are really questions for the Secretary. I'm sorry, Ms. Waters.
Have you had any conversation with her about the statement that she made about being able to manipulate the debt and pay bills that were coming due out of another account, et cetera? Did you have that conversation with her?
The conversations that you and I have privately don't go anywhere. I don't talk about them with anybody, and the conversations I have with Secretary Yellen, I don't.
Okay, and I don't want to get you
Gentlelady's
in a-
time has expired. The gentlelady's time's expired.
Did I have equal time with you?
You sure did. He went over time.
If I did, thank you. I yield back.
I now recognize the Vice Chair of the full committee, Mr. Hill of Arkansas.
Thank you, Mr. Chairman, and thank you, Chair Powell, for being with us. You're welcome anytime. Don't wait till we ask. If you want to volunteer and come, we love having your views on
What a
many
gentleman.
topics. Thanks for talking about your commitment to price stability. You know, we've had this discussion last June between us of, I do think that's the primary mission of the Fed, and I think it should be the only priority of the Fed is price stability, because it's the legislative branch and the executive branch that really are responsible for, quote, full employment and having that policy environment and making sure that that's right. So your commitment to price stability is welcome by this committee. Yesterday in the Senate, you suggested that you supported a regulatory framework, a broadly regulatory framework for digital assets. Is that right?
Yes.
And is it your view that if we had a regulatory framework here in the United States for digital assets, that there'd be more transparency and rules of the road for both consumers, investors, and developers?
Absolutely.
And would it, if we had those rules of the road for business seeking to use and develop blockchain as a potential new technology in their business and tokenized payments, that again, that would be beneficial to business to know how to go about that?
Yes, and to assure that it's all done in a safe and sound manner when we're talking about banks.
Right. And then my next point would be exactly that, to help banks, investment brokers, custodians understand how they could even participate in that market in a safe and sound manner. You agree that a regulatory framework would help on that?
Yes.
Damn. Vic's down to 19.
And then finally, we've grown up in our country, and it's unique in the world, that we have a dual banking system, and due to a quirk here in Congress over 100 years ago, we have insurance is regulated exclusively by the states. So would you believe that that regulatory framework would also have to preserve some sort of role
Calls aren't really pushing that
subject
hard.
to safety and soundness, you know, for states to play some role in that regulatory framework for digital assets?
Let me just say, I think that it certainly works in banking and insurance. I have no problem with those.
Right,
I'd have
but
to think
do
about,
you think it could, you consider it possible that it could also work in
Don't assume
digital
that any of the
assets?
price action right now is based
Thank you.
on logic or reason.
Turning to a topic that's been a subject here for
Volume
nearly
is
4
low,
year central bank digital currencies, Article
and it will be
1 of the
leveraged to drop the
Constitution
VIX.
reserves coins and coin issuance, money issuance to the Congress, and we've in turn delegated that to the U.S. Treasury, which has, since 1912, engaged the Federal Reserve as their fiscal agent. You've testified here many times before that to issue a central bank digital currency, that would have to be authorized by statute by Congress. Is that still your testimony?
So that is absolutely the case as it relates to a retail CBDC. There are, potential forms of a wholesale CBDC that would be
Probably
we
looking
need
for
to look
liquidity
at.
opportunities
Less clear.
too. I mean,
We've
I
always
feel
been
like I
talking
made
about
everyone
retail
very well
CBDC,
aware
and
of
that's,
the
that's
call
something we would
position
certainly
that
need
is
congressional
trapped
approval.
between.
And what would be a parameter
40,
on something
10,
that's
and
not a retail
40, 30,
CBDC
right?
where you think that could be issued in some form or fashion without
Everyone's
Congress's
aware of
direct
these?
statutory authorization?
It would be, for example, it
Having
would just be
alongside
a-
hedges
something
to cover
between
this
banks, so it
range
would
is
look
not
an
a bad
awful lot like
idea
a
in the
bank
short
reserve.
term.
And you might ask, well,
Okay.
why would we need it? And that's a really good
I said that a
question.
bunch.
Yeah.
I don't know how much
Just
more I
something
can
that's
say it
literally within a
without
wholesale.
getting stupid fucking questions like
But
why
that
mark
speaks
it
that
up?
you might have a blockchain between banks and the Fed using a central bank digital currency token to settle transactions institutionally inside.
They're pretty far
the-
dated.
Yeah.
Voterist.
So that
317.
leads me to Fed Now, which is supposed to be up and running, I think, this summer, somewhat behind the scene there. I would like to ask you to formally have this full committee briefed on that by the Federal Reserve. I know the chair of the
They're not
Kansas
dead
City
yet.
Bank was
Some of them
involved. She's
sold
now
off
left, and I think the
at market
committee has a
open,
lot
but
of
there's still some
questions
there.
about Fed Now, how its interoperability will work, how it's going to roll out, and also just a question that we've been asked that why the Fed wire system isn't up 24 hours a day, 7 days a week now to benefit consumers that are using Venmo. Do you have a thought on that?
I'm not sure why we're not 24/7 on that, and we, of course, be delighted to come up.
Fedwire's down?
On Fed Now.
That'd be good. We'll
MOASS?
take you up on that and the right person from the Fed. And Mr. Chairman, I yield back.
Gentleman yields back. We'll now recognize the.
Is Venmo the
chair
MOASS
of
trigger?
I'm sorry, the ranking member of the Capital Markets Subcommittee, Mr. Sherman of California, for 5 minutes.
Thank you. Mr. Chairman, I want to thank you for bringing to our committee's attention several years ago the importance
He
of
said he
tough
doesn't know why
legacy
it's not up
LIBOR
24/7.
from $16 trillion of instruments where the creditor
That was a
wouldn't
weird
know
point
how
to bring
much
up.
the debtor was supposed to pay. This committee, we passed legislation over a year before the LIBOR hit the fan. You issued regulations 7 months before the absolute deadline. I hope we do this in other areas, and it's my understanding that with those final regulations, we're done, and we've solved the LIBOR issue. Is that correct?
That's my understanding as well.
People talk about inflation, and they somehow say that it's a matter of the personalities and politics in the United States. Others argue that the entire world is hit by inflation because Ukraine and COVID. I think we've got the answer to this question in that inflation is considerably higher in the Eurozone than it is in the United States today. And it's very hard to say that Joe Biden is responsible for inflation in Germany. I commend the ranking member for bringing up the debt limit and the harm that's already done to our economy. If we solve the problem tomorrow, we had less investment than we would have had yesterday. And I would say that I commend the president. He's going to issue a budget plan tomorrow, and perhaps in their time, one of our Republican colleagues can tell us when the Republican budget plan will be released. We are all eagerly awaiting it. Housing is a huge part of inflation, and we've left it to local government, but the permitting process there guarantees scarcity, which guarantees high housing costs. Mr. Chair, we've talked back in 2001 and several times even before that about wire fraud. And having just bought a home, I saw the process up front. Everybody's very nervous about one thing, and that is, will the buyer of the house be tricked into wiring their down payment to the wrong account? Or will the seller, the buyer be tricked into, or the escrow agent be tricked into sending the money to someone other than the seller of the property? We talked about this back in 2001, where I urged you with your FedNow system, which I'm glad is on track to move forward, to have what the Brits have. When you send the wire, you identify not only the number of the account you're sending it to, but also the name of the person or entity that's supposed to receive that. At that time, back in 2001, you said that payee matching is not the best way to do it. There are other ways to do it, and that you'd be happy to get back to me as to how you're going to make sure that an email
guy's
from a
dragging up some
Nigerian
old
prince
shit.
does not get the wired funds, particularly in a housing
It's like when
transaction.
your girlfriend gets
wired
mad at you
to
for
an
shit you
account
did a
number that
decade
turns
ago.
out to be in Lagos. What progress do you have? When can home buyers have a system where they're sending it to a named payee as well as to
He
another?
did say 2001. J-Pow ghosted his ass.
I hope we did come back in a timely way to you on that. It's a problem you've brought to our attention, you're right, over many years. And we continue to focus on that.
Well, the bureaucrats who are working on this don't want to do what the Brits did. They've proven it can be done. You said you were going to accomplish the same goal in some other way, and it has been a while, and it's not solved.
Yeah,
Nor
no
are
one
you aware
wants
of any
transparent
solution. I would
wire
hope that you would go
transfers,
back and
you
say,
dipshit.
we don't want to add this anxiety
Obviously.
to every real estate transaction. We
Don't-
go back
don't-
to the drawing
just
boards.
Say what you
follow
mean to
the
say.
Brits have done,
We want to
and
track
have,
corporate
pay,
wire
matching.
transfers to offshore accounts.
Finally, as to crypto,
The answer is no.
cryptocurrency says what it means. Hidden money. That's what it means.
See, there you
And
go. Now, say
if
what
we
you mean.
impose know your customer and anti-money laundering statutes to it, it won't be crypto anymore. What crypto wants is to have part of its ecosystem above the waterline, visible and subject to know your customer, and then have the rest of the iceberg below the waterline.
Gentleman's
time has
time's
expired.
expired. I will now go to the gentleman from Texas, Mr. Sessions, is now recognized for
I can
5
sort of tell why
Chairman
these
McHenry,
people
thank you
are
very much.
senators.
Chairman Powell, thank you for joining us today. We appreciate not only your professionalism, but your direction at us. Chairman Powell, I know that the Fed considers divergences, and you talked about it as you spoke in your opening statement about consumer price index, personal consumer expenditures, inflation, GDP, and all these things are talked about in your report, monetary report, March 3, 2023. Thank you.
These are the billionaires of Congress, not the
A couple days
pigeon whales.
ago, I had an opportunity to see that an economist, Arthur Laffer, produced a report that spoke about literally this country doubling GDP. Now, I know we're putting CPI,
Pump to drop
PCE,
mix, stair-step drops to keep
inflation,
it
all
flat
these
again.
things
Yep.
into a mix. But he said that if we made changes in healthcare to efficiencies, we could double the current GDP rate. My question to you that I hope you can answer is, what do you think about that? Is that something that is in this document that I have missed? And it's seemingly to a person who follows this, as Art Laffer does for 50 years, what do you think is an important way to look at efficiencies in healthcare? Thank you.
So no, that's not in our monetary policy report. I'll just say one thing, and that is we do spend something like 17 or 18 in that range % of GDP delivering healthcare.
It's like, yeah, that's not in our report about monetary policy,
It's
you
the delivery
dipshit.
system. It's not that the benefits are incredibly rich or anything like that. It's just that the delivery system is very expensive. That's $1 trillion a year that we spend and get nothing for it. This is fiscal policy, but I'm responding to your. So I would think that he may have meant that if we had a delivery system that saved that $1 trillion that doesn't really get us anything, then that would be great for the economy, which I would agree with.
So you've spoken of supply chain disruptions because it in fact is an inhibitor or an accelerator as we gain that advantage. You just talked about some seemingly which would offer some validation to Mr. Laffer as he spoke about the huge importance of this, is that something you should start paying attention to where policy people, not only at the Fed, but your Fed banks around the country,
Do these
would
people
start
know what the
looking at
fucking
and
Fed
start putting
does?
pressure on us to gain those efficiencies as a result of a global view.
I'm gonna.
On
Someone
supply
should make
chains
them like a
generally, they
15-minute
have
training video
suddenly
when
been
they get
tremendously
nominated to
important,
this committee.
in inflation, as you know, for the last couple of years, and for the first time really have been
Does
something
Schoolhouse
that we've had
Rock
to
have
study
something?
carefully. In terms of healthcare delivery, that is strictly a question for you and for.
At this point, I
you know,
wouldn't be surprised if the
parts of
market
government
crashed
that are
and VIX
charged
only
with it.
went to
The Fed does not have a role to
1975.
play and does
I
not seek
agree.
a role in that.
Does not see a role. And yet, as I look at this, you've got a role in projecting confidence. You've got a role in education. You've got a role in who's in the
Next school of
workplace. You've got a
stocks.
role. My
What's the role of the
interest
Fed?
rates. And yet my point is, it's such a staggering number that impacts us. Just love to have you go back. Perhaps we from this committee need to give you some direction on that. But I think your testimony today, it recognizes the staggering impact.
He doesn't
on
care
that.
about
I don't
anybody's
think
team,
it's
though. He's
political.
not.
The
He doesn't
answer
have
may be
anyone to
political,
answer to.
But I think the actual numbers are
They're
not
just afraid of
political.
his
It's an
absolute power.
inefficiency that is happening across the country, not a regional matter. And so I wanted to get your take on that, and I appreciate you being here as always. Thank you for your confidence and your hard work that you give this country. Mr. Chairman, I yield back my time.
Gentleman yields back. We'll now recognize the ranking member of the Agriculture Committee, Mr. Scott of Georgia, for 5 minutes.
Thank you very much, Chairman, and welcome
Powell can be
back,
fired. Yeah.
Chairman Powell. Now, Chairman Powell, listen to me very
But
carefully
he can do a lot of
here,
damage before he is.
because I think we're on the verge of making a terrible mistake. Back in 2008, if you recall, Barney Frank then and Miss Waters asked me to take a look and kind of work with you and the Fed. You were a board member in 2008. And we came to the conclusion that we needed a more equitable playing field between our large banks, like Goldman Sachs, Citigroup, and our regional and smaller banks, like Truist and our community banks. And we changed that. But now I hear that the Fed and the FDIC plan to drop a new rule which seeks to apply the long-term and higher capital requirements that were created, and you and I did this back in 2008, and you remember, that were created for the Goldman Sachs and for them.
Goldman Sachs.
And now we want
High?
to apply these rules to the regional banks. There's a big difference, and we've omitted this difference if you proceed in this manner. I think it's very misguided. It works, and you and I worked on this.
Is
You
this like a
recall
guy out of
this.
time
You
yet?
were a board member, and we saw that we needed to have a better playing field to protect. And if you all go along with this, it could put many of our regional banks and small community banks out of business.
Who gives a fuck?
So I want you to reverse this. First of all, tell me, am I speaking the truth? Are you all planning to all of a sudden here put these smaller and regional banks under the same heavy or financial load as your large worldwide banks?
Yes.
Tell me.
No, we're not planning that. We believe strongly and always have in tailoring to address the different size and risk characteristics of financial institutions, and certainly nothing like that for the regionals. They won't have anything like what the very large, most systemically important banks have in terms of overall regulation.
Yeah, because I remember clearly, you and I were back, I think we were on this side then.
Who's trying to
talking
launder
about
money through
this
regional
in
banks?
the same committee room. And you worked with us on that. I'm glad to hear that. Where is that coming from? I mean, it's a concern.
Shouldn't you know? You were also on the board.
It's just a rumor. Have there been any discussions about removing the playing field and the guardrails we have here, the differentiations in the requirements between the regional banks, community banks,
How much
and
of this
your
guy's
larger
fucking
global
campaign is
banks?
funded by a regional bank?
There's nothing to that?
Well,
I
would
can't
say
tell
this,
if he's
we're
high as
required by
fuck
the
or
law now,
old
and
or
we're doing this.
it's been too
John
hot for
Frank
too much of
actually
his
required
life.
us,
Yes, we did.
suggested that we should tailor, and then the S2155 then required it, and anything that we do will reflect appropriate tailoring.
All right, so that's off the board. We're not going to change and put the smaller and regional banks
Georgia?
under the same financial
All of the above?
obligation role as a large bank.
He's on the take.
We got
I don't know
that
who the fuck
right
he
from
is.
you, correct?
Yeah, that's right.
All right, good. Now let me turn to China. I'm really worried about China.
No, you're
and
not.
Right now, people may not know it, but China is the world's largest economy
Second.
in terms of purchasing power.
Okay. You
Now,
should add
at
a
our last
qualifier ahead of
meeting,
the statement.
I talked about this move where we didn't blow the balloon up. And this is an example of what I was pointing out.
Gentleman's time's expired. We'll now recognize the chair of the
Well,
Science
no,
Committee,
putting the
Mr. Lucas,
qualifier
for
after the
almost 5
statement
minutes.
sounds
Thank you, Mr.
dishonest.
Chairman Powell.
Right?
I'd
You
like
should
to
put the
follow up on
qualifier
the
before
topic
the
of
statement
capital
so your
standards.
audience
One of those things we've
understands
discussed many times
what you're
together.
leading towards.
As you know, commodity markets have seen significant volatility in the last few years. And during times of tremendous economic uncertainty, like we've seen, end users turn to the markets
I know he's a
to hedge
politician.
risk,
He should
particularly
learn
those in the
public
agriculture
speaking.
and energy sectors. And I know that the Fed is early in the review process of potential changes in capital requirements. Can you, well, I'll ask anyway. Can you commit to ensuring that these changes will not increase the cost for banks providing those commodity derivatives to end users?
That's a really specific, can I go look at that? I mean, I'm not actually sure that the work even addresses that, so.
Fair
I'd be happy
point.
to come back to you on that.
And that particular response makes me feel better, because after all, those products are very important to my folks and make a great deal of difference in how they're able to address their issues. So, as you discussed earlier, and as you've consistently assured, the Fed's not a climate-making policymaker.
That was direct.
You and I have talked about this issue, again, many times in the past. However, I'm concerned that the Fed could be heading in that direction and could be laying the groundwork for climate-related stress tests that would reduce access to capital for entire sectors of the economy. This would also open up the
They're not
Federal
using their
Reserve
capital for
potentially to
anything.
political pressure and force the Fed, in fact, to make policy decisions related to climate change. We've seen, for example, this administration turn to regulators to impose climate policy as an alternative to the legislative process. Chairman Powell, how careful are you in ensuring that the Fed does not place itself into the climate debate? And how can Congress ensure that the Fed's regulatory toolkit is not, shall we say, warped into creating
Don't
climate
grant them the
policy
powers.
outcomes?
Do you know what your fucking job is, man?
I think we do have a narrow but real role there, which is around bank supervision, making sure the banks understand and can manage their risks over time from climate. I think my colleagues and I all understand that it's a tightly circumscribed role that we're playing, and that we're not looking to move into an area where we're actually becoming a climate policymaker.
Is
I
he
would
asking
completely
the
agree with you
Fed
that over
if they're going to
time,
expand
that
their
board needs
own
to be very
powers
carefully
without
guarded.
congressional
will tell you that
permission?
I will do that as long as I'm at the Board of Governors.
I very much appreciate that because, again, it's a very important issue to the 3rd District of Oklahoma. Traditional production agriculture, oil and gas, and the actions that the Fed takes have a significant impact back home. So it's vital
Circumcised.
that we resist the demands to do that sort of thing now or in the future. And I very much appreciate that response. And with that, I'll yield back the balance of my time, Mr. Chairman.
Gentleman yields back. The gentleman from Massachusetts, the ranking member of the Digital Asset Subcommittee, Mr. Lynch, is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Mr. Chairman, and for your willingness to come here and to update us. Last week, the Treasury Department announced that leaders from Treasury would begin to meet regularly with leaders from the Fed.
Trash,
and from
you're
the
in
White House,
Oklahoma. Do you know who
to
his
discuss a
people
possible
are?
CBDC.
Have you met
central
them?
Bank, digital currency. And
Why are
other,
they so worried about
payment
their
innovations.
derivatives?
In the statement, it was mentioned, and I'll quote from it. It said that the Fed is encouraged to provide periodic public updates as
They're
it continues its
Oklahomies.
research and its technical experimentation on central bank
The
digital currencies. I
McBoyles.
was wondering, first of all, when you might be expecting to share some of these public updates. What's the timing on that?
So we did go out for.
I'm unable
for
to answer further
comment,
questions on the
in
council of the
general,
lawyer
on a
present.
CBDC
Damn it.
a year or so ago, and I do expect we'll go
Never
out.
mind.
I can't give you a date, but we'll certainly go out and, engage. We engage with the public on an ongoing basis.
Yeah.
We're also doing research on policy and also on technology. That's what we're up to.
I'm aware of the Boston Fed has a partnership there.
Something people don't know is the
Hamilton
easiest way to
project
get
over
an
there with the
ISDA
folks from MIT Media Lab
is
that's
to
doing a great
trade like
job.
livestock
But,
commodities.
It says
Or
here
agricultural
that the discussions
commodities.
would include technical experimentation. I was just wondering, at what level are you talking about making decisions on architecture for a CBDC, a retail CBDC?
We're not at the stage of making any real decisions. What we're doing is experimenting in kind of early stage experimentation. How would this work? Does it work? What's the best technology? What's the most efficient? We're really at an early stage but we're making progress on sort of technological issues. But the policy issues are equally important, though. We haven't decided that this is something that the financial system in the country want or need.
Right.
So
It's
that's
a
gonna
lower
be very-
capital requirement to get an
Right.
ISDA.
Well, I think I speak for the
if you need to trade
chairman as
agricultural
well.
commodities.
Would love to have more dialogue
Believe me,
with the
it's
Fed on that.
probably
and maybe
taken
bring in the
advantage
folks
of.
from MIT as well, and just make sure that Congress and this committee is as up to date as others. Let me switch over to Fed now. There are some champions of digital currency and stable coins in particular that
Vic's on
continue to
screen
cite the
today.
need for
Jimmy
faster
Boring.
payment systems.
Jimmy's on the fucking
However,
screen too.
As was earlier mentioned, the Fed Now is a service that the Fed is working on to finalize that will allow for instant payments between bank accounts. And the Fed has a target release date for Fed Now between May and July, which is right around the corner. Do you see any reason why cryptocurrencies would provide faster payments than the Fed Now system?
Predictions for jobless
would
claims
this
data on the
offer,
market.
with the transparency of
Jobless
Fed
claims I
Now,
don't think
would
is
it
all that
offer,
important. It's just
distinct
the
advantages over some of these stable coins.
the
that are,
unemployment report
touting,
is
faster
relevant,
payments.
but that's Friday.
What Fed Now will do is it will enable.
Yeah, jobless claims
all
is
the
just
banks,
the
any bank in the
weekly,
United
so
States, not
it's
just
it's
the
not
big
going to
ones,
have that
to
big of an
offer
effect.
instantly available.
It's
funds,
also not gonna
real-time
change very
payments to their
much.
customers. That's what it will do.
Unemployment's
That's a
continuing to
great
trend
thing.
down.
A CBDC, I think
The
you're
shit's
asking
still
whether-
getting more
whether a
expensive, right?
CBDC would serve some of that, but a CBDC is going to be years in the evaluation.
CBD?
And, I think we can get this into the hands of the public very quickly.
You can.
And I think we'll have real-time payments in this country very, very soon. And so that's a good thing.
It is. I do have an overriding question, and that
Yeah,
is,
the 10-year auction's at 1
before the
o'clock.
greenback, everybody had their own currency. You had rail companies, you had coal companies, you had, state banks that were authorized to issue their own currency. But when the greenback came out, all of those various currencies went to zero because everyone had, because the greenback had the full faith and credit of the United States behind it. I'm worried about a lot of these stable coins and other cryptocurrencies. do they go to zero when we come up with the
Man, his
CBDC
grandfather must have gotten
that has
fucking
the full
burned on those
phasing
big
credit
fat stacks
of
of
the United
railroad
States
money.
behind it? And we've got thousands of these out there, and you've got people investing millions and millions of dollars in these, well, trillions right now. And I'm just thinking, if we had those advantages built into a CDBC, wouldn't those alternatives go to zero if they did not have the transparency and the full faith and credit that?
If you're sitting here right now
Certainly
and
unbacked
you believe
cryptocurrencies that,
in our
that don't
government,
have
you
any
love this
intrinsic
country,
value, but nonetheless
I
trade
challenge you
for
to
a positive
watch
number.
45 minutes of any of these
Those
fucking
those
meetings.
have never understood the valuation of
And
those.
come back with the
Stablecoins
same
are actually-
opinion.
Many of them are really, they're drawing on the credibility of the dollar. They have dollar-based, they're dollar-denominated mainly, and they have dollar-based reserves, although we don't know what's in the reserves because there's no regulation.
Gentleman's time has expired. The gentleman from Missouri, Mr. Lukemeyer, is recognized for 5 minutes, the chair of the National Security Subcommittee.
Thank you, Mr. Chairman. And thank you, Chairman Powell, for being here this morning. The reserve currency status of the dollar to the U.S. has enormous financial and national security benefits. In the wake of Russia's unprovoked invasion of Ukraine, the Fed took action to prevent the Kremlin from accessing more than $300 billion in reserves, roughly half of Russia's reserves.
Does this guy's state
However, this
even
led
have
to an
running
accelerated
water?
effort by countries like China to de-dollarize their official foreign exchange reserves. Just last week, there was an article in the Wall Street Journal titled, "Russia Turns to the Yuan in an Effort to Ditch the Dollar." Not only that, but China's President Xi Jinping published for the settlement of energy trade. Pushed
We're
for the settlement
Super
of
Bowl
energy trades
champions
in
and
the
we get the
Chinese
water
yuan
ration
at a
this
summit
year.
with Arab leaders in December. The question is, are you concerned about these actions by Russia and China to push, to establish different reserves and conduct transactions in non-U.S. dollars?
So the U.S. dollar is the widely accepted and really the only serious candidate for the world's principal reserve currency, and that's because of our democratic institutions, our liquid markets, the rule of law, and all those kinds of things, and also the fact that the dollar has held its value over time. So other countries who are competing on other playing fields may want to establish different currencies, but really the dollar is the one that's going to be used more broadly in international commerce because we have those aspects and other countries don't.
Well, that's true to now, but my question is, are you concerned about the actions of these countries because if they see themselves being challenged or are concerned, for instance, if China would invade Taiwan, as Russia invaded Ukraine, there were some sanctions put on, and I don't disagree with the sanctions. The last time you were here, though, Mr. Chairman, I asked a question because it's an instructive moment for us from the standpoint that knowing that we put sanctions on Russia, all other different accounts, as well as the oligarchs from that country, are we thinking about doing the same thing to China when they invade Taiwan? And your answer at that point was no. We passed a bill out of this committee last week to ask the administration, basically, to start thinking about that in those terms. What kind of situations can you come up with? Are you talking to allies, begin to talk to them, to start putting together a list of how you would go about sanctioning the different individuals, the different accounts?
He did
like
just
that.
say
So
when they
have you started
invade,
thinking about
yes.
that at all yet?
Well, let me say, the business of sanctions is entirely in the hands of the elected government and the Treasury Department. We are an implementer as it relates to banks. That's it.
Yeah,
We
but
don't make those
we're going
decisions.
to
We're
take
not
your advice
consulted
on
those.
different aspects of this, Mr. Chairman.
Sorry?
We're going to take your advice on the different aspects of this.
Well, I mean, honestly, when the sanctions were being put in place, Treasury was doing it. We weren't doing it.
Okay.
Yeah, I mean, that's the way it works.
Next question. There was an article again in one of the political.
Isn't NVIDIA in
yesterday, I
Taiwan?
guess it was.
They use TSMC. They
and
don't.
it talked
They're
about
fabless. They don't have their own fabs.
The problem that we have here with the Fed's balance sheet, it says it now appears similar to a hedge fund whose long-term assets are financed by short-term borrowing. And the bottom line is that it's going to cost money. The Fed now has a negative income as a result of having to do this. And so it says here that the Fed will simply borrow the money to pay the bills. Is this true? That the Fed's losing money right now as a result of the way you've got these debt, the borrowings that you've purchased structured?
The place I would start is that that the Fed has, we always turn over all of our earnings in every year. We turn them over on an ongoing basis, and we've turned over something like $1.2 trillion in earnings just in the last, decade or so. So we always know that when we raise interest rates,
Okay.
you're going to lose money. And
Okay,
of course,
but
we
you
have the
agree
ability
with the point that we have a negative income right now.
That's
And
right.
this makes my point to my next question, or my concern is, the CFPB gets their money. The CFPB gets their money to run their agency from the Fed.
That's right.
So basically, there's no money for the Fed to pay the CFPB's bills if this is the case, unless you continue to borrow.
I said fab less.
Which is basically what's going to happen now, is you're going to have to borrow money to be able to pay the CFPB's bills. Is that not correct?
No, we don't borrow money. We issue, basically, yes, we don't shut down the Fed when we have negative income.
Okay.
We can pay our bills and we can
So
pay
my
the
question,
CFPB.
my follow-up question then is, do you do any accountability or assessing of the CFPB's spending of these dollars at all?
No, we don't.
So they just get a
Inspector
blank
General
check.
does.
You just told me they just got a blank check. They send you a bill, you send them a check. There's no
guy's getting
accountability
there-
for
no,
them.
I think there are
economic
limits built
information
into the
from
law, which I don't have in the
fucking
front of my
YouTube.
head.
I have yet to see a limit, Mr. Chairman. I'd love to see what the limits are, because I don't think that they've ever agreed that they have that. But I see my time is up. Mr. Chairman, I yield back.
Gentleman's time has expired. We'll now go to Mr. Foster, the ranking member of the Financial Institutions Monetary Policy Subcommittee.
Thank you. And just a quick comment. I think it's a mistake to imagine that you can completely hide from the macroeconomic effects of technology in your scenario planning. We just talked briefly about healthcare costs. Obesity, half of our healthcare costs, and there are treatments in these GLP-1 receptor agonists that look like they're just a home run against obesity. And so these will be near-term impacts which will have macroeconomic effects. So just a comment. I hope you have a certain fraction of futurists in the room when you're talking about your scenario planning, because a lot of that future is like now. Okay, back to economics. So we have this historically low unemployment rate, 3.4%.
Mix obesity with
And
drugs, not
historically, this
social
would be
change.
considered
Exactly.
to drive runaway inflation.
Sprinkle some
your
pills on my
predecessor,
fucking Big Mac.
Alan Greenspan repeatedly referred to dangerously low levels of unemployment. And yet we see inflation is coming down. So what is going on here? How can we have these historically low
This guy
levels of
is
unemployment without having inflation
definitely
take off?
turtly enough
Isn't it
for the
possible that
Turtle
we
Club.
simply have less frictional unemployment in our system, due perhaps
It's
to
not
the
helping
fact
that
people
the
get their new jobs online and
left,
have a job lined
left
up
shoulder of his
before they quit.
jacket is pulled up
So
because of how he's
inflation
sitting.
is coming
which
down,
makes
but
him
it's
look
very
more like a
high,
turtle.
is the thing, and some part, I've never said all of it or most of it, but some part of the high inflation that we're experiencing is very likely related to.
He's wearing a
tight labor
shell.
market. Wages affect prices, and prices affect wages. So I do think that's part of it. More to your point, though.
He
there was
did
a
plug the
time when
diet
there was
pill.
a tight relationship between inflation and unemployment. In other words, the Phillips curve was steep, and that went away over the period of the Great Moderation. And really, in our thinking, that's because people came to expect 2% inflation, and we had 2% inflation, and then people just stopped focusing on inflation, and it stayed very low. So there was really no relationship, or very, very tiny relationship. We could have very weak economic growth or very strong economic growth, and we wouldn't have inflation respond very much. That was before the pandemic, though.
Okay, well, I hope you don't overlearn, some of the lessons there. It's one of my worries, that there've been a number of exogenous shocks to the system here, and it'll take a while to go through them, and if you want to be careful there. Now, in a related issue, when you say refer to the totality of factors, you're looking at a mixture of leading and lagging indicators when you look in this totality of factors. And my question, if perhaps you might be paying too much attention to the lagging indicators and not enough to the leading indicators. The example that's referenced in your remarks and is in more detail in the report about the difference between using current rental payments versus the amount that you pay for a new rental contract, and difference in how much they lag. Had you paid more attention, for example, to the leading indicators like current rental contracts, then you probably would have picked up inflation earlier. You would have been, not gotten so far behind the curve on that. And secondly, there are policy implications going forward. If you look at current rental prices for new contracts, we're much farther along in fixing
Any
inflation.
SPX
and that you didn't
SPXOI
take your foot off
shift?
the brake. And so what's your thinking on that, and whether you may perhaps be systematically not paying enough attention to leading indicators versus lagging ones?
A lot more puts coming in.
We've had our eyes on the whole housing inflation.
Not only at
and from the very
4,000,
beginning, right now, what I would say is that
but also
every forecaster
looks like
is baking
39.90,
in,
39.80,
higher-
39.65.
lower.
39.50 is sort of cooled a bit. Most of the
I think the thing with transitory was more
call and put
more had to do with
buying
goods,
outside of
and
like
it
the
had to do
current
with the thought that
$10
the
range
supply side
has
disruptions would go
dwindled
away much
since
quicker
the
than they
last
would, that the
update.
labor market
So over the
disruptions
last
would go away
hour.
much quicker than they did.
Low volume,
And in the
midday.
in hindsight, it just took much longer for those disturbances to go away.
Yeah. So with
Long-term
hindsight, and if you,
put
you know,
interest
allow
still
yourself to
quite
Monday morning
picking up quite a
quarterback
bit,
yourself,
actually.
you probably would have gone up to 4% earlier, and not had such a big problem with inflation.
We're still in a weak range,
And
but
so what
39.90 is
your,
pretty heavily weighted,
are there
as is
structural things you can
39.80.
contemplate, or even after action reviews to say what would have happened if we would have paid more attention to the leading indicators, or improve the in engineering term, improve the bandwidth of your feedback regulator. It's, that, you know, this is something, if you want to get the best result, you know, you need a high bandwidth feedback in the system, even when there's averaging on the back end.
So this is something we only think about during waking and sleeping hours, as you can imagine. It's really hard to know what the lessons are. Again, we really thought things would. Nobody had seen the supply chains collapse. No one had seen labor force participation plummet. We didn't know, or unemployment go to 14% and higher than that, really. We didn't know how long it would take to go away. And I mean, if we ever see this pitch again, we'll know how to swing at it. But it's been
We'll now recognize the
pretty bunch of firsts. Sorry.
gentleman's time has expired. The gentleman, his time has expired. We'll now go to the gentlewoman from Missouri, the chair of the Capital Markets Subcommittee, Ms. Wagner, for 5 minutes.
Hi, thank you, Chairman McHenry. And Chair Powell, welcome. Thank you for your service and for being here today. Yesterday, I was pleased to hear you discuss how inflation is severely hurting the working people in America. In your testimony, you also state that strong wage growth is good for workers, but only if it is not eroded by inflation. And that is key. Inflation is a tax, a hidden tax on every American. If the Federal Reserve were to shirk its mandates to stabilize prices, leaving inflation alarmingly high, what would it cost America's hard-working families in Missouri's 2nd Congressional District and beyond?
So I think the costs of failure to restore price stability would be extremely high, and while there will be costs to success, the costs of failure will be much higher. You'd be looking at an extended period where people learn to expect and live with high and volatile inflation, and it's very, very hard to have rising real incomes during such a period. So it'd be a bad thing for the country.
Can you reassure the committee that the Fed remains committed
Tax-ish?
to bringing
Sure,
prices
except without
down
benefit from
for
the
our
government directly.
constituents?
Yes, I do.
Thank you.
I hereby assure you.
And changing topics here a bit, as China's economy reopens and about 18% of the world's population resumes its consumption of oil and other key goods, what sort of inflationary impact will we see here in the United States, sir?
So a faster reopening of China, which it looks like we may be seeing, does have the potential to put upward pressure on commodity prices, but it also would mean a faster sort of unraveling of the problems in supply chain. So those would be offsetting effects. I think sitting here today, we don't expect the net effect to be big for the United States. It might be bigger for other parts of the world, but we think it ought to be moderate overall.
Well, China is one of the world's top oil importers. And do you expect any inflationary effects on global energy markets as China's oil consumption returns to their previous levels?
So I think oil prices could be affected, and I think that's a big concern in Europe, for example. We have our own domestic oil, and we've got a lot of natural gas as well.
We sure do. I wish we were actually harvesting more of that liquid natural gas. Chair Powell, you, Vice Chair Barr, and many others have recently identified that the banking system is well capitalized and strong. Bank capitalization remained robust during the shock of the pandemic and related shutdowns of economic activity. Capitalization of large financial institutions weathered severe stress testing mandated by the Fed. And despite all of that, as also previously mentioned by Chairman McHenry, Vice Chair Barr insists on conducting a review of capital rules. I'm concerned that this review is being conducted in a silo and that the findings will not be made fully available to the public. Taking such an approach in the context of this holistic capital requirement review would make it impossible to conduct a transparent rulemaking process, denying the public information necessary to consider and to comment. I think this is just simply not appropriate in this situation, and I'm concerned by the lack of clarity, I think is the best word, perhaps at this point, by the Vice Chair. A couple questions. You've served on the Fed board for over 10 years since the financial crisis regulatory framework has been put in place. And over that period, have you seen any real
I don't think they
world
care what
evidence
JPOW
that
does. Right?
America's
It's all about
banks
just
are
saying things
undercapitalized?
at him while they have a stage.
So American banks are strongly capitalized, and I believe Vice Chair Barr has said that as well. But
Yes.
the point is, there haven't been any real proposals to evaluate yet, and when there are, that will be done in a highly transparent manner.
I hope so. I'm glad to hear you say in a highly transparent manner. Do you agree that excessively high capital levels constrain banks' lending capacity with spillover effects on jobs and living standards for Americans?
So I think it's always a balance, right? More capital means more safety and soundness and more ability to withstand terribly stressful periods. But it also, it's more expensive. Equity capital is more expensive. U.S. banks have competed incredibly well around the world
Yes,
with
they have,
high levels of
internationally.
capital. But so that's a trade-off that you're always going to be making when you think about capital.
Gentlewoman's
My
time
time
has
is
expired.
expired. Yes, thank you.
We'll now
Vice Chair.
recognize the gentlewoman from Ohio, the ranking member of the National Security Subcommittee, Ms. Beatty. Ms. Beatty, for 5 minutes.
Thank you, Mr. Chair, and I like that title. To Chairman Powell, thank you for coming and being such a good colleague and friend. I have a couple questions I'm going to try to get through quickly. Chair Powell, in a press conference last month, you stated, quote, "There is a lot of spending coming into the construction pipeline, both
Would
private
JPOW rage
and
fist
public.
slam on desk
And so
followed by
that's
that's
going to
fucking
support
it. 100
economic
point hike
activity,"
right
end
now.
of
Fuck
quote.
your ports.
How
Lights
do
a
you think
cigarette,
the
takes
strong
one deep inhale
pipeline
and
of
tosses it in the
funding,
corner where he
from
left a
what the
pool of
Democrats put
gasoline
together in passing the Inflation
at the
Reduction
Fed
Act,
meeting
the
next week or the
Infrastructure
week after.
Investment Jobs Act, and the CHIPS Science Act will do to have economic activity this year and moving forward?
So I guess I was making the point that there are a lot of sources of demand that we can rely on, even though demand has been relatively
Calls still trapped,
increasing
yeah.
relatively
Calls are
modest
still
in the
trapped to
last
the
year. Part of it
upside.
is
Will
that
this help in that demand?
Zero DT
Yes,
and long-term
there
leverage
is
is
state and local governments,
pretty
I
stable
mentioned,
in the current range. So
So would you say
we're
this is
probably
a
not
a
going to
great
break
thing that
one way or the
we've
other
done,
unless
coming
something
from the
more
left
significant
of
happens.
not for me to judge the merits of what gets done.
Or
I'm
this
just
is
saying there's
over.
But it will
demand- there's demand
contribute.
there
And the
that will
market
support
starts to move
economic
again.
and support it.
Yeah.
So I'm going to assume from that that's a positive. Let me go to the second question. Chairman Powell, the Federal Open Markets Committee is projecting that unemployment will increase to 4.6% by the end of the year. And those costs, as we know, won't be borne equally. If we look at the ratio from the last time unemployment was 4.6% and compare it to our numbers now, it would mean that white unemployment would go up to about 0.9, but black unemployment would go up by 2.3%. Does that sound somewhat accurate to you?
Yes.
Can you address the disparity impact with that? And before you answer, let me go to the book and thank you that was put at our places together. You made in this book with your signature
Did
on
he
it,
not
it is
change his
stated,
tie?
however, while disparities in unemployment have largely returned to pre-pandemic levels, there still remains significant disparities in absolute levels of employment across groups like African Americans and Hispanics. So can you address that?
I can. So right now, to your point, actually, African-American unemployment is, I think, 5.4%, which is just about as low as it's been since we started tracking it in 1972.
But differential from majority by?
I'm going to say, so that's 5.4, whereas the overall is 3.4, and that includes blacks, so that means for whites is well lower than that. What happens is, so there's a persistent gap between black and white unemployment, and also when unemployment goes up quickly in a recession, it goes up much faster for African Americans. When the economy grows again, it comes down faster. So that's just that's
He didn't
somehow
change
embedded
it
in our
all.
economy.
He
We
slept
don't
in that
really
seat.
have.
That's what I'm thinking.
The best thing we can do is achieve stable prices so that we can have long expansions. And what happens in those long expansions is that the labor market gets tight, sustainably tight, and we have historic lows in unemployment, including for African Americans.
Let me say thank you, and let me also, again, thank you. As you know, in the 117th, I was the chair of the D&I committee, and let the record state that you always pushed for making sure that you understood and respected that. And in that, this is very minor and certainly personal to me. In this report, maybe those who helped you author it, I would like to see the areas that talks about unemployment not under a title of special topics, but something that draws a little more attention to it as some of the others, just very minor. Last question I have. Can you tell me if the Feds is committed to working with the other agencies like the FDIC and the OCC to finalize a rule soon on CRA? Certainly that's something of great interest to many of my colleagues. So can you give us any updates on it or how the process is going or what we can expect?
Congratulations,
Yes,
Jeff.
So with Governor Brainerd's departure for the White House,
And
I
then
asked Vice Chair Barr to
also,
take the
what
lead
the fuck?
in moving it forward. There's this, I would characterize it that there's essentially agreement between the three banking agencies on the changes to be made. That's all being written up.
Oh,
and vetted.
fucking market's so
And at a certain
boring
point,
today.
members of the Board of Governors will be briefed on it. We'll vote on it.
Is there anything we can
Nothing's
do
being accomplished
to help
here.
with that?
Everyone's
I
just being
think
bored to
we're
death.
hard at work on it, and it's going to take some months, but I think we're nearing we can see the airport, and we'll be landing in a few
Gentlewoman's
months.
time has expired. The
Thank you.
gentleman
You're
from
back.
Kentucky, the Chair of the Financial Institutions and Monetary Policy Subcommittee, Mr. Barr, is recognized for 5 minutes.
Thank you, Chairman McHenry and Chairman Powell. Economic data are mixed, as you know.
I think
On the one hand,
200
low
pence?
unemployment, robust hiring, strong consumer spending, and persistent core inflation, and
JW?
a CPI that's still more than 3 times your 2% target suggests more aggressive tightening
Or
is
just
warranted.
raised 200 points.
On the other hand, because the Fed misjudged the
Should be 2%
inflationary
from its
impact
current
of
price.
Democrats' overspending,
I don't know if
kept interest
AOC is
rates
still
too
on
low
the
for far
House
too
Financial
long,
Services
and
Committee.
failed to end quantitative easing soon enough, the Fed has been forced to raise the Fed funds rate 450 basis points in just 11 months and reduce the M2 money supply at the fastest rate since the 1930s. As a result, wage gains have slowed, credit card debt is at an all-time high, the housing market is in a slump, and the yield curve is inverted. I agree with you that the historical record cautions strongly against prematurely loosening policy. But what would you say to those who caution about the lag effects of monetary policy, the precipitous decline in liquidity? Will the economy have to suffer a recession in order to bring inflation down to 2%?
We are very well aware of the lags with
When will
which
JPAD
monetary
discuss
policy
international
affects
securities
economic
fraud? The
activity and inflation.
DTCC
Those are
committed.
long and variable, and I would stress highly uncertain. There is really no agreement on exactly how long they are, but we know that slowing down the pace of rate hikes this year is a way for us to see more of those effects as they come in.
In December, most Fed officials expected to lift rates this year to between 5 and 5.5%. Is that still your estimated terminal rate, Or does the data suggest that the terminal rate could be higher than 5.5%?
He's not
We'll write down
popcorn
new
trader.
forecasts and release them to the public on March 22.
Just say
but
yes.
as I
Recession is
mentioned in my
necessary.
testimony,
It is.
The data we've seen so far this year suggests that the ultimate level of rates will need to be higher. But we still have some more data to come in between now and the meeting. But as of today, it suggests a higher level than that.
Ban Moonman?
Let's
I
go
thought
to
he was
Vice
Moonman.
Chairman Barr's
I'll take
review
it
of
under
the capital
consideration.
framework. A lot of questions
I'm sorry you
for
feel
on that.
deceived.
When Governors Brainerd, Quarles, Clarida, Bowman, and Waller made up the board under your leadership, major changes in policy were addressed following board consensus and not when there was significant dissent. Will you commit to not implementing a new capital framework following this holistic review or the Basel endgame if there is considerable dissent from the board?
I can't really commit to that. You know, we are a consensus kind of an organization, and that's what we'll work toward. But ultimately, you know, we
Would that be a break from your prior practices? You're a consensus builder, Mr. Chairman. You pride yourself in that, and we credit you for being a consensus-oriented chairman. Will you commit to continuing that practice and not allow major changes to the bank capital regulatory framework to be made by one person?
Well, they can't be made by any one person, but I do commit to that, and I commit to doing everything I possibly can to bring people together in consensus, to have something that can be broadly supported.
Thank you. Earlier this year, you said, and I quote, "We are not and will not be a climate policy maker." However, in the Fed's draft principles on climate-related financial risks, one proposed principle suggested that boards of directors or of a financial institution should consider making changes to its compensation policies to align with values in the context of supposed climate risks. It appears then that the Federal Reserve, through regulation, wants to begin implementing climate policies. So which is it? There seems to be a disconnect between your statements publicly and the rules that the board is putting forward for comment.
Standing outside the Capitol in a trench coat with nothing
I feel
underneath but
strongly
my hairy
that
body and a
climate
lewd
change is
tattoo
an
of a gay
important
bear
issue that
eating
needs to be
tendies on the
addressed by
moon.
elected people.
Just give me the signal, I'll run in
about-
and drop
it's just
SPX
not
100
something that we've been
BPS with my
charged by
dangle.
Congress, clearly.
Man, we don't need you
So
cheering the
we
market
know
up
a narrow
with
role,
your
and that role will be
penis,
around
okay?
Making sure that
Just
banks understand
go about your
and
day
manage
and
the
keep
risks
your
that they're
coat
running, and
on.
that's going to be it. And as I said before, we don't want to drift into
Gork,
becoming
my
a
DM is
one
rapidly
policymaker.
losing
We want to guard
relevance.
that
Can
border
you
very
glance at it, give a
Regarding
slight
the
chuckle,
Fed's
and
climate
move on with
scenario
your
analysis
day?
pilot program, did the board vote to approve the creation of that pilot program?
I swear to the Great Pickle, if they say
check, but I
climate
don't think
policies
so. I think it's
once
already
more,
authorized.
I
And
shall
this is a
jelk.
concern that I have. I'm
Okay.
concerned that one governor acting unilaterally to implement major policy changes without board consensus is a problem. And so I would
No, it's not.
urge
Sounds
you
like-
and your colleagues on the board
great.
to continue a consensus-oriented approach, and I yield.
Gentleman's time has expired. We'll now go to the ranking member of the House Intelligence Committee, Mr. Himes of Connecticut, for 5 minutes.
Thank you, Mr. Chairman, and welcome, Chairman Powell. Thank you for your careful conduct of monetary policy, independent of the many political desires that circulate in this building. Independent monetary policy is a bedrock of a solid economy. I want to reflect for a moment on another bedrock of the American economy, the full faith and credit of the United States government, which is now being put at risk by the Republican majority. My Republican friends know how very dangerous a game they are playing. They know that salary payments to our soldiers are at risk. They know that their irresponsibility will raise mortgage rates for new home buyers. But they say this is the only time we focus on spending in the debt, which of course is baloney. It's a pernicious form of baloney. The time to focus on the deficit is when you are voting for the spending and the tax cuts that create the deficit. When you're voting for the Trump tax cuts, which the CBO said would add $2 trillion to the national debt, that's the moment to consider whether you want to do that. Not when the good name of the United States is hanging in the balance. This stuff gets a little complicated, but the American people really need to understand what's happening here.
You should have said
Congress sits down
Bologna.
to a huge 10-course meal of
Like the
tax cuts and
Appalachia
spending
guy.
and more defense spending and expansion of this program and stimulus,
From
all
Ohio.
of which we vote for collectively. First course, second course, white wine, red wine, 4 servings of dessert. And then the bill comes and my Republicans say, whoa, wait a minute, hold on, look at this bill. This is irresponsible. Do we really want to pay this bill? That's not the moment for the consideration. The moment is when you're ordering 4 helpings of dessert. That's when we should be talking about it and taking responsibility for the choices that we make without putting the full faith and credit of the United States
on
at
its
risk.
face. Just yield your time.
Now here's where the hypocrisy
You've
comes
embarrassed
in.
yourself.
My Republican friends like to point the finger at this side of the aisle and blame us. But Chairman, as you know, fully 1/4, 25%.
He's trying to make a
today's
good
United
point,
States
but
debt
he's failing horribly.
was accrued in the 4 years of the Trump administration. This country's been around for 246 years, and fully 1/4 of the United States debt was accrued under President Trump. By the way, speaking of hypocrisy, in the 4 years of President Trump, the debt ceiling was raised or suspended 3 times. I didn't even notice. But now, of course, we have a different president, and so the calculus is different. Now, Mr. Chairman, I don't think I'm going to persuade the majority to act responsibly here. I actually think the markets will persuade
Let him keep
them.
dropping. The
And you'll
market's
recall, 'cause
dropping.
we were watching this closely. September 29th, 2008, the Republican House of Representatives voted down the Great Recession Rescue Package. As the vote was going down in the House of Representatives, the equity market dropped 7%. $1.2 trillion lost in people's retirement accounts. Now, Congress sobered up. A couple days later, we passed the Rescue Act. So, Mr. Chairman, there is a question here, and the question is this. You and I both watch the markets pretty closely. Treasury tells us that on June 5th, that's just 3 months away, on June 5th, the Treasury runs out of money. So my question to you, Mr. Chairman, I know I'm asking you to be a little speculative here, but what should we watch for? What market signals could indicate that the markets are getting fed up with the manifest irresponsibility around this? Give us some things that we should be looking
The
for.
markets don't give a shit.
And I'd love to,
because
but I'm gonna
they
limit
know
myself
that
to
once
what
your
the
guy's
Fed chairs have
paychecks
said about the
stop,
debt ceiling, which is
you'll
that
fucking raise the
doesn't need
debt
to be
ceiling.
raised by Congress. In the end, there are no rabbits in hats, as I mentioned, and also that no one should assume that we, the Fed,
$17 for bruschetta
to protect the economy from various events. And I wouldn't assume, no one should assume that we have the tools to protect the highly uncertain effects of that kind of an event.
So monetary policy is
I feel
obviously
like
very
he's
concerned with
asking J
interest
Powell for
rates.
stock
If
picks, but I can't
global
tell.
capital markets begin to decide that we're really serious about hurting ourselves this time, is it possible that we could see interest rates rise more because borrowers of United States debt decide that we're actually a little risky? Is that possible?
I think that and many other things are possible. The thing is, we've never crossed that line, and if we cross that line, we're going to find out, and I think it's highly uncertain.
Okay,
Fuck
so that's
around.
possible, and I I don't like pressing you on these things, but you said this and many other things are possible. You want to elaborate on what might be in the category of many other things?
Rather not, actually.
Okay, I figured. All right, thank you, Mr. Powell. Again, I really thank you for your really responsible conduct of monetary policy, and there's a reason that you are insulated from our political desires, and I very much appreciate that, and yield back.
Gentleman yields back. We'll now recognize the chair of the Small Business Committee, Mr. Roger Williams of Texas.
Thank you, Mr. Chairman, and Chairman, it's good to see you. Always good to have you here. In past congressional testimonies, you've repeatedly stated that you
people are
support
so full of
protecting the
shit.
state-based system of insurance regulation, which is the most
You-
effective and competitive
You
in the world.
guys, you
My home
got
state
me
of
vote
Texas
for these morons.
is the world's 7th largest insurance market, proving the success of this system. Now at the International Association for Insurance Supervisors
These are the
Conference
people that
in
speak with
November,
your voice.
there is the opportunity to have the U.S. state-based aggregation method become formally recognized
Just think about that, though.
as comparable
Whoa,
or equivalent
whoa,
to
I
the
don't
insurance
vote.
capital
That
standard.
doesn't excuse you.
We should not be following the
I don't
European
vote
model
either.
that has increased regulations and less competition, and we should prioritize a model that encourages deregulation, competition.
Not voting's the
and
same
less
as voting
government,
for the guy who wins.
Involvement in pricing. So my question is, Chairman, can you highlight the benefits of the U.S. state-based aggregation method compared to the European model regarding market resiliency and systematic risk?
Oh, I know.
And can you confirm that you will push for aggregation method to be deemed equivalent by the IAIS?
I can say this, I do think that our insurance regulatory system has proved itself appropriate.
It's
and adequate.
embarrassing
We've
that
gotten
there's
the job
people
done
in here
for a
from
long
other
time, and
countries
we don't need
watching
to be
this,
copying other
going,
countries,
what the fuck
or
is
other
wrong with your
regions'
government?
Insurance
3
regulatory
months
system.
for
Honored.
free?
I'm
I
a
will
little
take
rusty
it.
on
I love you,
the
Gherkin.
details of the capital
Thanks,
requirements.
Junaid.
That sounds right.
But our, bottom line is, our side works, the other doesn't. We need to stay where we are.
Our side works.
Yeah, thank you. Also, in the past, you stated that banks were well capitalized. We've talked about that today.
Unsub, still
But
like,
now there
still
have been increased
saying.
conversations about raising
Also, I didn't
capital
unsub.
requirements.
Okay.
Numerous
Thanks for the
economic
update,
studies
Brett.
have found that raising capital requirements for banks will increase borrowing costs for their consumer and commercial customers. And I'm somebody that's owned 50 years. I've never had a day I wasn't out of debt, so I'm concerned about this. And implementing additional regulatory capital requirements will slow economic growth and limit financial institutions' lending ability. So do you believe that raising capital requirements would raise the cost of borrowing?
At least
and
your
add
politicians
cost
have
to our economy in Main
ascots.
Street America?
Well, it depends on which banks experience higher capital requirements, and there isn't any proposal to evaluate right now, of course.
Where is the
but,
Latino
it's always a trade-off.
representation in
You
the
know,
Financial
higher capital
Services
is good
Committee?
in a
There
sense,
isn't any.
because it keeps banks able to lend.
Were
during
you in
bad
here
times.
yesterday?
That's really a good thing. Too much capital, though.
The guy on the
over
panel,
limits
shut your
creditability.
mouth, Pickle
So we're
Man.
trying
Do
to
you know how
strike
hard
that
it
balance
works to put
always.
on this fake Southern accent?
And this has been touched on a little today, but let me come from a different angle on it. But the Reserve was created to act as a nonpartisan entity.
Thank you,
that
Mr.
remains
Williams.
Separate from party politics.
For the
Talked
question.
about that. And unfortunately, throughout recent years, the Fed has gotten caught up in politically charged issues like economic inequality, gender and race discrimination, and climate change. Recently, the Federal Reserve Board proposed guidance on managing climate-related risks for large banks, further proving that the Fed is giving in to some political pressure and operating outside its intended purpose and responsibilities.
Don't put the guy from
country's,
Ohio
financial
on
leaders,
me.
in my mind, should be focusing on addressing runaway inflation instead of worrying about the financial institutions are doing to monitor climate change. So, and we touched on this a little bit, but how can the Fed ensure that they're not placing undue regulations and guidance on banks by forcing involvement in partisan green politics? And how's the Federal Reserve ensuring they remain separate from political influence?
I think it's absolutely critical that we do. I mean, our independence is partly founded on the idea that we will stay out of stuff that you have not assigned us to do. And if we're going to wander all over and take on the hot issue of the day, our case for our independence is dramatically weakened. On climate change, I think we do, you mentioned the guidance, and then there are also the stress scenarios, and those are the two things that we've done. We tried to keep those tightly focused on the banks, understanding and being able to manage the risks that they'll run over the longer time periods.
Noted, Matthew.
Climate,
Thank you.
and not slide into a broader sort of policy-making role on climate change. And I
Thank
accept
you,
that
Moon
that
Man.
could be a slippery slope and a moving border.
Top campaign
I just wanna
donor,
say, and
Apollo
my
Global
colleagues feel the
Management,
same way, on the
18,300.
board, that we're going to guard that border carefully, and we're going to stick to our
Oh,
role and not.
well, this goes
try
back
to be
to what I was saying
policymakers the way
last time we
in
watched one of
many
these,
other
right?
countries, the central bank
The
is out there
Congress
in the
people should
lead
just
with the
have
support of
labels on them,
doing
like a NASCAR,
climate policy, but
of
that's
all
not,
their
that's not where we are in the
sponsors.
United States, and we're not going to pretend that it is.
I've got some time left, and I'll yield back, but I
think
just want
that's
to say as an
much more
auditor, I'm
equitable.
looking for the first day of that rate
Right?
cut. So, thank you for being here. We appreciate it.
Or like a little
Gentleman's
sign
time
next
has
to
expired.
them
We'll now
with
go
all their
to the
donors,
gentleman
or just
from California, Mr.
just the
Vargas, for
logos,
5
right?
minutes.
Thank you very much, Mr. Chairman, and again, thank you for holding this hearing. Chairman Powell, a pleasure to see you again.
That way
I've
we
said
can
it
better
before, and I'll say
assess
it
their
again.
stance.
It's always great to see you because I always think of the old Republicans, the ones who are very noble, did the right thing, didn't play chicken with the economy, very forthright. And so anyway, I appreciate you being here very much. Like some of my colleagues on the other side, I'd say the same thing about some of them, and I appreciate you. So we heard today that the inflation is Biden's fault.
We'd see the same patches
So
across
what
the
is
aisle.
the inflation rate?
That'd
in
be
the
very
European
telling,
Union
wouldn't
today?
it?
It's high.
It's high. Is it 10% possibly?
I think if you're talking about headline, I don't have this figure in my head, but it's very, very high from a headline standpoint. And they've had core inflation move up too.
So are they following Biden's then policies? Is that what caused the inflation? Because it seems to be Biden's fault.
So I think inflation is everywhere, and it must have to do with a common factor, and that common factor has to be the reopening of the economy after, and the things that were done on COVID. On the other hand, each country has a little bit different case, and I think you have to be careful. We had much more of a demand-oriented issue than they did. Now they have their inflation looks a lot like ours did a year ago.
Jesus Christ, look at this
Yeah,
fucking
I just had
pump.
to bring it up because, again, Mr. Sherman brought it up, but it's interesting every time I hear inflation is caused by Biden, I wonder why is it all over the world? I mean, it's not because of the pandemic, of course, or, you know, Europe's at war. I mean, that wouldn't cause it, of course. It'd have to be Biden's policies. That's ridiculous. And I think the voters saw through it last time. So I haven't been here 15 years as my good friend, Mr. Foster. I've only been here 11. But when I first got here, the boogeyman, and I heard it all from my friends on the other side, was Dodd-Frank. Dodd-Frank was going to be the end of banking. And in fact, some of my colleagues would almost scream how horrible this was. And then we got the bankers up here during a real stress test, which was the pandemic. And we asked them, has it been helpful to have Dodd-Frank? And you know what they said? Do you know what they said?
I don't.
Oh,
This
they
guy
said
looks
it
like
was
my
helpful.
therapist.
In fact,
Okay.
it kept
How does
the
that make
banks
you feel?
capitalized. It was fascinating. Now, to be fair to them, they did complain about some of the smaller issues, but not Dodd-Frank in general, the bill. Then it seemed that
That's a lot of
CFPB,
gaps.
that became the next boogeyman.
Illiquid in this
But they're
range.
starting to seem to fade on that, and I think the reason for that is the CFPB has actually helped
All
so
the
many people.
positioning's, like,
And now a
outside
lot
of the
their
range we're
own
trading in. It's
constituents
really weird.
Now are getting helped by the CFPB, so all of a
Like,
sudden
almost no
there's not
interest
quite
here.
the energy. So now
It's all like
they're attacking
4,000 at
ESG.
like 30,
ESG.
39.90.
And they're saying that you and everybody else is somehow conspiring to make sure they don't buy their oil or their coal. Are you conspiring to do that? Are you conspiring?
I don't believe we're conspiring.
No. Now, I heard it was supposed climate risk. Is there risk in the climate change?
Yes.
There is? Could it affect the bank?
Certainly, in the longer run, yes.
Yeah, of course it can. Do you think insurance companies take this into account?
Yes, actually, I believe they do.
They absolutely do.
Who write long duration liabilities, they certainly do.
Of course they do. I mean, they're very concerned with it. Weather is a big deal. I was a vice president of Liberty Mutual in their corporate legal department, and I can tell you weather and the changing of the weather, we used to have what we call catastrophes. And these catastrophes happened every 25, 50, 100 years. Now those 25, 50, and 100-year events happen every 5 years, every 2 years. So of course it is. I mean, it's ridiculous not to take a look at these ESG factors. We have to. And again, I'm glad that you guys are taking a look at it because it's real. I'm glad
That's
that
rolling down my
the
SPY 407s
president's
that
taking a
expire
look at
next
it.
week to
And
400.
it's sad
Getting
my
same
colleagues
dated
on the other
at-the-money
side
puts.
just want to stick their
I
head
think
in
the
the sand and
407s
say,
will die.
no, climate change is supposed
I don't know how
climate
much
change.
time you have on
No,
them,
the
but that
reality
doesn't
is it's
seem
real
like a
climate
terrible
change,
idea.
and it's costing
They're
billions
really
and billions
outside of
dollars,
like
and
the
if you don't
positional
believe it,
range
go
right
ask
now.
all those poor people in Florida that had those huge
So
hurricanes
tightening
come
them
through
up and
wipe
putting
out.
them back in the positional
So again, I
range is
appreciate very much
probably
the
a good
work that you've
idea.
done. The only thing I hope is, as you said, if we ever see this pitch again, we'll know how to swing at it. And I hope we don't get the pitch of defaulting, because I'm not sure we'll know how to swing at that one. So thank you again, Mr. Chairman. Thank you for being.
Thank you.
I yield back.
Gentleman's time, gentleman yields back. Gentleman's time has expired. We'll now go to the Chair of the Oversight Subcommittee, the gentleman from Michigan, Mr. Heisinger, for 5 minutes.
Thank you, Mr. Chairman. I'm going to move quickly, and good to see you again, Chair. You know, I caught a little bit of the Senate hearings yesterday, and you had a lot of pressure to keep the sugar high going. And frankly, if the Fed and many of our colleagues had listened to what many of us were saying, we should have been weaned off that artificially low, cheap money that kept the party going, and frankly, we wouldn't be in this position. To reference Chair Greenspan's punch bowl analogy, not only did no one have the courage to remove the punch bowl, you had people cheering on the pouring of another bottle of 151 rum into the punch bowl. And here you got folks wanting to do the exact same thing. Let's spend more. It's just, and now here we are. You have an impossible decision to slow the economy or let everyone get crushed by inflation. And we know tightening means a slower economy. Slower economy means fewer
17-week bill
jobs. Fewer
action
jobs
came in
hit
at
those who can least
504,
afford to lose a job.
5.045.
And so in short, the lower rungs of the economic ladder will suffer more than the rest of the ladder. So that's the state. That's the state of play of where we're at. I have to hit a couple of quick issues here. I wanted to start off by discussing climate, especially given the Fed's announcement in January that it was going to conduct a pilot climate scenario analysis
10th has the
exercise.
most FTDs
The
due
Fed,
for
along with the
GME.
OCC and FDIC, have each issued proposed climate risk management
still,
principles
even-
for banks
even with
that
those,
you
it's
are
still
attempting to
very low.
finalize those by the end of the year, and the requirements don't stop at the border. The UK and the EU central banks are moving to require significant ESG disclosure regimes as well. I know the
Yeah,
Fed
for
is
sure,
taking a
Chad.
look at commodities capital charges in the holistic review, but even though the Fed isn't forcing banks to encompass climate analysis in their stress tests, there are many initiatives at the Fed that are going to make it more costly for banks to finance traditional fossil fuel companies. So I want to ask you a very specific question. Will you commit that you will withhold support for a new capital rule that increases capital charges on bank activities in traditional energy companies?
You know, I can't sit here and promise what I will and will not vote for, because I don't know what's going to be in the proposal, but that's not the kind of thing I think we're looking at.
I'm sorry, it's not the kind of thing.
So this isn't about, this is about overall capital levels more than anything else, I think, rather than the specific thing you're talking about.
Okay. We're going to follow up on that because we need to have a real-time conversation about what that is going on there. I want to quickly switch topics and go in a different direction for this next question. I want to ask you about two opinions issued by your legal staff in November of 2019 and December of 2020 to the asset managers Vanguard and BlackRock. Mr. Chairman McHenry, I'd like to submit the two letters for the record.
Without objection.
Thank you. These opinions appear to outline the parameters of both how both Vanguard and BlackRock can operate without being deemed a bank holding company. In addition to the legal restrictions outlined by the bank holding company, these opinions listed out here in quite detail list out commitments that the companies would need to take to avoid being viewed as having, quote, control. These opinions also appear to provide assurances that the Federal Reserve Board staff would not recommend that the board find the asset managers to be bank holding companies. Further, it is unclear whether the board will take any steps beyond a periodic self-certification by the asset managers to monitor compliance with the condition that they, quote, not take any action to control a banking organization. As some asset managers play a larger role and clearly strive to influence policy in companies across the free market, we need to remain vigilant. So, Chair Powell, is the board taking any steps to assess or monitor whether Vanguard and BlackRock are complying with the commitments made in November of 2019 and December of 2020, respectively?
I would have to check and get back to you on that.
Okay.
Familiar with the issue.
I appreciate that, but that says to me that doesn't sound like there's an assessment that's taking place ongoing or scrutiny of that. Is somebody reviewing that, or is someone in charge of reviewing that?
Honestly, that's a very specific, narrow question. I'm quite familiar with the issue.
Well, it's specific and narrow to two companies, but not to an industry. I mean, that's what we need to be driving at. And
Why are you
I
still
guess
watching
that's-
this?
we need to
Clearly, the
find out
market
whether
doesn't
there's somebody
care.
proactively
The
reviewing
market
these
may or may
activities and
not
these
care,
commitments
but
that the companies have
literally
made as well as the Fed has made.
Any question
So,
can trigger a response, right?
How often do you think they should be reassessed? Annually, monthly, biannually?
This is
one wrong
this is a
answer.
Very narrow, set of questions.
One weighing
get
in
you
on a
great
topic
answers
you
for a reason,
shouldn't.
But I don't have them in my head.
I look forward to
Time has
those great
expired.
answers, and I yield
We'll
back.
now go to the gentleman from New Jersey, Mr. Gottheimer, for 5 minutes.
Thank you, Mr. Chairman, and Chairman Powell for joining us today. Chairman Powell, when you testified before the committee last June, PCE inflation was up 6.3% year over year. Just a few weeks ago, PCE data showed that the numbers decreased to 5.4%. We're moving in the right direction, but despite the Federal Reserve raising interest rates at the highest rate since October 2007, we're still far off from the 2% inflation that the Federal Reserve is targeting. Do you believe 2% is still the right target for inflation? And given the ongoing energy transition, the push to shift supply chains out of China, and the labor shortage here in the U.S., should the Fed consider adjusting its target to avoid overly burdening Americans? Would a decline to 3% inflation be enough to offer price stability without excessive economic pain?
No, 2% inflation is going to remain our longer-term inflation goal.
Are you concerned given all the other factors that I mentioned, or do you think we just have to keep sticking with that?
I think that's got to remain our longer-term inflation goal. It's the global standard, and it's our standard, and this is not a time at which we can start talking about changing it. We have no instinct to do that.
Thank you, Mr. Chairman. The gig economy has grown significantly in recent years as more Americans are working as contractors or running small businesses. The Dallas Federal Reserve has written that gig workers are often not included in payrolls and not counted among the unemployed, and this may understate the number of Americans who could be counted as unemployed. The Fed has also noted the large number of Americans who are missing from the workforce after the pandemic. Do we need to change the way we think about measuring unemployment to account for these changes?
I missed the word you're saying.
Sorry, do you think we need to change the way we think about measuring unemployment to account for these changes?
I didn't catch this. You said, what was the word?
Gig. Oh, sorry, gig. Gig workers.
Workers. Gig
yes,
workers.
I'm sorry.
I didn't
Gig workers.
hear that. That's the word I didn't hear. Okay. No, we clearly need to incorporate gig workers both into the labor force and to whether they're working, and they certainly are working. We try to do that. It's not that we're not trying to do that. We may not be doing it perfectly.
Is there a better way to capture it? I'm just worried that you don't have the unemployment numbers may not, given we're still using older measurement ways. Are we updating our measurement?
We absolutely try. We're definitely trying to get those people, self-employed people. They do report in the household survey, I believe. I can get more for you on that, but I'm sure we're not doing a perfect job at it because it's a relatively new thing. But we're very well aware of it, and they're supposed to be included.
That'd be great. I'd love to talk to you more about that.
Great.
Thank you. As you're also aware, many of us are having discussions about the long-term fiscal health of our country and our economy. Like many, I worry that higher interest rates will put upward pressure on the national debt. CBO already estimates that annual interest costs will nearly triple for the U.S. over the next decade. You said to the Senate yesterday that interest payments are not a consideration of the Fed, but are you concerned that higher interest rates will more rapidly make payments on the debt unsustainable? And are there actions Congress should consider to address this issue?
So I'll say what my predecessors have said, which is that we're on an unsustainable path, and we really need to. Ultimately, we will get back on a sustainable path.
Still no big changes in gamma. More put gamma at 4,000.
And rates, of course, were low between the
very
financial crisis and the end of 2021, particularly low. After the target inflation rates hit, what do you think the new normal looks like in terms of rates and the Fed balance sheet over the next 5 to 10 years?
It's a really good question. There was a secular decline in longer-term interest rates, which we don't control, for 40 years to the point
some
where
415
the 10-year was
call gamma picking up
was at 10%, and then at the end of 40 years it was quite low. You're at higher levels. You're at, as you pointed out, levels we haven't seen since earlier in this century. I don't think anybody knows what this is going to look like 5 years down the road. So you have to ask. Demographics haven't gotten better. Globalization may actually move a little bit in reverse, which would tend to produce higher inflation and thus higher rates. But you have to ask the factors that caused low rates, how much of that has changed, and some of it has, but much of it hasn't.
Building on that a little bit, what's the right metric you think for, if you're in our shoes, for assessing our fiscal health? Do you think we should be focused on
417,
a specific
50
debt
now,
to
the
GDP
gamma
ratio,
flip
or is
point.
there a specific number? Are there other
Also,
measures lawmakers should be
upside
focusing
resistance.
on?
Quite a lot of
We
upside
traditionally focused on
resistance
debt to
here.
GDP, but many people pointed out
Negative
before the
market
pandemic
maker
that
hedge currently sitting
rates
at
were
around
secularly lower, and that therefore you could look at sort of
billion.
real debt service. There was a lot of research on that, and by those measures, actually debt service was much more easy to handle. Now we have the 10 years back close to 4%, and I think we need to be careful not to assume that these secular.
No, the OI is
low
not particularly
longer-term
bullish.
rates are
But
gonna
just
continue
because
with
the
that,
OI is
because
not bullish
that
doesn't mean
look
we
like it
can't
now.
see
And
like a pump
frankly,
in
most
futures to
forecasts
put that
have
OI
always
in the
shown
money, right?
Things like the 10-year going back to a higher level, so it won't be that big of a
Remember
change.
that
I think it's more or less.
while
been
the
handled,
market
for
maker
example,
is
by
very strong
CBO
on
that way.
SPX. SPX doesn't control
Thank you
its
so
own
much, and I yield back.
pricing. It's a
Now go to the gentleman,
representation of the
the
underlying
Vice Chair of the
index.
Digital Assets Subcommittee and the Chair of the Housing Subcommittee, Mr. Davidson of Ohio, for 5 minutes.
Thank you, Chairman. Chairman Powell, thank you. It's an honor to be able to talk with you today, and appreciate the work you and the monetary policy-focused portion of the Fed does. We're rooting for maybe a more consistent input from our bank regulators. So for the regulatory side, I've spoken with multiple bankers who tell me that they've never seen a higher degree of regulatory burden, steering, guidance, shaping activities in the market from regulators. And I don't think that's just narrowly focused on the Fed, but I'd ask you to look into it. There are a lot of people that feel like there's an Operation Choke Point 2.0 going on, and it's particularly focused on debanking people that are disfavored by the current executive branch primarily, just like the previous Operation Choke Point. was. And so to the extent that you yield any influence over the regulatory component of the Federal Reserve, I think that would be meaningful and important because, you know, our monetary system, part of the strength of the U.S. dollar is, of course, a stable store of value. Currencies around the world are wrestling with that and inflation, and you guys are working to tackle it.
Just kind of walking dicks
But the
down.
other part is it's an efficient means of an exchange. And when people really feel like some third party is going to steer or shape their money, they don't trust it. I mean, the unbanked and the underbanked, fundamentally, that's lack of trust is part of why they don't use our banking system today. In fact, that's part of the appeal of the digital asset space, is the permissionless nature of it. It seems that a lot of people in the financial services space that have grown up in it, that are leading it today, feel threatened by the prospect of change. And if they've maybe reluctantly concluded that you can't ban crypto, they at least want to keep it account-based so that some third party can actually control the assets, which is a polite way of saying we don't actually trust our citizens to control their money or their assets. We'll let somebody else do it for them because we can control those third parties. And in fact, that's what the regulators do, isn't it?
Isn't what?
They control the third parties. I mean, if you don't comply with the regulatory regime, you don't get to operate a financial services business, right?
That's right.
Yeah. And so at the end of the day, you know, I think a lot of people were concerned by your remarks yesterday. I know I was, by saying that permissionless digital assets pose a systemic risk to the financial system.
Well, what I think what we said in our guidance, I think if you, by the way, I think if you read through the digital guidance, which I did getting ready for this hearing, of course I read it before we put it out the first time, but it's pretty careful to say that we don't want regulation to oppose innovation and thus entrench incumbents and things like that. It's pretty balanced, the language, and I think it essentially goes to the question of protecting the safety and soundness of institutions. And there is one, I think what we say about, I'll paraphrase it, what we say about permissionless blockchains is that they have been vehicles for fraud.
Yeah, 0.24%. So if you follow your own report on fraud, it's a fraction of what it is with the U.S. dollar. So speaking of the dollar, is there any real current threat to the dollar's preeminence as the world's reserve currency?
You say you're asking a question.
I am aware
Yes,
that he
sir.
took off his glasses.
Is there a threat?
I responded
I
with the
think that
purchase of
our
a
status
Apple
as the
money
world
put.
reserve currency is not under particularly strong threat right now. I think it's a pretty stable equilibrium. It's not a permanent equilibrium, but there isn't really a serious competitor, and that's not because of any of this. It's because of our democratic institutions and the rule of law, and the fact that the dollar's value is pretty stable.
Just say it. You know you want to. Just say it's because of our big
on the repo market, just any
fucking
insight into
missiles.
that, and then I'll have my last comment here and just leave the last word
Big
to you.
missiles
But particularly
on
curious about the
boats
repo market.
full of semen.
But I'll close by simply saying I'd ask you to turn off the purchase of mortgage-backed securities. As the chairman of Housing and Insurance, I'm particularly concerned about affordable housing, and the artificial prop for the mortgage-backed securities does raise the cost of capital in that space. So whether you own it or occupy it
Shaped
or
like
rent it,
dicks.
it's going to raise the cost there. But I'd just ask if you'd comment on the safety and soundness of the repo market, if you would.
Of the repo market. As far as I know, the repo market is functioning reasonably well these days. Are you talking about the reverse repo facility? Or
Yes.
The reverse repo facility is a different thing. We can continue this.
I'd like to follow up with you later, and my time has expired. I yield.
Thanks.
Gentleman from Illinois, Mr. Caston's recognized for 5 minutes.
Thank you, Mr. Chair. Always a pleasure to see you, and appreciate your time here today. I want to start with this.
What do you think
chart
about
in the
selling
monetary
some
policy
September
report, changes
39,
fascinating. Chart 14
100,
on page
4,000
17.
bear
This is
spread calls?
history of
Omar
wage
Theta to
growth
wait
and
out the
job
drop
growth.
for the long term.
And
Do you think it's
for those of you
risky?
who don't have it in
Is
front
it
of you, broadly speaking,
it is
from
relatively safer than
2000 to
buying like September
2017,
SPX puts.
We had more workers than jobs.
Yes.
From 17 until the COVID
I mean, your
crisis,
losses
was about
are
the same.
limited.
And since COVID, we've had
I don't know.
more jobs than workers. And there's tons of rich stuff in here
Yeah,
that I
it's not
enjoyed
terrible.
reading. But
I mean, you have no risk of
broadly
early
speaking,
assignment,
if
remember,
that was the
on
only thing going on in the
SPX
economy, I would
specifically.
assume that we had 20 years where it was essentially a buyer's market for labor, and the last year and a half where it's been a seller's market for labor.
So yeah, I mean, it's
as you
a
look at
safer
that,
approach
and
to taking a
if I
short
go through
position,
and I look at
although
from 2010 to
profitability is
2020,
limited.
CPI was up 20% over the period, and real median wages less than 10%. So for half of the economy, they didn't keep up with wages, even though we think
That
of
guy
that
was
as a very
definitely
low
a super
inflationary period.
stalker.
Corporate profits were also up strongly, as you would expect. I'm not saying that with judgment, right? If it's a buyer's market for labor, you would expect the gains from labor productivity to flow to consumers and profits, and that looks like what it did.
Did anybody notice
In
that
the-
the jobs data today was
This is,
atrocious?
chart 14 on page 17 of the monitor. It's the top right
ADP
corner
saw
there.
a huge surge in new employment. And
in the last year and a
JOLTS
half,
job openings were up.
Median wages are up 5%, which is almost as much as they grew during that 10-year period before. And yes, inflation is still a bit higher than that. But what I'm wondering is, as you look at the economy, is wage growth universally bad in your view, or is wage growth good to the extent that it's keeping up with wages? Because historically, wages didn't keep up. And how do you think through that nuance? Because interest rates are a very blunt tool.
What's up with
And,
crazy NVIDIA pumping?
If we are
Nasdaq's
now,
having
if
a
you
pretty
agree
good
with me
day.
that we're now basically in a seller's market for labor.
NVIDIA, a
shouldn't
lot
we
like
expect
Tesla's
welcome
and
some
a lot of
wage
leveraged
inflation that goes
ETFs.
with that?
So I'd say two things. First, we want wages to go up in ways that are consistent with over time with the increase in productivity and inflation, and that makes all the sense in the world.
The
other
market's
thing
going
I
to
would say
overall
is that
put
in
its
this
weight on
instance, what we've seen
CPI and
is
PPI,
inflation
right?
eating
But
up
bad
these
jobs data
very
is
high
not
nominal wage
encouraging,
gains
right?
that
Because
very largely
we
eaten
know with
up by
continued
higher inflation. So it's very important
strength
that
in the
we
labor market
restore
that
price stability, so that we
price
can start to
stability,
see real
like
wage
you just
gains,
said, isn't
real
going to
wage
be
gains
resolved,
after
right?
inflation across the
And as long as price stability is
and to
unresolved,
be clear, like,
the inflation can
we're all
continue
opposed
to
to inflation
rise
here.
or remain a
But
volatile data point.
In
at
that
best.
2010 to 2020 period that we all viewed as a very low inflationary period, wages, the gains from productivity did not flow to labor. Wages did not keep up with inflation.
And here's what is
we didn't
crazy
think about that
is
as
that
a
corporations
problem
are
for the Fed to
charging,
fix
you know,
because overall
profits.
inflation was down.
Profit margins
So,
are up.
you know,
And gross margins
this
are
gets
down,
sort of
but profits
theoretical, but
margins are up, right?
let's say that we had
And-
6%
and-
wage inflation and
but
5% CPI.
Labor.
There'd be more money in
like
people's
wages are-
pockets, but
are
would we view
fucking,
that as a
like,
inflationary period to
relatively
clamp
flat.
down on? You know,
So none of that,
because
none
we
of the
didn't
money
view
that corporations are charging
inverse
extra
as a
is going
problem,
back
if
to
you
their
will.
employees, right?
Our job is to restore price stability and keep price stability. It isn't to keep wages down. And
So it's just
certainly
just
not
you know the
to get involved in
the
trying to
people at the
establish
top
appropriate level of labor
raping
share of
everybody
profits,
for
example.
the extra
That's
you know
not the way we
10%
think about it
while
at
they
all.
can get it.
We think about price stability, and when we think about price stability, we think about wages as an important input to that. But we're not targeting a particular level of prices, and we would never.
Gherkin, I mean,
that we
tacos.
don't
Also
want
glasses
wages,
off.
real wages to go up. What we're really
Nice.
charged with is price stability, and to
What
do
kind
that,
of
we have to
tacos?
think about wages. But in particular,
That's the
no one at
American
Fed
way,
would be
Gherkin. I
upset
know.
to see the labor share go up.
But
that's
it's
not,
good.
That's not
The more
something
people that
our policy
understand that dynamic, the
that's
better.
set by globalization and the advance of technology and educational and skills and aptitude and all those things. That's what drives and productivity. That's what drives, labor share.
Yeah, and it's hard to have these conversations in 5 minutes, I realize.
Happy to follow up.
I guess what's hard is that, like, also in that 2010 to
So
2020
fucking JPA's got to
median home
follow up
prices
with
went
every
by
one of these sons of
50%.
bitches over the
We
next
didn't
2
view
weeks.
that as inflationary. 401ks went up a lot. We didn't view that as inflationary. because
10-year
those were
auction
asset
likely
increases.
effect on the market.
And so
It depends on how
as
high
we
the
have
yield
shifted
comes
the
in.
gains from,
It's
from
a big
people who had
deal
wealth
above
to people who were
4%.
dependent on wages.
Very big deal.
There needs to be some correction, and I
It's a 10-year
there
note.
because I'm out of time. But how we think about
Gentleman's
that.
time's
Thank you.
expired.
Yield back.
We'll now go to the gentleman from Tennessee, Mr. Rose, for 5 minutes.
Thank you for being with us today, Chairman Powell. Chair Powell, I just want to echo at the outset some of the concerns that my colleagues have raised about Vice Chair Michael Barr's, quote,
He's
holistic,
following up with none of them.
unquote,
Oh, I know, because he ghosted that
holistic
one guy
review,
since
unquote, of
2001.
capital markets, and also about the Fed engaging in climate policy, as well as your decision to put Vice Chair Barr in charge of the Community Reinvestment Act rulemaking.
That's just hedging, Joe.
That said, I'm going to dive right into my questions. Chair Powell, I was pleased to see that the U.S. Coin Task Force released their report on the state of
Stop
coin a
touching
few
your
months
mics,
ago.
assholes.
The report notes that the
They
Federal
can't.
Reserve
They have
and
to do
US
something
Mint will be
dramatic. They
jointly
can't throw it on the floor,
contracting with a
right?
third-party consultant to review the coin supply chain and develop recommendations to improve it. Chairman Powell, could you provide us with an update on what the Fed has learned from its review of the coin circulation issues that occurred during the pandemic?
So we know that the flow of coins, the natural flow of coins in the economy slowed down a lot because people were staying home and that kind of thing, and they may have switched to non-coin based.
Is this a fucking argument about who's got extra
we feel like
coins?
the evidence is that that's continued now.
Who gives a
People
shit?
are paying electronically and things like that, and coins are sitting in.
During the entirety of the
jars on
pandemic, I
desks
never
at
touched
home,
a single
and they're
coin.
not circulating back
Not one.
into the banks and thus to the retail stores.
I didn't see any.
And
I
so
never
we're
owned
working on
any.
that. We're working with the Mint. We're working with all the stakeholders in the coin
The
ecosystem.
coin
to try to
shortage was the
address this
catalyst
problem,
all
and we're well
along.
aware of it.
Millions,
So it seems to me
millions
that
and millions of
what we
dollars and
learned from
nickels
that is that
unaccounted
it's
for,
probably
George.
necessary to have a greater reserve of coins if there is such an interruption in the future, so that commerce is not indeed interrupted. Would you share that broad view?
That sounds right.
Are they trying to find the
expert, I will
coins to say that
it
there's
feels like
even
we
more
need
money?
More coins now because more of them are sitting in people's.
Does anybody know how many coins we
homes
have?
and
Where are
pockets,
they?
And they're not flowing back to where retailers in particular need the flow of coins. So that sounds right to me.
On a related note, could you speak about the importance of maintaining cash as a viable payment option, particularly for those that lack or don't have access to traditional financial services?
No,
we think it's absolutely critical because there are people who don't have credit cards. Many people don't have credit cards. They don't have good credit, and they need to be paying in cash. And when stores are not dealing with people who don't have cash, it's a serious problem for those.
It's
people in the
illegal.
economy.
What do you mean it's a serious problem? It's fucking illegal.
At the Board of Governors, and you see it elsewhere because most payments are now taken care of by credit cards, and it's very efficient. But we need to be looking out for people who use cash.
Nobody's.
Thank you. I appreciate that
Okay.
perspective.
Let me be really clear here.
Picking up on Mr.
No
Luke
small
Meyer's
businesses are
concerns that he
turning down
expressed
cash
earlier, as
that
you
they
know,
don't
the
have to
Consumer
report on their
Financial
taxes.
Protection Bureau's
A.
funding mechanism
B.
is
It's illegal to
intricately linked the
refuse
Federal
U.S.
Reserve
currency
system.
and maintain your business
According to Title
license
10 of
everywhere in the
Dodd-Frank,
U.S.
Each quarter, the CFPB director requests an amount that is reasonably necessary to carry out the Bureau's authorities, and the Federal Reserve must transfer that amount so long as it does not exceed 12% of the Federal Reserve's total operating expenses.
There are
For the
coffee
first
shops in
5 years
Miami
of
that
the
don't take
existence of
cash.
CFPB, of
Report
course, there
them.
was a relaxation
It's
there.
against the
with
law.
respect to that 12% cap that allowed $200 million annually to be spent beyond that number, so long as it was reported, so long as the reported excess was sent to the President and congressional appropriators. Chair Powell, during your chairmanship, has the Fed ever rejected a CFPB budget
You
request?
report them to the city council.
I do not believe so.
And
And
whoever's
could you
in
tell
charge
us
of the
what
business
policies and
licenses.
procedures are in place at the Fed to ensure that there is no waste, fraud, or abuse, or that these limits are not otherwise exceeded?
So we have no role in engaging with that. It's really what we share a common inspector general who does work on those issues, but we don't in any way. We don't have any governance of any kind over the CFPB.
Snitches get stitches.
Thank you. I appreciate that insight. In closing, Chair Powell, yesterday Senator Warren asked you what you would say to the 2 million people who may lose their jobs if the Fed keeps raising interest rates. Frankly, Senator Warren should be asking herself the same question when she voted and advocated for the Democrats' reckless spending packages that caused this inflation that we are seeing today, and is the reason the Fed has had to raise interest rates, in my view. Frankly, I would call on Senator Warren, the President, and the Democratic Party, for that matter, to apologize to
It's
the
not
American people.
it's a
for
civil
causing
fine.
this
It's
kitchen
not
table crisis
criminal.
across the country. With that, Chairman, I yield back.
What are
Now
millennials
recognize
doing
the
with their
gentlewoman
coins?
from Massachusetts, Ms. Presley, for 5 minutes.
I have
Thank you,
some.
Chairman
I
Powell,
have
for joining
quarters.
us today and for your testimony.
Somewhere.
I'm going to focus my comments and my questions on the high costs that families in my district are seeing because of your interest rate hikes. Now, while the Fed has acknowledged that higher interest rates are not the primary driver for the slowdown in price increases, you continue to raise interest rates risking not only millions of jobs, but also a recession. Based on projections from the Fed, approximately 2 million people will lose their jobs. So that's 2 million families who will struggle to put food on the table, keep a roof over their heads, and to make ends meet. But the economic hardship does not end there. Mr. Chair, I would like to request unanimous consent to submit a recent paper by the Federal Reserve Bank of Cleveland titled Post-COVID Inflation Dynamics into the record.
Without objection.
Chairman Powell, are you familiar with this publication, yes or no?
No, I'm not.
Okay. Well, let me give you some context. In this paper, the Fed's own economists predict that reaching the 2% inflation goal that you have set will be impossible without causing a recession and spiking the unemployment rate to 7.4%, which translates to millions of working people losing their jobs. Now, Chairman Powell, many economists agree with me when I say that engineering a recession to bring inflation under control is not the right strategy, especially at a time when we are seeing inflation cool in real time, independent of your rate hikes. So on behalf of the people of this country, to prevent a recession, yes or no, Chairman Powell, will you pause future interest rate hikes?
We're not seeking to have a recession, and we don't think we need to have a recession to get price stability back.
Will you pause interest rate hikes, yes or no?
I don't do yes or no on will I pause interest rate hikes. Yeah, that's a serious question, and I can't tell you because I don't know all the facts. That's not a
Reclaiming
possible.
my time. And in fact, it is a very serious question because it has a very serious implications. The people who will bear the brunt of an economic recession are our most vulnerable. We know from past experiences that recessions have catastrophic and deeply inequitable consequences. In fact, while some will catch a cold, others will catch pneumonia. But you know that. An economic cold or pneumonia. In fact, in your opening statement, you said, "We will stay the course until the job is done." To conclude, we understand that our actions affect communities, families, and businesses across the country. Could you elaborate?
I mean, she's quoting his opening
What is
statement.
this effect to communities, families, and businesses, these interest rate hikes?
Well, right now we're trying to bring down inflation on behalf of all those families. I think high inflation is hurting, particularly working families all around the country, very badly. And as you know, if you're on a very limited budget and you don't have a lot of excess earnings, when prices start going up, you're in trouble right away. People, middle and upper middle class people have more resources. So we think it's absolutely critical for the working people of this country that we get inflation back under control. And also, while we're at it, we have a dual mandate.
Apologies, Mr. Chair, I'm just reclaiming my time here. Here's the thing. The most devastating impacts will be to our most vulnerable. Veterans to our most vulnerable. Veterans, the elderly, low-income workers, black and brown workers, those who have often ignored and been neglected in the name of what you refer to as appropriate monetary policy. And yet, you assert that you will stay the course. It's unconscionable, and our most vulnerable workers and families cannot afford to wait for you to realize the harm that you were doing. In my opinion, this sounds more like the assertions of a greedy corporation than someone who has a public mission on behalf of the people of this country. One more question with my remaining time here. Chairman Powell, another consequence of your interest rate hikes has been the increase of the average 30-year fixed mortgage rate to 6.6%, double of what it was 2 years ago. Do you see this widening inequity in the housing market as a problem? And what steps will you take to make housing more affordable? This is putting home ownership further and further out of reach for my constituents, new parents, millennials, people of color, contributing to inequities and the racial wealth gap. So what are your thoughts on that?
Well, our policies do
Gentlemen,
affect.
Gentlelady's time's expired. Chairs can submit for the record or answer.
I'll briefly say that if I can, that, interest rate policies affect interest-sensitive spending very directly. When we cut rates, they help housing. When we raise rates, you see the effect on housing. So.
Thank you.
The gentleman from South Carolina, Mr. Timmons, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Chair Powell, for being with us today. We currently have $32 trillion in debt. Our debt-to-GDP ratio is 120%, the highest it's ever been. And yes, we have a debt ceiling fight brewing for this summer. I would argue it's an opportunity to get our fiscal house in order. But sadly, there's no meaningful bipartisan effort to responsibly address our debt. Both sides have even preemptively started political attacks, alleging either side wants to cut Social Security and health care. But politics and talking points will not fix our problem. Our debt is the greatest national security threat. Social Security will be insolvent in 2033, and our healthcare system is fundamentally broken. We spend twice as much as the average country per person, and our obesity rate is 3 times the average. I want to be clear, though, I'm not advocating cuts to Social Security, but my Social Security will have to be different than my father's, and we must change the incentive structures of our healthcare system. Briefly, let's go over some history. Social Security was created in 1937. The retirement age then was 65, and average life expectancy was 60. Easy to see how that math works. In 1960, Congress raised the retirement age to 67. It has not been increased since then. That year, life expectancy was 69. That math still works due to a growing population, but it's getting narrower. I will throw in another few statistics for that year, 1960. 14% of Americans were obese, and our debt-to-GDP ratio was 53%. Let's fast forward to this year. Our retirement age is still 67, but our life expectancy is 77. That math clearly does not work, nor is the program functioning in the purpose for which it was designed. And shockingly, our obesity rate is 37%, and we spend $13,000 per person on health care compared to the global average of $6,000 per person and 13% obesity rate. Clearly, our healthcare system is failing. Our system focuses on managing sickness where we should be facilitating health and wellness. We will only meaningfully be able to address the debt ceiling by focusing on the biggest drivers of our debt. Responsible policymakers should be focused on saving Social Security by reforming it and transforming our healthcare system to facilitate a healthy citizenry capable of working and being contributing members of society. The American people deserve more than the political nonsense. 5 years ago, the number one issue I ran on was debt. It has been and continues to be our greatest national security risk. I hate to say it, but the last 4 years has gotten way worse. Congress has spent $7 trillion, of which $5 trillion was done mostly on party lines. The Democrat majority has not only spent money we don't have over the last 4 years, but their fiscal policy has caused out-of-control inflation, which caused you to raise interest rates. Last year, I asked you if you ever took into consideration the impact of interest rate increases on the cost of our debt service. You appropriately and adamantly said no. Our debt service cost the next 10 years will be over $10 trillion. I'm going to point out 2 things. Number one, that is more than all of our debt service since 1940 combined, the last 80 years. And while you did not take interest rate increases impact on our debt service into your decision-making, the best estimate is that those rate increases will increase our debt service cost by $2 trillion in the next 10 years. So basically, the $7 trillion that that the Democrats spent in the last 4 years is going to cost us an additional $2 trillion.
Whoops.
And that's not factoring in future rate increases as you continue to appropriately try to get inflation under control. As you can tell, this is a huge problem. The $7 trillion in unnecessary spending in the last 4 years has caused
reading
inflation.
a book report
Some of my
in front
colleagues
of the
across the aisle
class.
disagree with that causal relationship. Clinton's Treasury Secretary and Obama's Director of National Economic Council, Larry Summers, wrote an op-ed before they spent the money and said it was going to cause inflation. And he has gone on the I was right tour for the last couple years. We need responsible policymakers to address our debt.
We all blame each other, then
Let's
vote
talk
for the
about
same
what's
bills.
not serious, and that's minting a $1 trillion coin. Many of my colleagues across the aisle have advocated for this. Luckily, both President Biden and Secretary Yellen have said that this is not a serious proposal, and they have no plans of considering it. Unfortunately, the Biden administration has a bit of a history of doing a 180 when the political winds blow. Most recently, he said he would veto the D.C. crime bill, and now he's adamantly supporting it and plans to sign it. So,
back to the
Chair
fucking
Powell,
coins.
my only question of you
What's with the Republicans
is
and
if Biden and
coins
Yellen
today?
send you a $1 trillion coin, will you accept it?
What I will say to that is that this only winds up one way, and that is with Congress raising the debt ceiling.
So you will not accept a $1 trillion coin and treat it as $1 trillion if it's sent to you?
I'll add, there are no rabbits to be pulled out of hats here. This only ends with Congress.
I know you don't like yes or no's, but if you are sent $1 trillion coin and asked to treat it as $1 trillion, will you treat it as $1 trillion?
That would be a rabbit coming out of a hat.
I'll take that as a no. Thank you. Mr. Chairman, I yield back.
Now recognize the gentlewoman from Michigan, Ms. Tlaib, for 5 minutes.
Thank you so much, Mr. Chairman. Thank you, Chair Powell, for being here. You have a lot of projections, economic projections.
I mean, it's
various
basically like
data,
he's just like ranting at him about the
various,
infinity pool,
reports that
right?
are coming out. How much, and you've studied inflation, right? I mean, obviously, it's your #1 priority right now. How much is inflation impacted by these 3 things? Corporate profiteering, egregious executive pay, and the use of stock buybacks.
So I don't have numbers, but I would say in the case of executive pay and, well, in the case of share repurchases, I can't think of how it would affect inflation. In the case of executive pay, that would be very small in terms of the broader economy. In terms of profits, though, the way I think about that is profits are high. The places where profits are really high is places where there are shortages and supply chain issues. And as those things get better, as they are, you're going to see inflation come down and even prices come down, and you'll see corporate margins come down there. And that'll be part of how inflation comes down.
So does that corporate profiteering does impact inflation? You don't have any stats of percentage-wise how much of it?
Yeah.
Because you seem, I really paid
Can you
attention
vape in
to your
Congress? I
testimony
don't
in the
know.
Senate hearing yesterday. And there was a lot of conversation about, my neighbors and residents' wages and so forth. They're finally starting to see a little bit more closer to possibly getting fair wages. It's not even far enough. But I don't know if the Feds is paying closer attention to monopolies, corporate profiteering.
We lost the
and
$1 trillion
executive
coin in the
egregious pay.
couch.
All of it, even the stock buybacks. You're saying all of that aside, you're focused more on wages and increasing the interest rate than on those other
Our focus
major-
is really on price stability, not so much wages. Wages play into that because they're an important cost for business, but they're not. We're not trying to achieve a particular level of wages. We're trying to achieve 2% inflation.
Yeah, and I think it's really important, Chairman, what we saw during the pandemic is, the wealthy and the corporations continued to profit in large scale and still do buybacks and still do really egregious executive pay and benefits and so forth for those at the top. And then, of course, the communities and such were impacted by it. But what I hear consistently is folks thinking that's the reason. All of a sudden wages are skyrocketing, all this. But all I see is continuation, again, of those that are already getting a huge benefit, the folks at the top, the executives and so forth. My friend Glenn taught me this today, that the Feds are actually sitting on, something in Dodd-Frank Section 956. You all are sitting on the last 12 years on guidance regarding executive compensation and the high risks of it. Like around, there was some sort of proposal done, not implemented. Again, it's been 12 years. Why is that something that you're not concerned about regarding inflation?
Well,
like you guys are sitting, one, you're sitting on it, right? Why?
Well,
It's been 12 years. And then 2, why is that you're saying that's not big deal? That's not going to impact the cost.
Mr. J. Powell, could we
of
theoretically
products
give
and
you
so
a $1
forth
trillion
for our residents?
coin
It's a
and
multi-agency
have you
rule,
convert
and there
them
have
to
been
pennies?
repeated attempts
Where
to
are the
get 5 or
coins?
6 or 7, however many it is, agencies to agree. That's one thing.
On disclosures?
No.
Is there a
on-
voter
it's-
base
it's
in
on
this country
policies
that's
to-
worried about
Yeah, which include
coins?
disclosures and arrangements regarding executive pay
The
and
disclosures
the risk
are
of it.
there. Anyway, 956 is, you're right, we haven't been able to get agreement among the agencies. But more to the point, there
Coin
were
collectors?
boards long since, this is just for the big banks where we have this authority, long since.
vending machine
board of
lobby.
directors are very focused
Those take
on
cards now too.
how executive compensation works and that it not reward, unnecessarily risky behavior and that kinds of things.
Yeah, but in Dodd-Frank, which Congress passed, there should, you're supposed to put something in place. And it's not in place. And look, I'm saying this because so many people in this chamber, and I feel like the Feds are more obsessed with wages than they are in regards to the monopolies, the corporate profiteering. There hasn't been any, I mean, really, I don't think there is a laser focus on that, and it's really, you know, because I think the feds and Congress can support fair wages and still combat inflation if you are fair in combating egregious executive pay, monopolies, and corporate profiteering.
We don't do competition policy, and we also don't, broadly speaking, regulate corporate wages.
This is your fucking job.
956 would have addressed it.
You're pitching your deal to the wrong person.
You should have it's 12
The
years.
gentleman from South Carolina, Mr. Norman, is now recognized for 5 minutes.
Thank you, Mr. Powell. Appreciate you coming in. I don't have to tell you the fact that housing,
Scalper's
so goes
paradise
housing,
today,
so
am
goes
I
the
right? That's
economy.
pretty nice. Yeah.
I'm from a state
Yesterday
that,
was too.
From South Carolina. We've
Not
got
even
people
scalping.
moving in,
You
the
just fucking
population's
set up
increasing.
straddles.
And I can tell you housing,
Make money.
not just single-family housing, is in trouble. People are finishing
Although
what's in the pipeline.
VIX
It's now affected multifamily
VIX
apartments.
is stabilizing in the
high
1940
rents that they
range.
did
So
get with
if we don't get a
inflation,
pump soon,
that's
we're going to probably
entirely
drop.
caused, for the most part, by the policies of this administration.
VVIX is
with
up and
gas,
VIX is still
buying it from
stable,
other
which means
countries
that
with
VIX
supply
will
chain
probably
shortages.
respond.
There's no reason to start a project when you can't get supplies, and that's what we're facing in the housing industry at all levels. So any increase in interest is just another dagger that's going to kill the housing industry, along with commercial projects that, again, the pipeline's filling up, but the pipeline, once it leaves, you're not going to have any. And I'm from a state that's with people moving in. One of the things that you hear, I think Mr. Davidson mentioned, was regulations. Banks are complaining about being overregulated and the costs associated with it. CRA, I know when Brainerd left, it's in a state of flux. Who's determining that, and when will you have some guidelines out?
That'll be done by the whole Board of Governors when we vote on it, and also by the OCC and the FDIC.
Will they have any input from those who are having to pay the price of implementing CRA? Like, get any input from banks that are having to navigate?
So I know that throughout the multi-year process, there's been a tremendous amount of interaction with banks, tremendous amount, and bank lobby groups and also consumer groups. And then, but yeah, there's been a ton of input and, you know, working with the industry to try to achieve these statutory goals efficiently. I won't say it's perfect, but there's certainly been a lot of interaction.
So they're getting input prior to implementing the requirements for CRA or the guidelines for CRA?
Yes, I think I'm pretty sure there's been quite a bit of interaction with the industry in terms of what, you know, what to do and how to do it.
Okay. Now, I think you've stated that you don't feel it's the Federal Reserve's policy to get into implementing climate change.
We're not, and we shouldn't be climate policymakers. We do have a small role, focused role to play, principally with the larger banks, to make sure they understand and can manage their climate risks in the long run.
Should it be mandated?
Should what be mandated?
Climate change policies be mandated by the Federal Reserve?
You know, I think, again, climate change is something that's going to affect businesses and people and regions and states and whole countries, and I think that's got to be a job for elected people by and large. I think what we're going to affect is we just want to make sure that banks understand and can manage the risks that they're running, and these are principally longer-term risks.
What's concerning to those of us in the business community who have to borrow for banks, the Federal Reserve is conducting a pilot climate scenario analysis that's being mandated, not asked, it's being mandated for the six largest banks to participate in. That seems to me like a pretty good, when you have to do a scenario and mandate that they do this, is that not the Federal Reserve getting directly involved in mandating?
You know, I think the banks actually want this. They want these six big banks, they have to face this globally, and what they want is uniform approaches and guidance on how to have one set of rules. They're already running, the big six banks that we're talking to, they're already running climate scenarios all the time, multiple climate scenarios.
Most of the banks are well
Does
capitalized
J-Pal need to
now.
explain
That
his
could
job
change.
20 times? Because
And this
nobody
is
knows what the
just
fuck he
another
does.
expense that is out there. On the CFPB, the history, I think you said it was 12%, it cannot go above 12% ratio. Has that, I mean, that does not seem logical to me. Has it ever been below the 12%?
If you guys
from your
could drop a like,
perspective?
that's a big help.
You know, that's,
appreciate
someone
it.
here quoted the law, and that rang a bell for me. So that is what the law says. Have they been below? I'd have to go back. I'm happy to provide. It's all
If you could, because it
Happy to
seems to me like that's a man, it's, if you've got that cap, businesses couldn't operate like that. Because it would be no incentive to reduce the price as long as it's automated.
That's the way the law is set up.
Right, thank you for being here.
Thank you.
The gentlewoman from Texas, Ms. Garcia, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Chairman Powell, for being with us today. The end is in sight. I would like to begin by highlighting an issue that has been a concern for the Congressionally Hispanic Caucus and others. I know that the chairman has suggested that we're going to weave in the diversity and inclusion issues throughout our hearings, so here goes my concern. There has never been a Latino Federal Reserve president. And further, only about 5% of the Federal Reserve's overall workforce identifies as Hispanic or Latino. As we know, over the past year or so, there have been several presidential vacancies at the Federal Reserve banks, and there has still been consistent failure to appoint a Latino candidate. Chair Powell, are you aware of this trend, and do you agree that it's a problem that our diversity and inclusion numbers are in the Federal Reserve Board are not reflective of the Latino population?
Yes, it's something we've been focusing on.
All right, and can we get a commitment from you that you'll work on the workforce issues internally?
Yes.
Well, thank you so much. And I'd like to now follow up a little bit on some of the questions from Representative Norman, because I too have a concern about housing costs, particularly as it relates to equity and the negative impact on minority communities. I think you said in your paper that activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. As he mentioned, the rates are higher, not only impacting single-family housing, but multifamily housing, and it's also becoming even more and more difficult for people in my district, which is 77% Latino, to be able to buy their first home buyer, the workforce, entry-level kind of housing. As financing homes get harder, as mortgage to find and mortgage rates rise, the population of home buyers is skewing towards older, wealthier, and whiter communities. In many cases, in our suburbs,
right?
equity firms are buying out the
volume's
housing stock.
low.
Chair Powell, can you please
just
speak
gonna
about the
slam VIX again.
relationship between Federal Reserve interest rate hikes
I don't think
and
it's
housing
slipping.
inequity, and what needs to change here?
Well, what needs to change is we need to get inflation under control so that interest rates can come back down. In the meantime, they're high because inflation is hurting all of your constituents, not just the housing sector, and all of everybody's constituents. And it's our job under the law to restore price stability and also to keep maximum employment.
Is there anything else that Congress can be doing in this respect?
That would be up to Congress, but there are lots of ways in which Congress can support people in various ways. But that's really in your hands.
Right. Now, I want to move on into the numbers that you.
I love how many
mentioned,
times he has to tell
again, in
them
your
that their
remarks at
policies are
page
their
2. You
responsibility.
mentioned that of course, we all know there's been a record historic unemployment rate. It's down now to 3.4%, the lowest, I believe, in history. And thank you, Mr. President, for that. But you also mentioned that there's 1.9 job openings for each unemployed individual. I wondered if you could tell me how you define unemployed individual. What does the unemployed individual profile look like?
So that has a very specific meaning. It's someone who is not working but is actively seeking a job. So for example, if you take 6 months off and stop looking for a job, you're no longer unemployed. So that means there's a group of people who are kind of around the edges of the labor force who don't count as unemployed. And those people are marginally attached to the labor force, that kind of thing. But to be actually unemployed, you've got to be looking actively for work in the statistics.
Right, so it does not include people who are perhaps disabled and cannot find accommodations in the workplace to be able to get a job.
Unless they're looking for it. If you, it's, the test is whether you're actively looking, I think, in the last.
Actively looking regardless of, age,
That's right.
whether or not they're.
It's not a value judgment.
Can
it's
you
just,
explain
it's the way we
protective
assess
puts?
unemployment.
It's
We
a
look at
put
the other
that you
groups
buy
too, but
that allows
actual
you
unemployment is
to
How do you factor
exercise
in
the
the people
value
that
of your
actually
shares
have
at the chosen strike,
unemployment insurance?
provided that the market moves
How do you factor
against
in
you.
the people who are on unemployment insurance?
Well,
So
they're
if you
unemployed.
buy a $25
by
protective
definition
put on
we count them
GME
as unemployed,
and
or they wouldn't
GME
qualify
drops,
under the
right?
state,
You can
requirements.
sell it and use
Okay.
it to
Well, I
average
just
down
wanna
your stock,
make sure that
or
we
you can
clearly
exercise
understand
it and sell your stock at $25.
That there's children, there's people that are older, people that are disabled, people that can't find daycare. There's so many other reasons why someone is unemployed.
Yes.
All right, thank you. I yield back.
Gentleman from Wisconsin, Mr. Stile, the Chair of the House Administration Committee, is recognized for 5 minutes.
Chairman Powell, thank you for being here with us today. Your testimony today has been insightful as we look to tackle inflation, the impact that it's having on families across the United States right now. I want to go back to a comment that
What do you
was
think
quoted
is a
to
good
you as
FUBO
regards
entry?
to,
Under
question
$1.50
from Senator Kennedy yesterday
now?
regarding the impact that fiscal policy
That's kind of, well, at least that's
is
what I'm
having,
targeting.
as it relates to inflation. And the quote that was attributed to you was that it wasn't a big factor. As we look at kind of a whole host of policies here on Capitol Hill, from reckless spending that we saw in the previous Congress, a lack of what we just discussed, individuals who are outside the labor market. How do we get these folks back into the labor market, whether or not we have policies that are discouraging folks to come back into work, as we look at high energy costs and opportunity.
That's why I drew the line.
To drive lower,
See the
to
line
drive
I drew?
energy prices lower by unleashing American energy. How do you factor in the fiscal policies, or how should policymakers factor in the fiscal policies and their impact that's also having an inflation? Not looking for your advice on the fiscal policies, because I know you want to stay out of that.
They just what they're doing is they're just waiting for put capitulation, and then when put capitulation comes in, Dork, they're taking advantage of it by buying into the momentum.
So energy
right?
prices have been coming down.
Because
right?
the
They're
market
still
maker
high,
hedge
but
is
they've been coming
negative,
down,
and so
they're
the only
contributing
way
negatively
they
to
have a
headline
chance to
inflation.
pump up
So
prices
when I say it's not contributing
is
to inflation,
if puts are
that's what I
capitulating,
mean.
the hedges
In
are being
addition, if
shed.
you look at the
So then they
aggregate
can pump
spending, it was
volume, a little bit of
peaked,
volume into that,
and then it's been coming down. So the
and
fiscal
push the
impulse
market
is actually
maker a little
negative
higher.
at this point. It's no
right, which then
longer-
drops VIX.
Most of the inflation that we now have, something like two.
If volume was higher, this wouldn't be
inflation in core
so equitable.
PCE inflation comes from the services sector, and that isn't really about fiscal policy. Fiscal policy was important at the very beginning, so was monetary policy, by the way, but now it's more about just inflation is out there, and you have to bring it down. The record is it doesn't
Am I
come down by
banned?
itself
No, you're
unless
not,
it's driven
NW.
by transitory factors. For example,
Why would you be
in the
banned?
goods sector, the supply chains have been getting better.
I
and
think we've
as
seen the
that's
extent
happened,
of downside
goods
for
inflation has
today.
come way down, and sometimes it's negative now.
Not necessarily.
I hope that's helpful.
Yeah, no, thank you. And as we're so to take that one step further, we're waiting on the president's budget. It's over a month late, but we're anticipating receiving that in the near term.
Don't delete his
And as we
message.
look at interest payments on the debt and the cash flow implications that has, not asking for what you're going to do at the next board meeting for obvious reasons, but as you are
No,
in
Carl's
those
not bad.
deliberations to future board meetings and potential rate increases, how does the impact of interest on the debt factor into the calculus of you and your colleagues?
So we don't look at that. We're not, if we started to change our monetary policy because we were concerned about the level of debt payments and things like that, that's not something that the United States needs to do, and it's not something we do.
Why would it be something the United States doesn't need to do? Could you elaborate on that?
Yeah, we're going to do our job. Congress has given us the job: maximum employment, price stability, regulate the banks, manage the payment system to some extent. We'll do those jobs. We don't have to worry about the United States budget. That is not our job. And it isn't that the debt today is unsustainable. It's that the path is unsustainable. So we can service our debts. It's just that we're on an unsustainable path, meaning that the debt is growing faster than the economy. So we would never consider. We will never look. If a central bank has to avoid taking actions because it's concerned about the budget, that's called fiscal dominance, and that's That's a thing you don't see among advanced economies, and it would be something we think we're a long way from that.
Thanks for your feedback on that point. The CBO just released their report showing potential interest payments on the debt accelerating dramatically
What's on
over the next
2025
decade,
synthetic loan
showing it
for
would be
FIBO at
14%.
$2? The last time I got
of
them, they were
fiscal
pretty
spend. To
pretty
compare that, right,
profitable.
national defense would be 13.
They're a little
Social Security is
better
also 14,
under
so
a
it's
buck
in that
50
level.
though, or
That's
at
a
50
policymaker issue,
than they are
but
at
your
2.
insights is that are helpful. I know I only have a few seconds left, and a handful of my colleagues have commented on the ongoing review of bank capital standards. I just want to echo those concerns.
I think on the
about
last
what
run
the
to
impact would be of a
250, I made
significant
like
capital level
380%
increase.
on them.
Could you just comment briefly about how you quantify the cost of higher capital in the supposed benefits, and how you balance out that risk and reward?
So it's always a balance.
I like
Exactly as you
Dirk, I
said.
like the high
We know that,
correlation
you know,
between
the-
SPX and
the,
VIX
the
though.
capital increases
VIX
that I
is getting
supported
very
back in,
sensitive to
12, 13, 14,
SPX
15, 16.
downside, which is
Earlier in my time at the Fed, they made the banks
probably
stronger,
implies
and
that
they
the
made them more
hedge might be
resilient.
getting a
And
little
you really
stronger
want
there,
that-
or
you
at
want
least
a
the
banking
hedge is
system that can
stronger
stand
above
up and keep doing its
1950.
job in times of crisis.
Once
So-
it starts to get into that
But the
fat fucking
exact
chunk of
balance
call
between
volume.
that and the availability of capital and the cost of capital is always going to be a matter of judgment.
Thank you very much. I yield back.
The gentlewoman from Georgia, Ms. Williams, is now recognized for 5 minutes.
Thank you, Mr. Chairman. As the member of Congress representing Atlanta, the city with the highest racial wealth gap in the country, I'm focused on creating an economy of inclusion, an economy that works for everyone and brings the most marginalized into our economy. Americans and Atlantans flourish when the economy works for everyone.
Have you taught them about zero
The Federal
DTs?
Reserve has a mandate of maximum employment that is measured by analyzing various data points of economic conditions. In 2020, the Federal Reserve updated its approach to fulfilling and measuring this mandate to include job growth that was broad-based and inclusive. Chairman Powell, do you agree that broad-based and inclusive growth means job growth that helps reduce racial, employment, unemployment, and wage disparities?
I think it means what it says. We don't target any particular. We can't really target a particular racial or ethnic group with that, but we like to think that our decisions are informed by an understanding of diverse groups across the economy.
Well, Chairman Powell, could you share examples of how the Fed is including broad-based and inclusive job growth in the maximum employment mandate?
Sure, I'd be glad to. So one thing we do is we always, it's always part of the data that we look at each meeting. We always talk about it. We always mention it. Different unemployment rates and labor force
SPX channel
participation rates,
tapering?
wage rates, and things like that by racial,
barely.
ethnic, gender groups, and that kind of thing. That's always in the data that we look at and talk about. That's the first thing. So it informs our pursuit.
That might
of
just be
maximum
like the
employment. We're trying to
effect
take a
of the
broader,
log graph.
more inclusive understanding of what that statutory goal means.
Thank you. 2 weeks ago, the Federal Trade Commission released data indicating that Georgians reported the most fraud and scam claims of any other state in 2022, amounting to millions of stolen money. The Federal Reserve's website has resources to help consumers protect themselves from scams where criminals leverage the Federal Reserve's name, including emails claiming potential victims are eligible for lottery winnings, robocalls threatening arrest in exchange for money, and other phishing communications. Chairman
fuck does
Powell,
this
how
have
does
to
the
do with
Federal
the
Reserve
Fed?
measure whether its counter-fraud communications are reaching the most vulnerable households and communities, especially those that might not be following the Federal Reserve press releases or your website or have limited access to broadband?
Oh, fuck off. I grew up in a
When
poor
those kind of
neighborhood. No
scams
one
happen,
answers their
particularly when they
goddamn
involve
phone.
us, we go on social media to try to reach people and tell them that if they're contacted by someone pretending to be a Federal Reserve person, that's not. So we do that. We work with our Inspector General who works with law enforcement to make sure that law enforcement's involved. So we're aware of these scams. I think you're talking about the ones that involve people pretending to be a Federal Reserve person and get in touch with me and we'll send you some money. And so we do what we can to reach out to the public on that.
So that is
New
that
bank,
after the
who
fact,
dis?
but what happens before so that the general public is aware that this is happening? For
What a
those
stupid
people who
fucking
are not
talking point to
on
bring up.
social media or tracking is there another way to get this information out to the general public?
It's real. We do what we
you
can.
want mailers?
We're not an institution that deals with the general public very much. We deal with banks, and of course our rate hikes and rate cuts, our monetary policy affects all Americans. But I think when something like that happens, It's a broad program. It's a bunch of people who are perpetuating a fraud on many, many people, and we try to get out there quickly and try to reach people, and again, also alert law enforcement.
Thank you, Chairman. And Chairman McHenry, I yield back the balance of my time.
That is very kind and gracious of you. The first of the day. We need to commend that for the record. With that, we'll recognize the gentleman from Pennsylvania, Mr. Muser, for 5 minutes.
Thank you very much, Chairman McHenry. Thank you, Chairman Powell, for being with us. Chairman, is the Fed's commitment regarding ESG not to force investment banks to renege on their fiduciary responsibilities?
We don't actually have policies in effect in that space. That's not an assignment that we have.
You saw some issuances by heads of some investment banks, not to mention any names, that felt that was the case.
That the Fed was asking them to, we don't.
SEC, Fed, you stated a couple of minutes ago that you feel that some sort of ESG, you stated that banks want it. And
I'm talking, no, that's different, completely different. It's regulated financial institutions that we regulate and supervise. They're subject to, particularly the big ones, are subject
so
to
the Fed,
climate change.
You agree that
climate
the Fed
change
won't,
issues all over the country.
won't ask banks to renege on their fiduciary responsibilities. The Fed won't do that.
We don't regulate the investment banks. The SEC does.
Okay, so the answer is no.
What's the question again?
I'll move on. Earlier, some of my colleagues and Chairman McHenry questioned the holistic review of the capital bank holdings. This holistic review, which no one has seen, according to my sources, but there are published reports that it will call for more capital to be held by banks. I understand the deferral to Vice Chair Barr, but do you have any thing that you could add that would warrant a need for large banks' capital increase?
So there isn't a proposal to evaluate or talk about yet. Vice Chair Barr has indicated he was going to take a look. He said he thinks capital is strong.
Fix that price
and the
up?
question really is it strong enough? And I know he's been working, and there'll be a process when he does arrive at conclusions. He has no authority to enact something himself. It has to go through the Board of Governors, also through the FDIC and the OCC.
Okay, this has nothing to do with the
Transparent
QT.
process.
I'm sorry, with the QT initiative. The
Is their
tightening of the money
government more
supply.
regarded than SS?
They're not
Equivalent,
related at all?
at least.
No, I would say not.
Are you comfortable with the QT reductions which have taken place?
Yes, the balance sheet is, we have the balance sheet moving down at a healthy clip, and it seems to be going pretty well.
Okay,
Very
so
well.
the Biden administration's fiscal and energy policy has caused trillions in deficit spending, as you well know, very, very excessive trillions. Meanwhile, energy costs for the average American have, from heating oils to gasoline, have increased by over 40%, and businesses, of course, in just over the last 2 years. So high energy obviously affects the cost for manufacturing, wages, general cost of living in almost every aspect of society. Would not such fiscal and energy policy work of the Biden administration working hand in hand with initiatives such as QT and initiatives of the Fed be far more effective than the Fed fighting inflation on your own?
Well, I mean, we are the agency that has the responsibility to restore price stability, and we just have to do it. That's the task we've been given under the law. It's great if Congress helps. It's great if the administration helps, but we have to deliver it, and we will. That's our responsibility, which we fully accept.
We're not risking stagflation if the fiscal policy and monetary policy are working against each other?
Again, we don't comment on fiscal policy. That's for elected people, and we have a job, maximum employment and price stability. We use our tools. We try to stay in our lane, stick to our knitting.
It's just the fear of a number of people that we're going to have high interest rates and higher than 2% inflation if there's not that level of fiscal and monetary cooperation.
Again, fiscal policy does what it's going to do. We take that as exogenous. That's the fiscal policy will be what you and your colleagues do with
VIX call sellers in shambles.
And that comes into the economy, and we see it, and we don't have a view. We don't try to comment on the decisions that you make, and we use our tools to restore price stability no matter what happens outside of our building.
Sure. Okay.
I mean, a period of stagflation,
Gentleman yields back. We now
sustained
recognize the ranking member of the
stagflation
Oversight Subcommittee, Mr. Green of Texas.
is
for 5
difficult to
minutes.
achieve.
Thank you, Mr. Chairman.
Especially with markets
Mr. Powell,
as
for being with us
efficient
today.
as the U.S. markets.
I greatly appreciate
We would probably
your
just
work.
sustain a crash, right?
But I would like to take just
stagflation
a
would be
few
over.
moments to talk about how our legislative bodies have legitimized systemic racism.
You're the part of the legislative
Been
body.
done by having a Fed.
Federal
that has a
Reserve is not a
responsibility
legislative
to
body.
Produce maximum employment.
I do like this guy's voice.
Knowing that the 2-to-1
Very soothing.
black-white gap, wage gap exists. Traditionally.
Lack of a pop filter is
And
really
also knowing that traditional
doing it for
actions and
me.
methodologies will not change that. But yet, we won't give you the authority to make recommendations or to take actions that would directly target that. It's not your fault. It's the legislative body's fault. We perpetuate systemic racism in your mandate of maximum employment. We also perpetuate it in lending because we know that invidious discrimination exists in lending. We know it exists. And there are laws that will prevent and punish persons who cheat banks. You will be prosecuted and you will be fined criminally if you cheat a bank. No such law exists if you cheat a customer. And we know that black people who are more qualified than whites will get less money when they get a loan and pay a higher interest rate. These are all things that are the case. They're true. So legislative bodies continue to legitimize systemic racism. And the bodies have become so bold now, so many of the members, they're so bold now as to say they're sick and tired of hearing about this. They don't want a discussion about racism and systemic discrimination. They believe that all is well as long as all is well in the white world. But many, they won't say it that way, Mr. Powell.
Is his name actually
That's
Al
the
Green?
way their actions would lead
Real
one
talk,
to
how are the
conclude
captions ahead of the spoken
they have
audio?
positioned themselves.
I don't fucking know, man.
Many of these people are my friends.
NVIDIA's predictive.
People that I associate with,
Predictive,
talk to regularly. But
captioning.
There comes a time when you just have to be truthful. Systemic racism can be eliminated. It can be dealt with. We know how to.
What is it, dork?
But we don't have the will to do it. So I don't fault you. I don't fault you. Not one scintilla of blame would I cast your way. It's the legislative body. It's the people who sit on this committee who won't allow laws to be passed, making it a crime to deny a person a loan who is qualified to get that loan. People on this committee who will say they don't want to hear anymore and encourage persons who are professionals, experts, encourage them to push back against talk about invidious discrimination. Systemic racism emanates from the legislative body. And you, sir, are in a very awkward position because I genuinely believe that you'd like to do something about it, but you can't. Creates a sad state of affairs. I thank you for the time, Mr. Chairman, and I yield back.
Gentleman's time has expired
Wait,
and yields back. The
was there
gentleman
a
from Wisconsin,
question?
Mr. Fitzgerald, is recognized for 5 minutes.
Chairman, thanks for being here today. Probably get right under the wire here. I just had one, and some of my colleagues have touched on this today again, that there's certainly, I think we're well aware, I'm well aware, that there's a dynamic back in the district and across this nation. There's a certain segment of adults, 25 to 35-year-olds, many of them dual income, no kids, and they are completely froze out of the housing market right now.
No, I'm not.
Either because the cost of a home at a new subdivision in any municipality is $500,000 or more. And as a result of that,
Get creative.
it's not only by actions of the Fed, I think, on the interest rates, but certainly the other thing I wanted to bring up, because the balance sheet at the Fed
That's not
has
true.
gone from $4
I
trillion
made
to
$30 in YouTube revenue yesterday.
post-pandemic.
Fuck you, Brett.
Could the Fed, by no longer buying mortgage-backed securities, in a smaller universe of the private sector buyers who demand a higher rate of return, right? Is there not another kind of built-in trigger there that mortgage rates are going to continue to go higher, unrelated to what the Fed does? Because
Start a
I think
YouTube
the
channel,
concern
sell
is
access to your Discord
that
tours.
between the dynamics of no new subdivisions,
But the YouTube channel's free.
25 to 35-year-olds unable to get a loan, and then interest rates continuing to climb, all of these factors are just, we're going to lose a generation of adults here that are never going to get home ownership. They're never going to benefit, which we all know is the big wealth builder for any family. So I'm just,
That's 'cause people
if
are
there's
stupid
anything I
and they
take
think
away
real
from what we
estate's a
heard
good
today and the
investment.
questions asked, I hope that that is something that the
Don't
Fed
start with
is-
me, homeowners.
is in tune
okay?
to and is looking at
Your
closely.
equity's fucked.
One thing is that the challenge with supply nationally, and that's zoning, it's people, it's materials, and so the housing stock is constrained to some extent by just harder to find zoning anymore because things are so built up in so many places, and those are not things that we can control. In terms of our ownership of mortgage-backed securities, what happens with them is they mature.
Homeownership's a
they're
terrible investment in
prepaid or
popcorn
prepaid,
trader.
and they run off on their own. That's a passive sort of way to shrink the balance sheet. And of course, they don't run off very quickly when rates are this high because people are not refinancing their mortgages because they have much lower mortgage rates. So, there's no evidence at this point that, that the market's having a hard time absorbing.
Okay, good. That's
the
nice.
supply of mortgages because the supply of new mortgages is very low. It's probably right, it has to be right, that when we're no longer buying
I'm up
mortgages,
300% on
and we won't be, we're
GameStop
not
shares I
buying
bought
mortgages
last year.
now,
What's your
and I hope
point?
we don't have to buy any more we don't buy individual, we buy mortgage-backed securities. I hope
It's
we're
not even
doing
a good
that
company.
anytime soon. We only do that in
Your house is probably nice.
severe situations. That they're, the fixed income markets are gigantic, and there's a lot of buyers out there, and where there's a yield, there'll be buyers. And I think I expect that'll be the case. It might, not that it wouldn't have some upward pressure on rates for us not to be a buyer anymore, but
It's more than 300%.
we weren't a buyer for a very long
It's
time.
like, it's close to
We
that.
thought we'd never go back in after the global financial crisis, and we kind of had to after the
600%,
pandemic financial crisis,
whatever.
just to keep the markets working, and now we've stopped again.
Good, thank you very much, Chair, and I yield back.
Gentleman yields back. Noteworthy. I want to thank.
GME's a good
particular
company. What are
members,
you
Mr.
talking about?
Fitzgerald,
I've
Ms.
never heard
Williams for
Matt
their
Furlong
additional
say
minutes back to the
artificial
Fed chair.
intelligence once.
In a rate environment like this, time
Wall
is
Street
money, and
Journal
it's much
told
more
me if your
valuable
company's
these
not
days.
cranking out soft
I'd like to
goods,
thank the chair for his
what
testimony.
are they doing?
Without objection, all members will have 5 legislative days within which to submit additional written questions for the witness to the chair, which will be forwarded to the witness for his response. Ask you, Chair Powell, to please respond as promptly as you're able. And with that, the hearing's adjourned.
Thank you.
NFTs, same like soft goods? No. Thank God that's fucking over. Holy shit. That was, maybe the market can move now. That was a colossal fucking waste of time. But you have to, you almost have to watch, because the market's hanging on every fucking word. If one legitimate question about monetary policy had been asked in the entirety of that fucking meeting, the market might have reacted. NVIDIA caption AI would front run us. All right, I think I figured it out. You can't say the words elected or appointed. Going with elected. Going to be an overzealous shadow ban filter for political phrases. I wonder if it knows to engage when AI sees a political video on the stream. I don't know. What the fuck? Maybe? I'm not really sure. You're not shadow banned though. You said something before. I mean, Dork deleted your comment, but that's just because he likes to stir shit up. 3.9 10-year. Oof. Fuck. I'm glad I got rid of my calls. All I know is this fucking like chop is super profitable. $10 fucked. VIX up. Oh. Hold on. These are all backwards. I need to move these. I don't like where these are positioned currently. Ugh. Oh yeah. Sometimes you guys ever just take your headphones off and give your ears a little tweak? It's nice. These are pretty comfortable headphones, but it is over. No, you should try. It feels great. Jobless claims more important or non-farm payroll data on Friday. Jobless claims are irrelevant, actually. They're a week over week data point. They don't mean shit. The two data points we got today from ADP and JOLTS were actually important and had minimal effect. Non-farm payrolls and unemployment are important on Friday. And then next week, obviously, CPI and PPI are the most important because people are stupid and don't understand the correlation between the two. My over-ear headphones don't touch my ears at all, and I have big ears. It's great. Yeah, these are they rest gently against the ears. I don't know if I have big ears. They're decently sized for my head. But this one's like fucked up on the top. So usually headphones, like over-ear headphones, hurt them a lot, but these don't. So they also have cooling gel in the pads, which is, whew, it's nice. You got that boo-boo? I got fucking rocked in the side of the head, and it split my ear when I was like 21. Dude fucking hit hard. These are Audio-Technica 8700X, but then I replaced the ear pads with like aftermarket ones that are cooling. Did you deserve it? Yeah, it was just like, I was just taking like Muay Thai classes. These are old set of Sennheiser, roughly 6-7 years now. They're amazing still. Sound and quality 9 out of 10. Comfort 10 out of 10 with no ear pressure at all. They do feel heavy after a long time. Interesting. Yeah, these are very light. They're open backed, so they breathe pretty well. I don't have a lot of noise in my like apartment, right? Because I'm by myself, so it's not too bad. Mine are gold backed, and inflation has not been a problem. When you go synthetic long, do you consider selling CCs on the call side, or you just get out of the position on an appropriate move up? Considering GME CSPs in the 2030 range and 15C for 2025 on a dip. Okay, listen, if you sell CSPs in the money, your chance of assignment on a standard stock is very high. So understand that, like, there's no guarantee that you won't be assigned in due course on in the money CSPs. On something like SPX that has European settlement on the options, they're far safer, right? So that's a factor you have to remember when going synthetic long. Also, $20 and $30 is way the fuck deep in the money to be selling CSPs. Is that why you do 2025s? Yeah, frequently, because the chance of assignment is lower. But if you get a bad fill, you can still be assigned. People need to understand the risks with synthetic longs, because they exist. You know, it looks real great when you're like, oh, I can go long as shit for, you know, very little upfront capital. But remember that you have leveraged downside. So you have to be very, very certain that you're near or at a bottom in the current price of the asset. They are not a safe position to take. Or extremely okay with buying shares at a premium. Yeah. Well, you've received the credit, so the premium complication is like if I sell like 100 GME CSPs in the money, and then I use that to buy like 2x levered calls, I can buy, you know, 10,000 shares of GameStop, right? Like, that's not a problem. Make sure that you're in that position before you start considering selling, you know, any synthetic long positions. And then you definitely don't want to sell them at an extreme premium to spot, right? So, you know, if like GME trades down to, let's say in the next few days, GME trades down to like $15, right? I wouldn't be opposed to selling like 1750 CSPs, right? Because then I get, you know, I get that 250 premium, you know, in addition to, you know, the theta and extrinsic value. Right. And then I can use that to lever, you know, into calls at the same strike, right? So I get to buy a lot of leverage for very cheap. But if you know, GME drops to 13, the chance of me getting assigned on these is very high, right? And then suddenly my premium doesn't cover this gap. So now I'm out the premium that I've already spent, plus the cost of the shares. We're gonna pick up those 40-30 calls. It's looking less and less likely, isn't it? They don't seem to be winning. VIX is going up, and the market maker hedge to the downside is getting stronger. All I heard was GME to 13. Well, that's because you're you, Rims and Tims. Because you're you. Somebody posted like a Tosh point, like a Daniel Tosh stand up from a long time ago. That's really funny. But right now, theoretically, 98.6% or 96.6% of Americans are employed. I don't know 9 employable people. At all. I mean, out of everyone in this Discord, the quant team's like 7 dudes. You're not even employed, so that makes 10. we have Native Americans. We have a bisexual ginger cat. There's me. No one knows what I am. Am I Persian? Maybe. Am I a centaur? How dare you? Run a poll. Are you employable? I wonder how honest people will be. I'm paying someone to rewrite my resume right now just in case. No. Employable's not same like have a job. Employable is should you have a job. If you're being completely honest with yourself, should someone have hired you? And I'm going to go with if you're in here while at work, the answer is probably no. Okay, well, right? Are you my boss? Restart the poll. I'm offended, but it's true. I own a crypto company. I'm CEO. Oh, God. I'm listening to you on vacation in Maui. Employable, yes. Good husband material, questionable. Okay. I get unemployment bucks from the government. Nvidia to 180 in March, and most of us won't have to be employable. Fair. Opens trench coat filled with NFTs. Does drinking on the job make me more employable? Nautical, I'm a yacht. It does not. I own a restaurant that makes food, I think. Okay. Let me rephrase this. I'm gonna rephrase this poll. Oh, I never said I was employable. I'm absolutely not. I have almost no respect for authority whatsoever. And I'm hostile and confrontational. And we like it. I have 2 jobs and frequently think I wouldn't hire me. Is having a job a reward or a punishment? I guess that's how you, depends on how you view it, right? If you're an employer that is, not a prick, and you pay people like a living wage, maybe you have a different opinion on that than if you're an employee that has to work to pay your bills, right? I think the true poll is, would you hire you? That's too introspective. I don't want to scare people. I blame you and your 8-hour-a-day stream for my unemployability. Okay. I'll take the blame. I'm self-employed because I can't work for anybody else. Gaff is employable because he only joins the stream at lunchtime, right? He's very responsible with his work-life balance. If Kendra's here, dude, the answer is no. I only work because I like people calling me handsome and tipping me. Are you a male stripper? Don't answer. Leave it a mystery. Could we fall through the collar today? We already fell through the collar. The collar is at 40.65. When you said that your job is a hedge for your trading account, it changed my life. Did you skip my super chat? I might not have seen it. I got promoted to a senior position at a company that just did layoffs while watching the stream. How dare you imply we aren't employable? I got promoted to a different type of work right when I started watching the stream, so my metrics have never slipped, and they just keep paying me. The amount of people in here not actually doing their jobs is shocking. I love it. I've also been promoted since watching this stream. Will tomorrow's 30-year bond drop the market if it comes in close to 4%? Man, if the 30-year goes above 4%, real estate is fucking over. Did I say that in a strongly worded enough way? I think so. Risk-free on 30 years is 4% is significantly better than loaning money out for mortgages. So the credit market will fucking dry up. Because sure, you can loan a mortgage out right now. What's the rate? 6.7, I think now. but you're taking on the risk of default, right? But if you can buy a 30-year bond at fucking 4% with zero risk. Also, you're not financing houses into a falling equity market, which is another issue. AI will fix home loans by cranking on it softly. Okay. I'm self-employed and my boss keeps sexually harassing me. What do I do? Have you tried thinking about baseball? I did more than one job interview with the stream mixed into my headphones on low volume just to keep track of stuff, except an offer from one of those jobs. Do they know what they're getting? When do you think we will have foreclosures ramp up? Probably not until unemployment picks up, right? I literally received a bonus for exemplary performance this morning. Now only if I could get my trading account to do the same thing. When US government services their debt, aren't they just paying most of that to the Fed, which is just a private company? Effectively. What's up, Kirk? Barry here. What's up, Barry? My state's government pays me to come into an office 3 times a week and listen to the stream. It ain't much, but it's honest work. Can you clip the last 15 minutes, please? Sure. Unemployable for 18 months now. Also, somehow getting a promotion next month. Maybe your edutainment is doing more than teaching us how to YOLO into the best degen options. Thanks, Kirk. Thanks, Tim. And congratulations on the promotion. I don't currently have any spy puts. Have I missed my chance to get in? No, probably not. There's a lot of room to the downside on the market currently. What's for lunch? I don't know. I should eat something today. I forgot most of yesterday to eat food. And then I ate, well, actually, really good food for dinner. But tell your boss that they are right and you are in love with them and you want a real commitment with a prenuptial agreement. Get really psychotic. If we stay at this level, maybe 3,900 to 3,800 with data and SLD next week. That's possible. Yeah, I could see that range occurring. I don't want to say it though, right? Because then people do stupid shit. Like they're like, well, I'm going to buy some 3850 puts for next week. And then that's how Popcorn Trader's wife ends up calling me at midnight and saying he lost all his money again. And he has to sleep with the goats. I thought about it last year. Your stream makes work tolerable, so I'm sure the viewers have greatly increased their attendance rates, which in today's market is promotion worthy. Interesting. So because they listen to the stream all day and don't actually do their jobs, well, mostly don't do their jobs. Let's say productivity is at an all-time low, but attendance is at an all-time high? Huh. So you're telling me raise the price of Dillionaire? I've done such great work in my 3 days a week in the office that I'll be getting a raise in 2 weeks. The job provided me with health insurance and the ability to scalp SPX options. All right. I made 50% of my annual salary in Feb trading. I don't care about my job. Okay, fair enough. No, I did not say anything about 3850p for next week. My viewership is sponsored by the US government. Oh, are you a federal employee? This is true. Since I became a Dillionaire and learned how to do my own stock research properly, I'm on the work computer from 7 a.m. to 7 p.m. at least every single day. Thanks, my back hurts. Yeah, if you wanted a life of not staring at screens, this probably isn't it. Newsflash, Tesla to pump because NHTSA initiates investigation over steering wheel. That was this morning. The detaching steering wheels. My company monitors what software I've opened, so I have a blank Word document, and I roll my face across the keyboard once every 30 minutes while I watch the stream on an iPad. Perfect. I was able to manage my positions well and broke even. I'm becoming a trader. Yep, that sounds like it. Shaven Balls is an FBI agent, not just an FBI agent. A trusted one. I was hired for 2 new jobs and have more than double my salary since discovering the stream, all while working from the comfort of my home dumpster. Well, you know, home is where the heart is. How's SPX OI looking? Bearish? I'll let you know if it changes, but right now, like 39.75-ish? Maybe lower? Yeah, concentration's still at like 39.75 in this range. 39.65 is building up some decent interest. 39.50 kind of taken off too, actually. Yeah, if we hit like, man, the zero DTs are kind of going crazy to the downside. I like it. Let's go. I was talking about where the concentration of the gamma is. Oh, okay. Why does SPX fall and NVIDIA stay up at highs? NASDAQ is performing a little better today than SPX. If NASDAQ starts pulling down as well, then NVIDIA will fall off harder. For all the people who work from home and don't do anything but watch the stream instead, they should get a second simultaneous work from home job and do nothing there. 2 port hedges. Genius. How many work from home jobs can one person have? $2.9? That seems hard to facilitate. We better have some motherfucking likes on this motherfucking stream. All right, that's not too bad. A baker's dozen, I believe. I mean, if I was not doing this, I would try to get as many work from home jobs as possible. I read somewhere there's a guy that got 5 jobs as a software developer and got paid for all of them. That's fucking awesome. I super like you. Thanks, Dr. Cyborg. Since watching the stream, I've become the CEO of Twitter. It really depends on meeting requirements. Once they want to do a lot of stuff live, you can get conflicting timing issues. I've done it twice and it worked out okay if you can control scheduling. Okay, that makes sense, yeah. Beige book's not gonna matter too much. Have you cut the call side of your straddle? I cut it earlier today. I had an opportunity for a while to do a work from home job while at my office job. That's impressive. Right? I have a friend who's a data analyst working for 2 companies and plays games most of the day because he automated most of his work. He doesn't pick up another due to scheduling concerns. Smart. All of this is why we have a wage price spiral. Well, if any one individual job paid enough, then people probably wouldn't be seeking out second, third, fourth, and fifth jobs, right? $39.50 end of day? I mean, there's enough interest there. Interest at $39.50 is quite high. I wouldn't be surprised. I think if we fall through 39.65, it's a pretty straight shot to 39.50. This might be the last point to hold the line for the upside, and I think it'll slip. Which means we may see VIX above 20 again today. Yeah, we still have like 2.5 hours. Nobody with a home should try to get any job that doesn't allow you to work from it. Work from home is the perk to have. No one is seeking more jobs. No one wants to work. I mean, that can't be true. I've had jobs that I liked doing. Like I wanted to wake up every day and go to work. I don't think it's true that there are people that don't want to work. Like I do this every day. It's essentially a job, right? It's the job I want to do, but I mean, I wake up every morning, I like on time and usually show up here. I mean, it's still work. It takes effort. You don't even like us, so what does that have to do with anything? But some people like their jobs, is what I'm pointing out, right? What job besides trading did you wake up and want to go to? Okay, well, that's not a fair question. Place the qualifier beforehand. I will not. I don't love you. I hate to hate you. Okay. I mean, I still think that if you're persistent enough in most parts of the US, you can find a way to make money without being employed by someone. And also not being a drug dealer. The question is, can you make money doing something that you want to do? That's piece of shit. Yeah, hold on. I'll try to fix it, but it's probably going to crash again. Yep, it's still working. What if I want to sell drugs? Okay, well then, you know, that's your choice. I'm starting a 5K port challenge with my cousin. I started as a 10K challenge, but for me now it's a 5K challenge. All right, well, you know, good luck. Are you still only using 2 monitors like a shill? I have a third one, but I don't ever use it. It just sits here. I don't even look at it. I want to be a farmer. Okay, so grow stuff and sell it to people. I've always wondered and must know the question to this. Are your real life friends with any of the online personalities in here? I don't think so. God, I hope not. Being a bear is really, really nice. Hashtag Kendra for mod. Thanks, adopted by the Dans, and absolutely never. What if I want to buy drugs off that dude? Well, that's a conversation for you and that dude. Your curse is that you're strongly anti-drug, but you don't look like it. I'm not strongly anti-drug. I just don't do them. I don't like them. They don't do it for me. Use your third monitor to restream your stream and comment on it. Streamception. Interesting. Do you have any updates on SPX of the day? Sorry if you said it recently. I was at work. Yes, it looks like a big pile of shit. It's also looks like it's heading towards 39.50. Did absolutely nothing for this milestone. It's same like work from home. Same like pigeon whale poor subsidies. I was the COVID Tinder date. I did not know Moonwin, personally. I'm installing a new wall mount TV in my home office so I can stream you instead of wasting one of my screens. Anyone else have a dedicated Pi-Fi TV? I can't be the only one. You don't have to answer that, everyone. But feel free. Have you discussed on stream what you and JFresh were modeling with MATLAB on Discord last night? No. No, we haven't come to any topographical conclusions yet. Come on, you know you blast off on DMT whenever you write Pickles picks. That's the only way to see the future, Dorg. Use your other monitor to watch your streams so you can like your own stream and get those likes up. That'd be lame. Imagine liking, that's like liking your own tweet. Gross. All these monthly high dividend stocks legit. ORC, ARR, SJT, ALPS, EFC, QILD, DX Horizon seems off? No. What seems off about it? I mean, some of those are just like investment funds or you know, they like service debt and shit. QILD definitely isn't returning 10% a month right now. Right? Has your end of quarter price target wavered or still looking at 3,800 target? I'm still looking at 3,850 as my conservative, or 3,885. What was it? I gotta look at the chart now. $3,885 is my conservative low. It can go below that, but it might not. And also still dependent on data that's yet to be released. So theta is still of a paramount importance. I have a Pi-Fi fleshlight. That's awesome, man. I haven't got a dedicated Pi-Fi TV. It's for my dead mother-in-law. So it's kind of like you're haunting me. That's pretty exciting. Back in my frat days, we had Bro and Tool of the Week stories on Sundays. On your Sunday stream, can we do Bro of the Week with screenshots of best weekly percent trades and a Kendro Tool Award for best Kendro-esque story of the week? That sounds awful, Paris. I don't want to do that. That sounds like a thing that would be like I would have to keep up on it. Hmm. Thanks, Clint. Check out the 10-year. I mean, it's fucked. Check out Bank. Did you see what Bank did? I know you're watching it. Doesn't the long put on the collar always end up in the money? It happens pretty frequently. It doesn't need to end up in the money. It's just a hedge. If you're up on SPX 317 puts, would you hold until next week or reposition? They're not in the money. I don't know. I wouldn't reposition in the middle of this downtrend, probably. 317. So you're running out of time. I mean, I would probably reposition them. Just get rid of that additional layer of risk, right? I don't know how far out of the money you are, so it's hard for me to weigh in on it. I've been holding back my bank comments for fear of retribution. What does bank tell us? It's just an index for banks. Are we going to 39.20? Probably not today. What happened the last time the 10-year was here? Bad things? Take your third monitor, put it behind your you streaming your stream, sneak out of frame, keeping your stream self on the monitor, then you can pick up a second job. Oh shit. P.S. You're obviously extremely ruggedly handsome. Thank you, Baradactyl. I always appreciate you weighing in on my handsomeness. Do you think SPX will test October's lows anytime soon during this year? Granted, there's no Black Swan event. Yeah, I think that's more than possible. What's on November 11th? I haven't said in a while. Deserves to be said. I love this stream. Hit the like button. You know you love it too. Thanks for all you do, Pi-Fi. I'm slowly getting better at this. Nice, man. Only calves can be your second job. You just need a camera on the floor while you stream. I'm going to charge so much for memberships. Missed all day today so far. What's our ballpark ceiling on SPX? How far could put selling take us? Do you expect put capitulation? Not currently. Before Friday's data. As always, thank you for your skills and patience while working with a mentally disabled, formerly known as the pickle jar. As always, thank you for your consideration. Right now, I don't think we're going to see a lot of put capitulation. The majority of positioning still below us, especially on the 0 DT side. Actually, I think if we drop a little bit more here, ideally under 39.70 and hold, there's quite a lot of downside room still. I love the stream. I haven't improved at all, but that's my own fault. Well, you never did get approved for options. $39.70 SPX equals $20 SPXS. I've been noticing a lot of support there. Okay. I have 3800s that expire 331, down 50% still after that overnight spike days ago. So couldn't get stopped out. Smart to roll for fewer contracts at April 21. It could be, although have you done the math on what price you need to hit right now for the contract to go profitable? So you don't roll at a loss? And how much of that is the effect of the VIX being lower? I think that should be probably part of your consideration as well. Think about closing a SPY 405 expiring Friday today instead of holding another day. Reasonable profit instead of risking an overnight pump. Sure. It's always reasonable to take profits and reposition. You could probably, given how deep in the money you are, you could probably take profits on that contract and reposition while still not deploying all of the capital gained, right? So you can take your initial risk probably almost off the table entirely. We're at the October uptrend resistance line. Yes. Any thoughts on NVIDIA and its sizewayness? I mean, it just broke down below VWAP. Give it time. NASDAQ is pretty strong today, so. Fubo 25s, 150 CSP are quite tempting. What's the yield on them? Right now. 1.5. I mean, 1.5's out of the money. In the money is like 65% yield. Out of the money is like a little over 50%. Yeah, put skew isn't that bad yet. I'll never like this stream, you homewrecker. Fair enough. Why did you retract your message, NW? Thoughts on FSLR? Still holding these levels through the volume drop significantly? I mean, I don't care. I have like really far dated puts. It's whatever. It's down today. It's down 1%. It's a good start. Everything bounces again. Wow, they just slaughtered the VIX. Holy shit. If a stock trades 10x its free float, is because there is a better chance it's creating or covering FTDs. Sure. I mean, it's not trading its float, its turnover is high, right? It's just churn. It could be due to high options interest. It could be due to a lot of factors, really. Doesn't have options. Sounds like probably the DMM then. Are you talking about that fucking shit penny stock Turka? Are you holding bags on it? It's not gonna short squeeze. It's a piece of shit. It's on NASDAQ. It's got an automated DMM. The liquidity provided by people fucking dumping it on retail bag holders will probably more than sufficiently satisfy any short positions that were taken at the top. Turka also has a shelf offering and warrants they just issued. Every fucking time. If it's on that piece of shit subreddit r short squeeze, it's probably not worth ever buying. You could be green on a lot of stocks without buying actual garbage. Can you discuss when it's appropriate to roll a position versus just closing and reopening a position? Well, if you think there's going to be continued price action in the direction you're betting on, and you've run out of extrinsic value to gain, then you can close your initial position and reposition to capture the continued movement, whether it be up or down. I put my Rev hype video on our short squeeze and I got tens of thousands of views. So it's your fault. You killed Revlon. Thanks, Hazy. What platform do you view futures pricing from? Well, unless I'm actively trading them, TradingView. If I'm actively trading them, either IBKR or Ninja Trader. Should we be buying puts on everything in our short squeeze only once it runs, right? Like once it attracts peak bag holders. It's just like Wall Street bets, right? Like you just wait till their thesis plays out and then bet the opposite way. Yeah, this is why you don't play penny stocks. There's very good reasons to not play penny stocks. People who play penny stocks successfully, and they do exist. It's not an illegitimate form of trading. It's very legitimate. Do copious amounts of research. There are companies that are penny stocks that are undervalued that shouldn't be. There are real legitimate companies that are penny stocks that are simply trading at low valuations. Those investments are fine if you can identify them and find them, right? Fubo is a legitimate company. They have corporate offices, they report their earnings regularly. Revlon's obviously a legitimate company too, right? But most penny stocks are not, right? Most of them are bullshit speculation based on, mineral or mining rights, or, they're operating their fucking entire company out of like the alleyway behind a strip mall. And I'm not kidding. Like that's a real thing. And people who buy penny stocks get in them way before they're worth more money, right? They don't buy them when they're up 100%, like some idiots I know. They get in them when they're at rock bottom prices, right? And then they sell. They sell when shit like what happened to Turkey happens, right? But if you're not willing to put in the legwork and the research, then penny stocks are generally a very good way to lose money. You can end up caught in overnight dilution with no way to hedge because there's no options. You can end up caught in large scale like insider sell-offs, which leave no liquidity left for you to exit. So you can have stop limits and you just won't fill. The price can drop immediately, really, really, really fast. Especially if they're on OTC markets because there's no halts. There's no volatility. More importantly, there's no way to profit off of the volatility. There's no implied volatility because there is volatility, but it's price-based. So most penny stocks, if you found out about it, you're too late. Yeah. If there's any news on a penny stock, you're already too late. So the risks far outweigh the rewards. And then the rewards are, you still have to over leverage yourself. So you have to get tons and tons of exposure to profit off of smaller moves, right? And sure, every once in a while, one of them will go up like 2,000% or something, but that's really rare, right? Usually it's like 100, maybe 200%. And you have to get a ton of exposure to actually make any money off of that. You know, if you're in for $50 and you've made $55, no one gives a fuck. If you think the market is more likely to go up slowly at a certain date, and if it goes down, would it be much faster? Do you play it with at the money calls or far out of the money puts? How to decide strikes? Well, generally, when you form a thesis on a stock, you would set a price target. And you know, you would have spot, which would be here, which is the price the stock is trading at. You know, and you would want options somewhere in that range. Because ideally you would want your options to go in the money if you're long calls or long puts. And also, you know, something that people need to remember about a lot of these stocks, back to the subject I was on, you know, just high short interest is not indicative of a short squeeze. These do not equal each other. Many of the institutional shorts in the market are worth billions and billions, sometimes trillions of dollars, right? And a, you know, penny stock going from a $20 million valuation to an $80 million valuation means absolutely fucking nothing to them. And you know what they'll do is they'll just short the top of it and make even more money. They're not getting squeezed out. They're letting it pump so you pile in and they can burn you. You generate liquidity for their short position. Then they take your profits. It doesn't matter if it's on fucking Reg Show or not. What happens on NASDAQ stocks, because of the automated DMM very frequently, is that you have stocks that run and then end up on Reg Show at the peak. So Reg Show, because of the DMM being automated and getting liquidity from legitimate sources as quickly as possible, Reg Show happens very quickly on a running stock on NASDAQ, right? But once, like, Reg Show is almost an indication that NASDAQ stocks have peaked. And they're going down. Same like Bobby, right? What's up, Walken? Do you have a thesis for continued downside today? There's quite a lot of open interest below us. We still, it's more likely that we stay in the 39.70 to 39.90 range, but, you know, participants are betting on more downside. I don't think we see it unless we slip 39.70. I think if we can slip 39.70 and keep the VIX under 20, that's more likely. Yeah, sure. Let me guess. Next, you're going to say DRS is bad or something. Typical hedge fund employee. It's not bad. It's just a pointless endeavor with no meaning. I'm getting news alerts on the Fed Beige Book. What is it? Meaningless. Wow, y'all see the former CDC director testifying in the Senate committee hearing this morning. What a doozy. I did not. Daily walk-in ban reminder. Oh yeah. The market hasn't crashed yet. Someone ban walk-in or time him out for the day. 24 hours. Where are my mods? What's the deal with Jimmy? Is this the start of FTDs? The volume is choppy. It is. Today is the beginning of the ETF FTD period that extends through the 13th. So a little more pressure on it, but don't forget that pressure will culminate in more realized liquidity, right? So while the pressure may be up right now, and minimally so, given the number of ETF FTDs, once those ETF FTDs are cleared, there is then more liquidity. Which means more ability to short. If my portfolio will only contain shares, no options, would it be a reasonable strategy to put it all equally divided between 10 to 15 most shorted stocks on the market? Nope, that sounds really fucking stupid. Bunch of slack-jawed snitches in here. You're not well liked. I profited on both sides of an SPX strangle today. Congratulations. Are you expecting some market upside Friday after unemployment data through until Monday? No. Do you think the unemployment data is going to be bullish? If DRS dries up volume, doesn't that mean next time we see big volume, it will go up hard? DRS doesn't dry up volume. It increases... It increases the price's reaction to capital expenditure. So it increases price volatility very specifically. It doesn't drive up volume. It doesn't increase implied volatility either. It simply increases price volatility. Which means that, you know, less money needs to be spent to drive the price in either direction. But that leads to lower costs to drive the price down, which means less obligations are created. The thing that leads to volume is options, and GME doesn't really have a lot of those right now that aren't sold. So I talked about GME CCs earlier today in the green. Uncertain if I want to re-enter if we see a pump from ETF FTDs or hold off until after OPEX. Yeah, that's always a tough choice. I generally don't sell covered calls into ETF FTDs, but you can. It's a little riskier. Just because you have to kind of buy them back early if SLD like wraps up on Thursday or Friday, right? Should we re-enter calls? I feel like there's limited upside potential on SPY at this point. I don't know. We've got some capitulation here. I wouldn't re-enter calls super far out of the money, but there's probably some small opportunity to capture a little bit of this. I don't know. It might be about over now. Oh, shit. me a second. It's still got a little bit of momentum. 39.85 on futures, I guess, is possible. We'll see. It can either run into resistance right here, or if it breaks up, then it's got a little bit of room. Yeah, so probably room to like 39.85. It's a little risky just because the volume's so low, but I don't DRS anything, but don't you think something must happen or change once a stock reaches 100% DRS, even if just new rules applied? No, I also think that'll never happen, so it's a pointless thing to talk about. I think long before 100% DRS is ever realized, Jimmy would dilute shares in some form or another, either via bonds or actual just at the money offerings. GME as a corporation is working, should be working against that very goal, right? They desire liquidity in their stock versus illiquidity. VIX got destroyed. Yeah, it did. Got fucking actually murdered. There was a guy about 100% of a stock, yet it was still trading and nothing was done. Yeah. I mean, there was other issues with that, but basically, no one gives a shit, frankly. There's always liquidity. The market's designed to consistently provide liquidity, even in the absence of liquidity, right? Every stock is owned 100%. But they would want to do that at a higher price target, which could be reached by illiquidity. No? Sure. Providing something's driving the price. Then you lack catalyst, right? DDS been out there for years just ripping, yeah. And then also falling really rapidly, right? Don't forget the downside aspect of DDS. RC wants vol shorts to fuck off, and DRS is a bit counterproductive by reducing liquidity, giving further reason for dilution. Yes. I mean, they've diluted and they've split the stock, all in an effort to create more liquidity and reduce the volatility of their stock, right? The volatility of their stock makes the stock an unattractive investment. Yeah, there's issues with the fast system too. Given the call stranded above 40.25, you think there's a decent chance we go back up to those levels in the next few days. We'll see if they start to sell off. So far, they haven't. So someone's still fairly confident that those levels will be seen at some point. That doesn't mean they're right, and they could have hedged, right? So it's not a guarantee. We just know that there's positioning there. I think I figured out how to trade weeklies. What I have to do is not buy a call, pretend that I did, reach the point where I need to DCA, and only then actually buy the call. Okay. My question is what happens if 100% is reached and then people sell when nothing happens? I mean, if those shares, I mean, those shares aren't lent, right? Because they're in DRS, so the price of the stock would just go down. Was it sufficiently clear that indication from Ryan Cohen to DRS in several ways with plausible deniability? No. I mean, I think he was pretty explicit in saying that his tweets really didn't mean anything. Do you know what observational bias is? I mean, even if Ryan Cohen thought DRS was the way, which I highly fucking doubt, um, I mean, it in no way benefits him, right? But even if he did think that, he can be wrong. He's not some, you know, like financial fucking genius. He's a guy who started a pet food company. I mean, you're acting like because he's a. This is the assumption that's being made here. That's probably a bad assumption to make, right? Is that because he is a billionaire, he must be very knowledgeable in obscure market mechanics, right? Those don't translate. I would say the number of experts on the DTCC systems and, you know, share ownership through transfer agents is probably less than like 15 people in the entire world. The only one even talking about it hasn't been in the industry for well over a decade. And then everyone else is probably still employed in the industry and are keeping their fucking mouths shut. It doesn't matter if he could directly recommend it or not, right? You're taking so many leaps in logic to reach the Cohen told me to do it. It's been a while since you murdered DRS shills. I miss this. The point has never been to murder them. It's been to educate them, right? That's all I ever fucking did this for, was to teach people how all of this works, right? Because they were running around with their heads up their own asses, basically just misinforming each other all over the place, right? So it's never been in an. I'm not a nice person, generally speaking, and I know I can sound pretty condescending, but it's always been with the purpose to teach people more, not to, you know, embarrass them or belittle them. For educational purposes, what are your go-to spots for reliable treasury data, market news, or do you just watch TV? I don't watch TV at all. I really don't pay attention to market news very much. Google, I guess, like if pops up on my phone. Treasury data you can get from Fred, is probably the best source for treasury data. For real-time treasury data, like yields and stuff, also TradingView. You're talking about Adabit, right? Well, not just Adabit, right? And the vast majority of DD on Superstock is false. Or about things that do not pertain to the stock market as it exists today at all, right? Or a misinterpretation of how things work in the real world, right? And so once you've eliminated all of those DDs, there's very little left. And what was left, all of those people were forcibly ejected from the subreddit. Me actually believing you when you say that's why you do this is why I pay for Zillionaire. I don't even really use the picks. Thanks for all you do, Gherk. Thanks, Cody. I've gone back into the video to watch the Fed share situation. I'll catch up. Looking forward to gherkin commentary. It's really boring. I have a notification that goes off whenever Tom Lee is on CNBC, so that I can turn it on and yell at the screen. Fucking dork. Have you already touched on DRS, its effect on institutional interests this go around? A little bit. Hey, I only wrote the highest quality of DDs. Well, yours were okay. I saw some of them. What about the mother of all wedges, DD? Jesus Christ. Thanks, Big Mac. What'll be your price prediction for GME by the end of the week? I don't know what GME is gonna end up at the end of this week. It's probably just gonna trade with the market. It's gonna have a little more sensitivity to index moves because of the ETF FTDs. So anywhere between 19 and 17. If the market goes down into the end of the week, I don't think 17's out of the question at all. If it goes up into the end of the week, we might see 19 again. It's illiquid and at the mercy of the indexes, so do with that what you will. The buying pressure on it day to day from ETF FTDs is minimal. Ken Griffin just told JPOW to stop talking. LOL. Article on Yahoo Finance. Yeah, it's really hard to keep the VIX under 20 when JPOW keeps opening his fucking mouth, right? True question. Red or white pizzas? I mean, what a binary way to look at pizza. What about pesto? What about just pizzas with cheese and olive oil and basil? And tomatoes. That doesn't have a sauce. Is that just an oil sauce? You've limited your options so much by just going red or white. And define white. Do you mean with ricotta? Do you mean just no sauce? Do you know the expiration of the call position trapped at around 40-30? Still a chance they go back up to get those. They're a little further dated, so that's the reason I think there's a chance they push for it. Although right now, the negative hedge on the market's pretty strong. They'd need something probably to push up through all of the negative gamma to even get in that range, or that negative gamma would need to start approaching expiry. And it looks like a lot of it is for, like, it has just come in recently for 317 and is also for like 331 and 421. Especially the other day during the pump when puts got really cheap and VIX dropped. We got a lot of long dated put positioning that came in there. So the downside's pretty strong. It's definitely not an easy fight. They take advantage of, low liquidity moments to drive prices up, or low volume periods to drive prices up and get VIX down, but it's not affecting any consistent price improvement, right? Thanks, John Smallberries. I do my best to stay passionate about everything. I think you finally eliminated all the GME and AMC MOASS YouTubers. I believe sanity has set in. It hasn't. I would still say the vast majority of GME and AMC investors are woefully uninformed. So even if they're sad because their stock price is down, they still don't know what the fuck is going on. Can you tell by how hard the VIX is dropping, but SPX not reacting as much, right? Partially, yeah. We can tell by the correlation between the two. Do you consider 317 puts positioning for SLD or just PPI CPI? Probably just PPI CPI. I wouldn't say that they're positioned for SLD. You'd be almost out of theta by then. I mean, if SLD's big enough and they go in the money, or you're very close to the money, sure. But they'd probably be better bought near that period, right? At a cheaper premium. Ooh, there's a gap in the market. I too could fleece bag holders by starting a YouTube channel. Has AMD's pump been done using calls, or has it been actual buys of institutions moving away from Nvidia based on earnings? It's mostly just the sector has received a lot of investment capital, probably through ETFs. People are very interested by the idea of AI and are thus investing in fairly broad ETFs that, you know, target AI and fintech and stuff like that. I think there's like bots, and then there's another AI one too. I can't remember the name of it. But there's a bunch of big like ETFs. There's also the chip sector ETFs, which have gotten a lot of interest recently. And when people buy into those, they go and buy the stock, right? Don't forget index exposure on NASDAQ, which really hasn't gotten hammered that hard yet. So SPX calls will try to push prices up by buying futures, and SPX puts start to dwindle in volume or chop. Yeah, basically. I mean, they're not really gonna have a lot of success in pushing up when more and more and more puts are coming in, right? That's why you have short exhaustion, right? Is because eventually, you know, people have stopped buying puts, they've started to take profits, the put positioning's weakening, right? And then you know, call buyers are coming in to play the opposite side. Do you think if we get an actual OPEX in March, the market will rally, helping the momentum? Sorry, one sec. The market will rally, helping the momentum, same as last year. It seems now like it's impossible for GME to actually go up without a market rally. If so, you think it would reach another high, like 40-50? Yeah, it could. It may not, which would just mean that obligations on GME could be cleared on, you know, less potential price action. The correlation over the last, you know, year and a quarter between GME and market rallies is largely driven by the fact that short volatility positions are just capitulating on both simultaneously, right? That they're aligned. Whereas in the bull market, you know, VIX would go up when GME ran, right? Because it was moving against the market trend. Remember GME's negative beta and everyone going on about that, right? So when short vol positions were closing in the bull market, it caused, you know, drops in price. And, you know, in the bear market, it causes increases in price. GME is not special. It's, you know, it's a vol short position and retail buys it, but it's not, other than that, you know, there's really nothing particular that separates it from anything else that volatility is shorted on. And since there are bigger things that volatility is shorted on, like the market itself, you know, the coinciding effects of those can be large. Take out the 300 plus days of 100% utilization. The thing that Ortex measures is bullshit. It counts the numbers of shares in and out of retail brokerage accounts and estimates an amount of utilization based on that. Those shares can be returned and borrowed again and returned and borrowed again before any figure is ever reported to Ortex. So it means literally nothing. It's a useless data point. I mean, we can already map out GME's actual liquidity. Why the fuck would we look at, you know, Ortex's like partial visualization of the lending pool on GME? Gork, green candle, where? Did you do it? I think if we get an OPEX like last year, it would be short-lived. And covered under the guise of the market rallying into the Fed meeting, or the Fed rate decision. And then if we do get that rally going into the Fed rate decision, I would expect that we would see significant shorting afterwards, regardless of the rate decision. Because if we get that rally into the Fed rate decision, and GME runs up, and Upstart runs up, and everyone's happy, that means that short vol in the market has closed out, which means VIX go up. I love significant shorting. It just took me 2 years to figure out how to play it. That's not bad. Some people still haven't figured it out. If John Galt asks you to leave your stream and join him in the mountains, I don't know who the fuck that is. Gherkin, give me some sweet hopium. GME hits 17 next week. I averaged down to 25 a share. March OPEX lets me yeet these bags through RC's window. Tell me it's true. It could happen. GME is quite illiquid right now. It's approaching the underlying itself is approaching illiquidity levels higher than last March, I believe. It's getting very close. I don't know how it looks today. I haven't looked since this morning, but yeah, very, very close. And this time, no ETF sell-off. So, you know, in December, early December, we hit very, very illiquid levels on GME, and then unfortunately had a large number of shares sold off by ETFs. Like it was like 2 point something million, which restored liquidity. And then, you know, obviously that liquidity was used to short through most of December. Then we had some, you know, legitimate covering through the January deferral period. That liquidity now long gone. And GME almost back at the levels it was at in December. So GME is actually getting truly illiquid again. There's been a little bit of covering on XRT. Obviously, we're approaching the ETF FTD period, so we expect some ETF liquidity to be restored. If that liquidity is then used to short GME very, very hard through the SLD period, that would increase confidence in an OPEX. Right now, put interest on XRT is quite high for the March 17th expiration, so that's also compelling. And confirms, you know, what we're seeing here in the data. Generally, during this period, we should see put interest fall a little bit as a little bit of XRT liquidity is restored. That liquidity should then be used to short the basket, and then the basket would be covered going into the quarterly settlement. So there's a chance. It's risky though, Benjamin. Of course, OPEXs are always risky. You know, if the market doesn't rally, you know, that could pull back on potential price action. GME's still very light on the call interest department. When VIX suppression stop, when they're ready for it to, or if an overnight move is sufficiently large enough to put them in a position where they can no longer keep it stabilized. Yep, no problem, man. Who's they? Volatility shorts. Anybody with a, it can be volatility shorts. It can be anybody with a motivation to prop up prices while they are selling equities, which is a large number of market participants right now. Jamie Diamond Hands, hello. Yeah, large institutional banks and hedge funds. And also very specifically volatility shorts. It is in the interest of volatility shorts to keep volatility low because they're short volatility. It's time you unleashed your, and what that does is it increases tail risk, right? The longer and longer you short volatility, the more unstable the risk becomes. And eventually that risk has to either be, you know, you have to lower the risk or it collapses. So if you short volatility too much, then it'll collapse. And so you have to move everything in cycles in order to keep it stabilized. RC tweet, about to sell everything I own and buy yen. RC just tweeted hello in Chinese. Flip the whole discussion, Gerg. Keep going. You will bring sanity to the internet. Eh. Have we ever dropped a... Oh. He's promoting his Baba. I'm about to buy puts on it again. James Rowland bought so many 421 GME 20Cs. Proof or ban. Who cares? What, right? He just copies people's shit. Who gives a fuck? What happens to Jimmy if it stays illiquid? What do you mean? Liquidity's mean reverting, so be more specific. You think this uptrend continues into the end of the day? I mean, it's already weakening. Probably not. I guess if we get like a big block of like put capitulation, maybe. VIX is pretty low now. I don't think they care about the price dropping too much. So no stock price is based on its actual value. It's whatever the market makers decide it's going to be. I mean, it's based on both, right? The market makers can't really effectively control price and make money doing their jobs, right? Like they can do a little bit of either one. It's kind of like you have three options, you can only pick two. You know, if there's strong interest in a stock, they're not going to be able to stop that. As evidenced by GME, right? GME is the perfect example of market makers not having absolute control over the price of an asset. What is it called when prices are found? Like someone searched for them and then price disco dancing? No. Price realization? Price discovery? I mean, I don't know what price discovery channel. Okay. I can't tell if you're asking a serious question or not. Gherkin, make up an absurd amount of tinfoil about what the tweet means. I don't give a shit. Okay. No worries, Odorous. Why are you having a bad day? No, okay. Should I DRS my NVIDIA? I don't care. Just make it up so we can clip it. Shower thought for the day. Don't think of it as inflation. Think of it as price discovery. Problem solved. You're welcome, Chair Powell. That would just confuse people. They already don't know what his job is. Shorts never closed. Don't say stupid things, Ben. The shorts at $5 closed. The shorts at 400 definitely didn't. Shorts never cared. That's more accurate. Did futures enter the demand zone? I don't think so. This looks like I said, this looks like it's failing. There's still clearly a basket of stocks, right? Not really. There's just illiquid stocks where it's more visually apparent that they are manipulated through volatility shorting, and then there's everything that's just being volatility shorted. It's you know, you start trying to define the basket and it becomes broader and broader and broader, right? You know, Apple, Tesla, Nvidia, these are all massive volatility shorts, but its apparentness is clouded by the fact that they are they're highly liquid markets, right? And you look at very illiquid markets like GME, Bobby, Macy's, Nordstrom's, you know, where you know the effective liquidity is drawn on heavily by like XRT, for instance, and in those markets, the ability to visualize the cycles and volatility are much more apparent. I just told you why. They're intrinsically linked through ETFs, which are the pools of liquidity that are used to synthetically short these stocks. So you think on Jan 21, all the stocks that went up is just because of liquidity? Yes. I wrote a DD about it. You can go read it. It's not really liquidity, it was more the lack thereof. Bobby website is down. MOASS has begun. They probably just can't afford to pay for it anymore. Yeah, probably it would be used to short Bitcoin. Or short a derivative of Bitcoin. I mean, there's a reason I recommend the book, Hash. What about most of them being retail businesses? They're not. That's the point I just made to you. Is that those businesses, those small, mid and small cap companies, are highly illiquid, highly volatile, right? And the appearance of the cycles is more obvious there. But Tesla, Nvidia, Apple, those are all volatility shorted as well. They all have similar cycles to GameStop, but they're also massively liquid markets. So the obviousness of those cycles is less. I mean, you want to see the biggest market that volatility cycles are apparent on? Look at the SPX. Literally fucking OPEXing, right? Like it's doing the same shit on a much bigger scale. I love this. Look how powerful you've become now that this doesn't affect you emotionally at all. I mean, it never really did. Icon is ready to close his gigantic short from the top. Why? Jamie's not profitable yet. There's no reason to close a short position. Not like really mad though, just like it's irritating. Serious question, G. Do you feel like the crazy Jan 2021 event is almost impossible to happen again, since the big money now knows retail figured out a small part of their plays? I don't think it's impossible for it to happen again, but I think that the setup is unlikely. Right? A lot of different things would have to be in place all over again, which are no longer there, for that to reoccur. One time I wrote a super song post about selling cash secured puts. You fucking shill. Puts on GME? Is that another reason why they short VIX? Because they're short volatility until they go long volatility for OPEX, or is that unrelated? It's kind of related. This is why that YouTube guy told you have like 1 million reports. Yeah, I know. People don't like to hear things that contradict their bias. You should have seen the mods comments. Were they ill-informed? They usually are. The thing I love most about Reddit is the assumption that the moderators of a community are somehow experts on a subject. Like me and Turd, one time we sat down with what was his name? He was one of the original moderators for Super Stonk. Fuck. He like quit to go do art or something. No, not JSmar. JSmar was a bitch and wouldn't talk to me. No, not Renzel. Was Warden a mod? Oh yeah, he was. Butt Farm. Yeah, it was Butt Farm. We sat down and talked to him about all this shit and like pretty extensively. And he was just like, man, I don't know. It sounds like FUD. I gotta think about this. I'm just holding my like 3 shares for the moon, bro. Like they had no fucking clue. None of them. We tried to explain to him like ETF liquidity and all the complexities of it, and it was just like he was so. And I think he thought we were, you know, like not like fucking with him, like we were. I think he thought we were right, but it was like we murdered his puppy. That's what it felt like. Like the whole conversation was just like it felt like we took his dog and stabbed it to death in front of him. And then immediately he just reverted back to like, no, that can't be right. Like the denialism was so strong, even though we presented evidence for everything, that like he just couldn't even accept it. And like, how do you communicate with, yeah, exactly. How do you cross that line, right? There's no way. So you know, kind of after that, and I got banned shortly from Supersonic, like a couple weeks later. After that, I was, what was the point of trying to continue to reach across the aisle, right? Like I figured people would eventually come to the realization that everything they thought was wrong, right? And nothing was going to happen unless they were completely mentally unstable. And you know, eventually they would seek answers. It doesn't explain away many things, including MSM behavior. I mean, you don't need to explain away MSM behavior. MSM does the same shit on every stock that, you know, some hedge fund wants to pump or dump. You know, they just run stories on it. Those stories pick up interest. That triggers algorithms that drive more interest. I mean, you know, you say like MSM shit on GME, but the only reason, and I kind of tweeted this at someone last night, you know, they're like, oh, CNBC talked about it. That's a red flag for me. But, you know, CNBC is the reason, CNBC and Bloomberg and Fox Business and all of those like mainstream media that you're discussing are the only reason that fucking people bought GME in the first place. That's the only reason people knew, right? It wasn't because of DFV and his 300 viewers or because of Wall Street Bets, right? That was just an addition to their story. GME was running and they fucking talked about it, and that got people interested in it and buying it. It was on all over, it was plastered all over every major news outlet from, you know, December 22nd through July 14th, right? And they said it would end. They weren't wrong, right? Like it ran and then it died. And but that's explainable through market mechanics, right? You know, eventually expanding gamma will collapse and then, you know, you go down, the price goes down. The FOMO wasn't gone. People were still searching GME every day. All the way through June, at which point interest dropped off, but so did news articles. I mean, you can look at data on this. You can look at the Google search histories for GME. And now we get barely any news about GME, right? Because no one gives a shit anymore. Molly Fool wrote so many articles about forgetting GME, right? Because putting GME in the title would draw it's clickbait, right? And Motley Fool wrote so many of those fucking articles that they actually forgot about GME themselves. I mean, that's all it is. It's just interaction driving interaction. All of this shit is automated. You know, every super stonker that clicked one of those fucking articles and raged that they were being shilled improved the chances of another one of those articles being written. It is a feedback loop. I should have sold back when Gaff said to at 180 with Silver Rose old Discord says. I mean, it was a good price. It was definitely worth a lot more than GameStop is fundamentally, right? I love this system. Me too, Mike's Pickle. I'm trying to sell CCs on GME. Why is Ivy disgustingly low? I mean, have you looked at other stocks? Maybe then you'd complain less for the next 2 expirations, because other people have sold CCs ahead of you, and volatility on GME is frequently shorted. You're selling covered calls right now in the bottom of the volatility cycle, right? This isn't a great time to sell covered calls. You're supposed to sell the covered calls when the IV is up, not down. You buy them back when it's down. People on SS also don't seem to comprehend that shorts can average down. Well, they think they can't because they have this assumption that the only shares that are actually transacted have to be quote unquote real shares, which isn't true, right? A lender of shares does not give a shit what shares you return it. You can go make shares in an ETF, give them back to a lender, boom, short position closed. Then you fail in the ETF? Who gives a shit? They have infinite liquidity. I mean, I know it sucks, but it's set up that way on purpose. The goal of the SEC is not to get rid of, you know, failures by creating an illiquid system. The goal of the SEC is to get rid of failures by creating so much liquidity that failures cannot occur, right? And that's very disparate from what Superstonk thinks. And those diverging goals will obviously never realize, you know, any kind of agreement, right? But that's the point, is that if Supersonic is aware of that, then they should be aware that infinite liquidity exists on GME, right? For the purpose of, especially for the purpose of settling short positions. Homeostasis? Sure. Talk to me about Baba. I kind of want to buy more puts on it again, but I'll wait till after OPEX. What are your current thoughts on NVIDIA? I think it's a big fat pile of shit that's super overvalued because everyone's hyped up on AI technology that won't yield any real profits for the next 5 to 10 years. Their year-over-year revenue and EPS are down 30 and 57% respectively. Their overheads are up 25%, and they're sitting on $5 billion worth of inventory that no one's fucking buying, while being valued higher than they were last year before those earnings came in. In the end of the day, both believers and realistic people will never know the real truth. Yes, we do, because we have data and facts, and believers have faith. The faith is what's wrong, right? So what it is the end of the day, believers will never believe the truth because they believe an alternate version of it and refuse to accept facts and data. So at the end of the day, believers will be wrong, and people with, that are analyzing the data and looking at it logically will move the fuck on with their lives. You know what's going to happen is one day Super Stonk's going to look at itself and realize that it's been circle jerking for 4 fucking years with no end game. And they've lost a fat chunk of their lives, and for many of them, probably a significant chunk of their money. It's not a good thing. It's bad. It's sad, even. The random shills in chat. What if I believe in the power of positive thinking? Go fuck yourself. Who sent me this fucking meme? You think that's what he was doing? You think he was trading the markets while chairing a congressional committee? That motherfucker's balls deep in 0 DTs, isn't he? That's why he wore the purple bow tie. He thought it tanked the market yesterday when Powell wore his purple tie. He's like, shit, I need to get one of those. RSS should stop attacking Kenny and maybe turn their attention to the board and RC. The only way GME is going back to 40 or 50 is if the GME board and RC actually work to make GME profitable. Yeah, well, right now all they need to do is sit on their asses and wait for more stores to close while maintaining revenues. I lost a good bit of my life and money, but I've learned so much. Even though my port is a fraction of the size it was, I can rebuild thanks to what I've learned. Thanks, Teach. No problem, man. That was me. I told you to laugh briefly at it. I thought I was just supposed to laugh briefly at your super chat. This is the look of a man with no hedge. I use my milestone chat to tell you to look at it, and here we are hours later. Well, now I've seen it, so the cycle is complete. I would love for Girk to be wrong on GME, but I don't think he is. It is what it is. Yeah. I'm starting to think that Veronica's bipolar bear, but I'm not sure. Girk, is it possible that FTDs from July split, pre-split, are still not delivered? No. Like you said one time, RC will make everyone an SS a long-term investor one way or another. Seems that way, doesn't it? I know the whole selling when the stock is down or under your cost basis is generally a no-no, but what kind of sign would it take to make it worth cutting from a port at lows? I mean, if you own stock and you've got to really be more specific. There's so many fucking variables. Like I don't even know what I'm supposed to tell you with that question. Should you sell at a loss? Sometimes. Sometimes that's the appropriate choice. But I don't know what you fucking have. So I have no idea. So 10 out of 10 data points have been hot garbage. We're just doing a slow grind down. Yep. All this manipulation and limitless selling of securities is going to make our generation not trust the market. Good. They don't want you to trust it. That's not... Trust equals participation. Participation drives up risk. They want you to fuck off, match your 401k, and let them play with your fucking money. The best thing I ever could have done with this stream was teach people how to manage their own fucking money instead of letting somebody else do it and take 60%. Jimmy will eventually change the market. It's already doing it. New proposals coming, for example. How? Change what market? The stock market? Man, no one gives a fuck. Jimmy's worth like $3 billion. My cost basis on GME is 44. I haven't averaged down yet because I haven't had the money. Is my best strategy just to wait until we hit 25 and sell CCs at 20? That's a good way of getting your cost basis down quickly. I would wait till we broke Gamma Max by 10 to 15%. And then look to sell in the money CCs. Selling them in the money without breaking Gamma Max is generally riskier. You have a much higher chance of assignment. This guy is trolling, I think. I don't own any GME. What the fuck's the point of this whole conversation then? Who let the real cultists in? I don't know. I got in a fight with someone on Twitter last night or this morning. I don't remember. So it's probably attracted the more undesirable crowd. It's been a while since I ranted about GME and Superstock. It's good. It's Moonwind. Sorry, Flat Earth Talk. Maybe RC's tweet means they're going to announce earnings tonight. Maybe. You've mentioned several times in the past that you think they might eventually ban retail from options. What chance do you think that happens? I mean, they probably don't want retail fucking with them again. They were pushing more for that after, like the meme explosion in Jan 2021. They've let off. There's other things they're dealing with now, so it'll probably come unexpectedly when no one notices. Tacked onto some other bill about something else. What do you got? Oh, was James Rowland pushing Turca? Fucking idiot. Hey Greg, I suppose a lot of people think a long Tesla-like squeeze can occur. Can you explain why or why not, and what mechanics occurred to drive Tesla's price improvement up, given how shorted it was? I mean, I don't think Tesla's overall like short interest as a percent of the float was very high after the crash, but after the crash occurred, shorts started covering on Tesla in a very significant way, right? Which then led to more buying of the stock as it catapulted ahead of the rest of the market and began drastically outperforming, right? That then followed by significant repeated developments to the company, right? Mostly pushed by Elon and never delivered upon, but and that, you know, continued to drive it up. But in reality, the shorts never really left Tesla. You know, they closed at the crash, which is, you know, shorts are wont to do. And, you know, probably even then went long, but they continued to short Tesla and profit off of, you know, retail's interest in the stock for the next 2 years. Not only retail, but other institutional interests, to the point where Tesla became almost a focal point of the market outside of the indexes, right? There was so much fucking options volume on Tesla for, you know, through like the end of 2020 into 2021. It was insane. And the volatility there made people billions, right? So I don't think GME is anything like that. I don't think there's any fucking shorts to squeeze out, frankly. There's some, but not many, and most of them are in at much fucking higher prices. On the short-term shorts on GME, just they get squeezed out with OPEXs. Remember that guy who bought 5 Tesla calls pre-split, like 2 years, dated for $100 a pop, and sold them for $1 million? There was a lot of stories like that. It also led to Tesla itself having tons of capital to expand and build gigafactories with. Yeah. Where did the 140% short interest go? Well, first of all, the 140% short interest was an effect of reporting all of the short interest on a stock while it was on Reg Show, right? They've since disbanded that rule. If they were still reporting synthetic shorting on stocks while they were on Reg Show, you would see, you know, Reg Show stocks short reports go probably in excess of the size of their float, right? But remember that was synthetic shorting being reported, which they no longer do, right? So the maximum anything can ever be is like 99% or 99.95 or whatever it is. So they'll never report ETF shorts on reg showed stocks ever again. That's gone, right? So, but GME was not only very short at the time of Jan 2021, but it was also synthetically short, far in excess of the float. All of that was covered in January of 2021. And then you might ask, this is your follow-up question, why did GME then run in February? Well, because when GME ran to $400, people looked at it and they went, wow, that's way fucking overvalued. And they shorted the shit out of it, right? Which then drove the price down to like $30, $40 as people sold off. And, you know, an equivalent amount of money was made on the downside. Then, at the end of February, those shorts closed, which then drove the price back up again. over and over and over until interest began to die down. I mean, there's multiple documents that show not only the shorts closing well in advance of GME's run up to fucking $400, except for Melvin. But the SEC already reported on all of that, right? We trust the SEC to regulate the markets, but we think their report is what, FUD, or they're trying to protect some. If they were that short on GME and they were at risk, they would just close. Do we ever run back up to 45? Maybe. I'm sorry your cost basis is so high. Melvin got blown up, but he got blown up by Kenny. And then the only person who made any fucking money off GME running to $300 in Feb and above 300 in January and again in June and then to 250 and then 250 again in August and November was Kenny, because everyone else was fucking hodling for MOASS. So Kenny just sold massive fucking bear call spreads into the top of all those runs, harvested all the volatility, and took everyone's fucking money. And then people ask, how did Citadel make $16 billion last year? Well, that's how. Thanks, Chief Queef. I can manage my own money. I don't need Kenny to do it for me. No sell, no sell. Please don't tell my wife how much money I lost. But it's okay, honey. It's an investment. The hedgies are fucked. I mean, yeah, it's just all bullshit. Collective bargaining. It's like if we DRS our shares and we're good little stockholders, then we can have our MOASS, right? Right, Ryan? Save us, Papa Cohen. Oh. Thanks, Johnny. Altruism in capital markets? LOL. Yeah. Bobby shareholders found out about that really fast, huh? Okay, not all of them have figured it out yet. I think if GME builds a company and turns a profit and then, you know, turns that profitability into growth, then yes, like every other company they have potential. I don't think they have more potential than other companies. I don't think they have less. They're debt-free, which is a good leg to start on. They have an established business and a brand. I think they can be successful in their long-term goal of creating a valuable company. But it is a long-term goal, and it is not MOASS. It can be significant realized gains in enough time. Supposedly there's still a large short position. Well, there's an assumption of there being a large short position, although none is reported, and the borrow rates are not indicative of that. Would force closure as the short position would be much more expensive. Cash dividends would force closure. I mean, not necessarily, right? Cash dividends could incentivize shorts to close. It doesn't mean that they would, right? If they think they can make more money on their short, then they have to pay out on, you know, a 2% yield or something. Why would they close? Like if you're going to make 5% a quarter on your short position and you have to pay a 2% fee, you know, that's still a 3% per quarter yield on your short. Unliked, unsubbed, unwatched, unfriended, deleted the Louvre, asked a MasterCard for a refund of my Ko-Fis, trashed in, stop being hyperbolic, you love me. You told me so the other night. And in several love letters and photos of me that you keep stored on your hard drive. Please acknowledge Wolf of Walgreens. The only good thing that's happened today. Wait, who's called that? Because that name's amazing. Listen, bro, for the real questions. You playing Atomic Heart tonight? Yes or no? I don't know. I'm pretty tired. I've got other shit to do tonight. Maybe. We'll see. Probably not. But the swaps, Gork, swaps are cash settled. It fucking doesn't affect the underlying at all. You should issue it. I mean, some swaps are hedged, but not TRS. That's why we dug into entropy swaps, right? Because they allow them to bleed out large short positions over long periods of time and reduce the overall risk, which they probably used up until a point. I mean, we never saw them really again after Jan of 2022. So yeah, they probably did use them to bleed out short positions. And then, you know, they were out of their short positions and then things got boring. Yeah, no problem, Ben. Trying to stay on top of that. I thought you didn't want me to talk publicly about the photos on my hard drive. I mean, people know. There's rumors already. You might as well address them. The opposite of a rounded bottom breakout is called a blue ice failure. Oh, you fuck right off. Nope, don't talk to me. I swear to God, I'll put you in purgatory with Walker. Did Wolf of Walgreens become a billionaire or something and I missed it because I was ranting? I don't know what's going on. Who keeps timing me out? Me, because you keep typing in caps. Oh, fuck. Wrecked. That wasn't even me that time. You've just changed your name to Wolf of Walgreens. I like it. Let's talk AMC. Streaming isn't working out the way Wall Street thought. AMC now has no real peers. They're buying distressed former competitors and the cult is real. What? New topic. So this SPX, it's going to do anything interesting the rest of the day? I don't know. Maybe the end of the day? There's still a shitload of put volume underneath us. Someone's going to capitulate, right? All of the fucking calls and all of the puts are out of the money right now. So I guess we'll see who gives up first. Or they all just let their shit expire worthless and we trade flat into the end of the day. They're now in 20 to 25 minutes of timeout. You think they'd be able to find the caps lock button in that amount of time. Noted, Fluffy. Good to see you back. Boo to flat. Yeah, it happens. What happens if GME doesn't report earnings? Is there a penalty for that? Yes. They will. They will report earnings. More VIX fuckery is so frustrating. Yes, it is. It's very annoying. If they didn't earn any money, could they not report? Not on NYSE. Bullish thesis for SPX regarding tomorrow. The only bullish thing would be the lack of significant data. Or maybe something that Barr says in the midday. Right now, the market maker hedge is still negative, so they need to pump it for any of that call volume to be realized. They need to pump it back to the where the market maker is going to be neutral on gamma, and then they need to get it above that as well. So, I mean, I'm not saying it's impossible. We're not really that far away. It's like $60, right? But it would definitely take some serious fucking volume, which we're not seeing today. The relief rally is always possible. I don't think we're gonna get one because puts are still fairly cheap and they keep coming in. I'll have more data at the end of the day. But relief rallies can be unpredictable. Generally, a relief rally, which was not entirely what happened the other day, are caused by large numbers of puts closing simultaneously, right? Many of the puts open right now are not only out of the money, they're far dated as well. So those puts are probably going to stay very much in place, and the market maker is going to continue to hedge them. Because they're the price of the SPX in the future. If JFresh is half bear and half space cat, what are his children? No comment. He's not a space cat. He's an interdimensional fairy cat, first of all. Hey, Greg, you mentioned last year about the SEC report stating the run-up was FOMO, not short covering. When did your opinion change on that? There was short covering in the beginning part. It's actually broken down very, very clearly. There was a period of GME from like 5 to like $17, I think it was. Hold on, I can't see shit because I have the wrong screen open. I'm writing in white. It was from like $5 to $17, right? Then that's when FOMO kicked in, right? But this was all short covering volume, right? And then once the run started, there was almost no short covering. So this was all propagated by options and FOMO. Right? And we know how it works. It starts driving up, and then more people buy options, and more people buy options, and more people buy options, and Gamma Max keeps going up. And then eventually Gamma Max gets broken and everything collapses, right? $2021 wasn't just retail pumping, right? I mean, it was massive institutions buying huge amounts of calls. And don't forget selling them, right? Now that you guys understand call selling, imagine how fucking profitable that shit was. What explains the cycles? Oh, they just keep doing it. They keep shorting the volatility on GME, and then they close their short position. The stock runs, and they short it again. And everyone, all retail just keeps buying it, right? So that makes it continue. If there was no interest, GME would just go down over time, which it's doing now that interest is dying. How do you sell a call? You just, instead of buying it, you sell it. Same as Tesla? Yep. Are there any trends indicators we have already seen that could indicate CPI, PPI coming in hotter than expected? Yeah, PCE and the last two PPI and CPI month-over-month prints were hotter than expected. So that adds a lot of confidence to a continuation of hotter than expected CPI and PPI. Right now we have 3 consecutive PCE reports that have worked their way up. We have 2 CPI reports where core is shown increases, and 2 PPI reports where core inflation is shown increases. So, yeah, all of that data points. Also, you know, there's some other things. You know, inflation swaps are trading at, you know, like 6 to 6.2%. So, those are also indicative of a continued rise in inflation. The labor market hasn't stabilized. Right, we just got job openings today, higher than analyst expectations once again. I don't have 100 shares of anything though. Okay, so you don't need to own shares to sell calls. I mean, you'd have to have margin. You'd be selling them naked because you wouldn't have the hedge built in. I tried selling a call at 500 for $50 during the peak, but my broker wouldn't let me online and I couldn't get through on the phone. Oh. Well, institutions didn't have that problem. They sold shitloads of them. Has your appetite for being long GME changed? No, but I also have like a $3 cost basis now. So I don't have any. I mean, I'm almost at the point where I don't have any skin in the game, right? I mean, it's still a significant portion of my portfolio. It's, you know, greater than 50%. But this is also my job, so I've got to make money on other shit. I can't just watch GME trade sideways for years. I got margin called on WeBull today and asked nicely for them not to do that, and they said okay. That was pretty cool of them. So if I got this right, the market makers can just fabricate shares in any company to control the market without ever having to cover. No, they have to cover. Everything gets covered, right? But yes, they can create infinite liquidity. Not just the market makers, authorized participants, and DMMs as well. So the options market maker can create liquidity. The DMM can create liquidity, which is automated on NASDAQ, but manual on NYSE. And the ETFs, the authorized participants for the ETFs, can also create liquidity. The creation of that liquidity does not have to result necessarily in price improvement on the underlying, which is the real question you're asking. It can include hedge funds if they are authorized participants or market makers, yes. Although a hedge fund is not really a market maker, they are different. Puts are giving up. Well, some puts are giving up. But then if this gets rejected, some calls are going to give up too, right? And then we're just kind of right back where we were. What do you call the stock formation on NVIDIA? Chopping? An ascending wedge for the entirety of the day? Or an ascending triangle? I think if you go out further, yeah, this is actually a downtrend over the last 3 days. Lower highs each day. Chances of SPX closing gray looking pretty good, right? Do you think if NVIDIA has an OPEX run, it could squeeze a little? Probably not. It's already like really, really liquid right now. I don't think it's gonna get more liquid. I think the squeezing that was gonna happen on NVIDIA has already happened. If I'm gonna be completely honest. What happened to the thing where all those dates came in that everyone knew were really bad all the time? Which? When you sell a call, do you charge by the minute like we did in the 90s? Yes. I want to make money on NVIDIA puts. Me too. Dang, I dug out for a bit to do my actual job, and look what happened. Never doing that again. Did you set stops before you went back to work? Tyler G. I have no choice. I'm gonna make up my unrealized losses on GME and Rev. Ha. Okay. Are you gonna continue to just buy things without having a plan, or are you gonna make a plan and then try to stick to it and profit off of your trades? Do you see that Jamie video with the guy who copy and pasted the chart 3 different times and then showed the next run to be June? Is that real? I didn't, thankfully. I've been away all day. You seem vexed. We love you, buddy. Just mildly irritated. Not for any real reason. Just rehashing shit that I've gone over so many fucking times. Hey Gherk, random thought. As someone who manually writes a lot, I must say you have nice penmanship. Well, thank you so much. I hope people still aren't buying Rev. There will be nothing left for shareholders after the creditors get their settlement. Yeah, it's pretty fucking risky. I don't know why anybody would be buying it if they weren't already stuck in it. There's like no voting power given to the shareholders at all. But to new people, it's good work you're doing, I guess. It feels more like an effort and futility for me, but I'll take your word for it. Fubo gonna be the next Rev? I don't think so. They've definitely got money now. We tend to make the most money when you 1, sleep in, 2, yell at someone like Koala Hugger or walk in, 3, are so excited that you start removing clothing. Okay. You shouldn't make an oscillator. don't like being down 30% of my NVIDIA position, but I just keep thinking about how quickly we got to these highs and how quickly balance will be returned. Okay. That's a good way to think of things, I suppose. I mean, yes, it can drop very quickly if it drops. Is this going to finally reject here? Oh, I should probably mention my plan to buy $100 worth of out of the money calls every day for the foreseeable future. Don't buy those. They're not going to print. Well, they might one day. Puts giving up here is disgusting. Is everyone just going to ignore JPOW forever? I mean, 0GT puts were pretty high. So we're not up that much. Right? We opened like here. I mean, everything's capitulating. The fucking market closes in 15 minutes. Are you talking about just like PMCCs? If the stock moves really hard and you have short dated calls out, they can go up more than the value of the contract you're hedging with. The market will climb back to 4,000, touch above over the rest of the week to create a perfect psychological straddle point for the weekend. Not saying we open there, but I can see what? Why do you have to use so many words in your Ko-Fis? I can see a choppy grind up in preparation for next week's data. Vol shorts will not quit until CPI, PPI. They probably won't quit fully until OPEX. Right? They might give a little ground after CPI and PPI into SLD. But this is going to be like a thing for a while. This isn't like a short play. There's a lot of money to be made on either side of it, but what is strangle today? I mean, I don't need to buy another call hedge. No, I guess I could. I don't know. We'll see where it goes. I'll just enter. I'll enter like a straddle into the end of the day. I'm not gonna strangle tomorrow. I'm glad I strangled today because the call side sucked, but tomorrow I'll probably straddle. Your efforts aren't futile. I've been hearing you in my ear for over a year, and I'm just now starting to listen. Thanks, Yellen Degenerate. What makes you believe March OPEX will have any price action? GME's really illiquid. It's kind of the break point on a lot of the VIX shorting. Are mega cap companies good targets for diagonal call spreads? I mean, they can be more stable. Your risk is with index exposure, obviously. Soxel MOASS. That's getting, Soxel's being used really heavily. Looks like some higher highs coming for NVIDIA. No, still lower highs. Well, at least as of right now. Yeah, we're still lower than the high from Monday. Monday's high was for 240, 248. Potentially, NVIDIA could hit 246 for the upside. Well, that's where resistance to the upside is, at least. Although the market maker's not really pricing in a lot of price action above 240. And more calls are being sold in the upper range. So Gamma Max is like coming down a little bit. Are people actually buying Meta? I have no idea. Meta is also really overvalued right now. I guess Meta's supposedly buying Meta. They announced that buyback, but they also don't have any money, so I'm not sure what they're buying it back with. I mean, if you have Revlon, yeah, you have to make a decision. Do you wait and see if something crazy happens at the meeting? Or do you just get out with what little is left? It's not really that tough of a decision. I mean, I've already, like, almost literally written off Revlon. I don't give a fuck what happens to it at this point. If something did happen, cool. If it doesn't, I really don't give a shit one way or another. NVIDIA's pushing its high from 2 days ago. It hasn't stayed down over the last 4 days. I exit my NVIDIA puts for a small profit. This looks scary, especially if NVIDIA has an OPEX run. Well, thankfully OPEX comes after SLD, right? Yeah, I don't log into that broker anymore. Do you think Snap is overvalued? I mean, their earnings aren't great, and neither is their market share. But I guess if TikTok gets banned, that's a positive for them. I don't really have any interest in owning the company anytime soon. Ooh, that is interesting, Mr. Gray Pubes. Slim chances we hit 394 tomorrow, or what? Unlikely. I guess we could. We'll see what happens in the overnight session. I don't think anyone's gonna weigh the jobs data that heavily. Probably tomorrow. Some trading just between like fucking 39.80 and 40.20. Tomorrow's data is not as relevant as today's was. Will you be expanding the Pickle social media empire onto Snap? No. Are you trying to get in my DMs? Who are you talking to, Cody? I don't even see the other half of your conversation. Is it because I'm not on live chat? Oh, maybe it is. Nope, I still don't see it. That was a massive amount of profit taking. Was it? Or it was just some profit? I think it was mostly just out of the money puts closing out. Would you believe me if I said I have a secret video footage of you and the quants working on the MATLAB model last night? And I'm happy to DM it to you. I'd love to see it. My son just came in saying ding ding because I say it every day at 4 p.m. Boy can't tell time that well, but he's trying. Well, he's only a few minutes off. Good to know all my comments were not top chat commentary. Yeah, usually I remember to turn it on top chat, but I forgot today. A person was talking earlier about hedge fund stuff, but hasn't said anything in a while. Oh, okay. SVX about to finish up at 0%. Let's fucking go. What a perfect day. I like that the realization of jobs data led to, well, not a lot. I guess the data Friday is more important, but still, I would have expected a little bit more downside. You know, if it was just the JOLTS data, we probably would have gone down harder, and JPOD fucking talked. Everyone just got so fucking bored they went home for the day. I don't care. I made money today. It was pretty fun. Trading the chop when JPOW talks is the best. I would shorten a video till it hits 260. Okay. VIX down. You don't need to use BPS for the VIX. Can we get up to 800 likes in these trying moments? I think everyone just wants to go to bed. If you guys could, and you haven't, please. Fuck you, Chief Queef. I'm sure I don't have to call you all fellow American. Why are you still talking to this person who's not even, like, here, Cody? You've been having, like, an entirely one-sided conversation, and it's blowing my fucking mind. Thanks, dude. If you like it that much, you should click it 4 times. I liked the video because this is America. Okay. Average down to video puts, or is this an unreasonable pump gonna keep going until calls expire? 317. Oh, if you have 317 calls, unless they're close to the money, you might just be fucked anyway. Are you like near the money, or are they way the fuck out of the money? If you're near the money, we have, you know, SLD next week and CPI and PPI data, right? But if you're super far out of the money, I don't know if that'll be sufficient. Gherk, it's International Women's Day. Just for kicks, you should do a poll to see the gender demographics of your stream. I don't need to do that. YouTube already tells me. And it tells me enough to know that doing the poll would be pointless. No, I mean, the calls supporting this round are dated then. Oh, yeah, a lot of them. That's not the only thing supporting the run. Predominantly ducks. Yeah, yeah, believe it or not. Women watch this stream? A few. I'm so far out of the money that someone needs to drop a bomb on TSMC for my puts to print. You know, according to that one congressman, that could happen any day now. Average down May 200p for NVIDIA. At least we know he's also short NVIDIA. May 200p for NVIDIA with this pump, or wait till it hits 250 to retrace down. I don't know why people think it's going to hit 250 right now, but okay. Ah, yes, the elusive third gender, duck. Exactly. Do you think there's any specific time frame or catalyst that'll put stop to the VIX manipulation? Like I said, after OPEX, we could see short vol close out, and then they'll just let the VIX run. Could be the Fed decision. Where is the Latino representation within the stream? There's plenty of it. I don't know the exact demographics. Popcorn Trader's wife has been described as a thick Latina, so that's one. Ding ding. Thank you guys so much for tuning in. What to say about today? Well, VIX went up and then it got shit all over. And the SPX did basically nothing. JPOW said some things that were the same as the things he said yesterday. And we got to watch a lot of Congress people admit live that they don't know what the Fed's role in the government is. NVIDIA bumping up a little bit into the end of the day alongside the indices. GME not performing too badly with its small amount of ETF FTDs. ETF FTDs are a little higher tomorrow, not significantly. Probably much of the same, unless the market drives up very, very hard. Data is light tomorrow, and positioning is fairly neutral at the current strike. I think there's a chance we move up or down. I'm straddled at 39.90 right now. We'll see where that goes. But yeah, there's still some longer dated call interest to the upside and a lot of longer dated put interest to the downside. Low VIX means that we're likely to continue to see put interest build since they are underpriced. That's probably about it for today. Again, especially moving into the days with higher ETF FTDs tomorrow and Friday. Be cautious with selling covered calls that are near or at the money. Your chance of assignment, especially for weeklies, is higher. CSPs might be okay. Although if the market trends down, GME will too. So you really just don't want to be near the money with any sold positions on GME or Upstart right now, unless you desire assignment at these prices. And I think that's about it. Yeah. I'll for the Zillionaires, I'll do a little write up tonight once I have some more data, but that's kind of just the way things look. Probably a fairly boring Thursday. I don't think any of the data tomorrow is going to have huge impacts. And probably a lot of neutral positioning, which could drive us up since the call side is weak. That I guess that's something I should note, is that neutral positioning right now, given the strength of the short side, will probably be balanced with call buying. And that call buying could push prices up and may give them a chance to clear out and reposition those calls around 40-30. So be wary of that upside potential. Puts are still cheap, so they can still be, leveraged with theta. That's about it. Thank you guys so much for tuning in, and I will see you tomorrow morning, whenever the fuck I feel like waking up. Have a good night, guys.
It's yours?
No,
My mother said she found it in your closet.
I don't know. One of the guys must
Must have what?
Look, Dad, it's
Where
not.
did you get it?
Dad,
Answer me. Who taught